know we can you feel it? We got some things to talk about. Pre-market, it's early, but not too early. Come on, wake up now. Pour that coffee down your throat hole. It's hot. Now you got a hole in your throat. Oh no, just call your boss. Take the crust from out your eyes. So tasty, not a coffee.
Good morning, you knuckleheads. Happy Monday to you both, and welcome to the show. Ryan, how are you?
I'm doing well, Tony. Thanks for having me.
We solved all of life's problems 3 minutes before the show started. Vanetta, how are you this morning? Did you have a happy Mother's Day?
I did. I don't know that I've ever done the show with you, Ryan.
My first time, guys.
Yeah.
Well,
I mean, I've been on
time.
Tasty
It's a
Live.
long time coming.
Yeah.
Long time coming.
Appreciate you having me.
You're on the show all the time,
Yeah.
just about every other day or so doing the crypto. But yeah, it's great having you, man. To fill in for Nick, be back on Wednesday. So thank you so very much. I know I asked you how your Mother's Day was, but I'm going to switch gears. I just remembered it's probably your first Mother's or second Mother's Day with
First.
Official, I think, outside the womb.
with your little guy,
Yeah,
right?
first one. So I had to put forth an effort, a little bit of an effort.
Don't forget a card. I forgot a card once. Like I bought the present, but forgot the card. Like, cards aren't that big of a deal for me. First of all, as Vanetta knows, I'm not the most eloquent writer.
I don't know what you want from me. I don't know what sort of performative assurance that you want from me.
The ding, ding, ding was enough. The ding, ding, ding was
okay.
enough. So I don't, cards aren't that, but don't forget the cards, at least not in my house.
Yeah, the card's important, and more important than you would maybe think.
Yeah.
Did the card, did the flower.
How would you rate? You don't have to disclose like what you gave your beautiful wife, but how would you rate your effort as your first Mother's Day on a scale of 1 to 10?
Did you make your boy proud?
I would give myself a 7.5.
Okay.
I think, there's always some room for improvement.
Always, and then see, you get extra points for recognizing that.
Yeah, I'm self-aware.
Okay, good.
We're going to do a photo shoot. So I thought that was special. So
that's
got
wonderful.
that scheduled. It's better than me and my iPhone. That'll be fun. So that's what we're going to do.
That's real fun.
Yeah.
Yeah, you got to keep that's good memories. Good for you. Very, very nice.
How about you guys?
My mom and dad came to town, so it was great. We went to a very, very nice.
You have to clean
dinner.
the house or anything like that?
I spent all Friday
Yeah.
because like my place is clean, but it's not like mom clean.
Yeah, sure.
Yeah,
I get it.
But no, my parents came.
Mental clean.
Right, my
What you're
parents
looking
came,
for.
and it was great. We took my mom out to breakfast yesterday too, so
Great.
it's just so nice. Like
Nice.
I get tickled by the amount that everyone does for Mother's Day just in comparison to Father's Day.
Oh my God, yeah. The tie or the symbolic tie that we get and get to take you out to dinner again, that kind of thing.
It was just really funny. But everywhere my mom went, she got treated like a queen. They're like, "Happy Mother's Day." She got flowers at breakfast and from the staff, and it's just really funny.
Should be doing that every day, but yeah.
It should be doing that every
we
day.
as a society.
The hardest job being a mom. How about you, Bat? How would you rate your performance?
Well, no, I did Mother's Day. Mother's Day, I did well. I've learned from years ago. I forgot the card. Now I just go overboard and everything is fine. So I'm good there. But I've learned now. I'm new at being a grandfather. I'm 2 years plus into it.
Being a no-no.
What's that?
Being a no-no.
Being a no-no. Yeah, that's what they call me. But the little guy is just now like talking a lot. He's a little over 2. He's talking a lot, and he's doing things that if it was my child, I would say no, you can't do that. But I've learned that as a grandparent, you don't have to discipline them. Well,
you don't discipline your own son, to be fair. So
You just get to watch.
You get to watch. You get to so he's running around the restaurant. I
hate that.
I know. I didn't say that. He wasn't really running
I hate
around,
that so much.
More than I would have.
I'm always like, whose baby is this? I'm like, somebody come get your child.
Yeah, it's true. So I just go right ahead. Yeah. You want to put your hand in the fountain? Yeah, go right ahead.
Oh, no.
You want to splash around? All right, I'm not gonna tell you no. You know what I mean? That kind of thing. So it's been a good experience. I've learned to like water on a duck's back.
Let go, let God, I guess. Yeah. Okay.
So it was good. It was very nice.
Did you go out for brunch or did you do dinner?
I'm not a brunch guy.
Okay.
I can't mix the eggs with the roast beef or the eggs with I just get a plate of food that nothing matches and then I don't want any of it kind of thing.
Yeah, but I'm sure that. But does your wife like brunch because it was Mother's Day?
I didn't ask her.
Because it was Mother's Day.
So we went out at like 4:00 and just a regular menu, not a not a set brunch thing. But it was fun. Yeah, it was good. It was very, very nice. And Sasha, her daughter, gave us the 2 grandkids. She was there, which was fun. So everything was great. It was good. It was a good Mother's Day. I mean, weather was good. Food was all right. Everything was nice. No complaints.
It's good.
No nice. Yeah, it was good.
All right.
The squirrel is back.
I don't. Okay.
The squirrel from our squirrel house for Mother's
You explain
Day.
this to Ryan.
I
He doesn't know
about the squirrel house.
Yeah, so I have my wife, one of the things she wanted, not really for Mother's Day, but she wanted was she's like an animal lover, which I am not. But she's got so I bought a squirrel house.
Okay, like a birdhouse, but for squirrels.
Exactly.
Got it. Okay.
But this one has a camera in it and a solar panel, so you can see inside
This
it.
is a nice one.
It's a nice one. Yeah. It's a nice one. It's a nice one. But a raccoon about 2 weeks ago stuck its arm in there. Couldn't get anything, but stuck its arm in there. And she hadn't come back for a little while, but she came back this weekend. So back making her nest again. So
success.
made mom very happy that the mom squirrel is back, although it could be the dad squirrel, not 100% sure.
Yeah. All right.
Yeah.
Were you able to watch like Bitcoin at all, or did you have to sort of decouple from that because it was Mother's Day last week?
I had to take a breather. I wasn't allowed to bring my computer, unfortunately, to the restaurant. But you can bet I'm looking at it now.
What is it doing, and how are you? Are we going to have like a hot crypto summer?
There's some early signs. I mean, if you look at Bitcoin right now, it's up a little bit, it's down a little bit over 1% from where it was. But we've traded up close to 83 over the last week or so.
Okay.
This week.
But it's up from Friday, right?
Yeah,
I mean,
this
it's up like
weekend,
$1,000 or so from Friday. Yeah.
I think every weekend that you go where there isn't a report of the end of the ceasefire in Iran, you can kind of inch higher. And I think the market's going to do that until we eventually get the end of the ceasefire.
Okay.
Oh, you really think it's war related, this rally a little bit in Bitcoin as a safe haven?
No, I just think the whole market is just kind of continue to
Buy the rumor, sell the
stair-step
news kind of
higher
thing.
until anything does happen. It's like, okay, we're holding our breath every weekend.
Sure.
We know that for the most part, it seems the theme has been that the war does not really resume on the weekday.
Yeah.
We want to make sure that with the markets open, there's not too much volatility. And then you kind of wait for the weekend. Nothing's happened. Great. Sunday, I know we opened a little bit lower, but
Yeah.
crazy.
Open near the lows pretty much. I mean, you're down 8 right now, but.
Were you able to check your phone last night, or you had to like put it away at dinner too? Because you were at dinner when the market opened, when futures opened.
I missed the opening because I was busy at dinner, but I caught it like about 5:15 or something like that.
Okay.
Usually I'm on before the opening starts.
Yeah.
In front of my computer kind of thing.
That's so funny.
That was about 15 minutes. Mom got 15, 20 minutes, so extra time.
Here you go, 15 minutes of
She
my
was
undivided
delighted.
attention.
She was delighted, yes.
Okay.
Yeah, she was absolutely delighted. Yes, that was good.
That's too
That was it.
funny.
Yeah.
Well, we thank you, Mr. Ryan Grace, for being in the hot seat with us this morning. We have a great show for you today on this magnificent Monday at the top of the 8 o'clock hour here at Tasty Live. We have a little research corner. Kai presents his outlook for the market for the week. I think there's like CPI that is this week. Some more interesting earnings that will be coming out, but Kai is going to give his outlook for the whole week at around 8 o'clock. Then at 8:40, Dr. Jim in the house, the skinny on options abstract application. Are options just a zero-sum game?
Which we'll figure out. But you are right, getting back to your news, you got like CPI and producer price index coming out. I know the macro guys are real jobless claims.
Sure.
I know the macro guys are really excited about this. Volatility at 19, since you mentioned it just for a second. This is the area, 19 on / VX. I think VIX is sitting right around 18. Well, it was 18 and change. This is right kind of where we go under 19 on vol, and it's like summer of 2024 where we went down into the low teens, 12, 13, 14.
Wasn't that great?
Volatility. I don't know if we want that for selling premium, but we'll see. We'll see.
We'll see. Then 9 o'clock, we have a market measures. Kai back in the house, the general. He has a 0 DTE breakdown. Looking
It's short put spreads.
20 delta put spreads. That's what he's
it's
looking
short
at.
put spreads. We'll discuss it. It's easy topic, but he goes deep into it, so it'll be fun.
Brian, do you do a lot of 0 DTE stuff?
I don't do any 0 DTEs.
Oh, you're missing out, dude.
I've got to get into this, so I'm excited for guys' research here.
Okay, yeah.
You do.
Some questions of my own.
Then at around that 9:20 time frame, we have live from the trade desk, Quentin in the house. You're familiar with this time slot. Sometimes you were a guest on this time slot, but it's going to be Quentin and Glenn because you were here. That's how that works. We only have 3 people. Sometimes we call in Marty, but that's it. But Quentin's going to be in counting down the top trending tickers at Tasty Trade and Glenn on the FX side of things. So
Very good.
great, hooray! But hey, let's get this show on the road. Would you like your daily dose?
Sure. This is where you say sure.
Sure.
Hit me with my theme music. Let's go.
Our leading story, breaking news, coming across the wire. Leading story, top story, just in.
Today's headline.
This just in.
Breaking news.
All right, everybody. Today is a magnificent Monday. It's May the 11th. This is the part of the show we like to call the Daily Dose, where we talk about today's financial news and headlines. My name is Vanetta. Are you ready for the news?
Ready for the news?
I'm ready for the news.
Yeah. Earnings, Mr. Bat.
Really none. Mosaic, I guess, if you want to look at that, but it kind of dries up right now.
Okay.
Today's going to be about the chip stocks. Intel is back up.
Okay.
AMD is.
Are you going to let me just do my job?
Oh, I'm sorry. I didn't know
It's
if
like,
you were going there.
you trying to front run my
I apologize.
I have it. I got it.
Spoiler alert.
I got you, girl. Well, the headline over the weekend, U.S. stock futures fell and oil surges as Trump calls Iran's latest offer to end the war totally unacceptable. I don't like it. I've just read the response from Iran's so-called representatives, and I don't like it. Totally unacceptable. All caps, exclamation point. Where do we go from here? And is the nacho trade a real thing? Because that's getting traction. I saw so many headlines about that. It stands for no actual chance Hormuz opens. But it's looking it's pretty good. But it's looking at short dated like treasuries, like looking at inflation, gold, and also oil.
You got a lot in there. Gold really hasn't rallied relative to oil or the market if you're looking at that correlation. But oil itself was bid all night long. It opened higher and it stayed higher all day long. Matter of fact, Nick and I were talking about the curve in forward/CL, the front month futures versus the back month futures. And some of those back month futures were in the low 70s. They're flirting with 80 now, even 80, 150 days out or so. So
that sucks.
That curve, yes, it does. The curve is staying the same, higher in the front, lower in the back, but it's all moved up. So I don't know. Oil seems to be subject to change, very news driven. I hate those kind of markets where it's not like kind of natural buyers and sellers and demand, supply and demand kind of thing.
How have you been weathering things, Ryan?
Well, with oil specifically, I've been trading the volatility in there and selling vol, but it's come down to a level where I've talked about this previously. I don't know how much lower it's going to go in the short term, right? You've come off of, let's say, about 100, a little bit over 100 at the point in time, all the way down to 70 or so.
That's where it is, 72 right now, and it really is on the low end of the range. I mean, it's back to March volatility, really kind of just as this was just starting, like we were talking about, maybe we're going to go there and do something kind of thing. This is the way volatility was. I'm surprised it hasn't spiked more with oil flirting with 198 and change.
Yeah,
traded up to 100 already.
As well. I mean, there's been just so much back and forth with headlines, and you can get oil up $4 or $5, and then immediately the next day it's down by the same amount. I think what people have to focus on is that while all of this is going on, as of right now, you don't necessarily have a shortage. You have a deficit. But if you play this out over the next month or so, you're absolutely going to have a shortage in some products in some regions. And eventually that's going to make its way to the U.S. And I think the market will, if this is still ongoing at that time, wake up to it and you're going to get more volatility. Why it hasn't, oil is priced in the marginal barrel. And there's also, the view that maybe out of China and their massive, massive reserves, some of that's making its way to the market, though that's very opaque.
That's interesting.
What do you 2026? Think this ends in 2026 or it goes to 2027?
I think it ends in 2026. I hope so.
Yeah, of course. All humanity hopes so. would have to think. I when this first started, I think much like COVID, or at least I felt it was going to be a weekend war.
Yeah.
You know what I mean?
Sure.
And like,
2 weeks.
In 2 weeks, this is going to be all over. A month, at the most. And now I'm asking the question: do you think it ends in 2026? I actually don't think it ends in 2026.
Well, I'm looking at Polymarket right now, Tony, and U.S.
You're going to go with numbers. Can I just
with
give you
the
my
data.
opinion?
You can.
But go ahead.
This could change.
Sure.
Of course, right now it's at 68% that you get a permanent peace deal by December 31st, 40% by June 30th. That said, I mean, look, the math is what it is. If the Strait of Hormuz does not open by, let's say, the end of June, early July, you're going to see much higher oil prices.
All right, so I didn't know that from Polymarket, which is just really aggregating a bigger people's opinion that are putting some dollars at work than just my own opinion. But 60-40, not bad. I mean, it's not like it wasn't an outrageous thing to say, because it sounded outrageous when it came out of my mouth.
I think it's entirely possible that this escalates to de-escalate, and you're right that we're well past 26.
Shifting gears to foreign currency markets, South Korea's Kospi hits fresh record highs as Asian markets trade mixed amid oil surge and, again, risks in Iran. U.S. dollar also kind of firm last night. Let's just talk about the currencies. EWY, I know Nikki's been trading that. You talk about the yen, the euro, the dollar, the pound.
Yeah, euro pound been holding kind of steady. I mean, the yen's been holding kind of steady too, at 60, just under 64 now. All of those currencies are down, so the dollar's a little bit firmer as you mentioned. But it's been sitting in the same range for the last week and a half or so. So currency's not my biggest forte, but if you want to talk about bonds for a minute, they're back to 113.06, 113-ish and change. Those bonds got up over 114 for about 2-3 days there last week, come back down to 113. This is where they've been sitting forever. So bonds catch a little bit of a bid, they catch a little bit of a sell-off. They've been hanging out between 112 and 114, and here we are 113 again. I don't know, bond volatility at 11, getting a little low, in my opinion.
How about you, Ryan?
Yeah, I think you're going to see rates continue to climb higher here in the short term. You look at the CPI number, you have some of the PCE or the PPI data that you're going to get, the inflation data that you're going to get here. You look at the oil price as an input to that. I just think, growth has been generally okay for the U.S. I think
unemployment numbers came in great, right?
Yeah.
If you're looking at that macro view.
If you look at what's the market pricing in, well, we go to the FedWatch tool and you look at Fed funds and the implied probabilities of a rate cut. You're just not seeing that much anymore. And there's even whispers. I don't think you're going to see this, but whispers of a rate hike. And so we shall see, I suppose. But I think the environment you're in right now is one where the dollar has been a little bit weaker. On the other side of that, for whatever reason, and you don't always see this, but you've got higher rates. And I think you have an opportunity with currencies. I'd look to buy the pound. I'd look to buy the euro on dips.
Yeah. Do you have greater currency concerns about like the dollar losing its global status as the? Because I read more headlines about it over the weekend, and I was just like, "Where's this coming from?"
More headlines, headline grabbing kind of BS. I agree with you 100%.
Yeah, absolutely.
You came out with that like real quickly,
Right. I mean, everybody's in the same situation from a fiat currency perspective, right? Everyone is over, at least in the developed world, everyone is over indebted. But all of the debt is in dollars. It's dollar denominated. We're in a very privileged position, of course, as the U.S., where we can inflate away some of that obligation. So it hurts consumers, of course, and their purchasing power. But I would ask this question: what replaces the dollar? And I know that the surface answer is, it's a basket of currencies and the IMF is in charge. But what replaces the dollar in the sense that who has the deepest bond market and economy to be able to then be the reserve?
Right.
I think the only way that the U.S. dollar is no longer reserve currency is the United States loses a hot war.
Okay.
And, I don't think that's going to happen anytime soon.
In other news, I had no idea this was even on the table, but the first prediction market ETFs were supposed to launch as early as this week, but the SEC delayed approval. It's a situation evoking memories over the long battle for the spot Bitcoin ETFs. Prediction market ETFs from Roundhill Investment, Bitwise, and Granite Shares were set to become effective under the SEC's 75-day rule. Were you guys aware of this? And what are we doing?
I knew the 5-second rule. I never heard of the 75-day rule.
75-day rule, yeah. I don't
about
know.
that one.
Did you know there were going to be prediction market ETFs?
No, I have a lot of questions. What are, if you have the answers, what are prediction market ETFs? Are these just, it's like a hedge fund?
So they wanted to launch funds tied to prediction markets covering elections, economic data, and other real world events. That's all it said. So I guess it's, I was like, I have further questions. I was like, who's clearing this? Who's regulating this? Like, what are the markets?
Even why they would be thinking that this was something that could be done.
Right.
It could be the.
Well, but they were like, yeah, they were really, really close to getting the green light for this week. And I just, again, I was like,
really,
what?
really close. I was really, really close to a lot of things too, but really close.
But they say we recognize that innovative ETF products often require additional review, particularly around liquidity. Yeah.
Have we gone too far?
I mean, no, I don't think so. I mean, you're always looking to press the envelope, right? To try to find something, especially if you're building a business, right? I mean, I don't know who is trying to do this. I don't think it's JP Morgan.
No, but yeah, no.
I mean, they're trying to build a business, trying to find a niche. I don't blame them. A little far-fetched.
Ryan, I pulled this for you. U.S. senators are set to consider long-awaited legislation that would create a regulatory framework for cryptocurrency this week, potentially ending a deadlock over the bill that pitted crypto companies against U.S. banks. The bill, dubbed the Clarity Act, if signed into law, clarify financial regulators' jurisdiction over the burgeoning sector. Odds. This happens this week.
I think the odds are decent. I mean, last I checked, it was about 50-50, but it seems like over the last couple of weeks since I checked, there's been some progress. You have some agreement on how stablecoin yields or rewards will be handled here.
Which hit circle higher last week.
Yeah, which everybody seems to be on the same page. The key here is with the U.S. government, you have a window that is quickly closing before you get to the summer recess, and then everybody focuses on.
Oh, no, not summer recess. What are they, in grade school?
They don't work at all.
It doesn't seem like it's in session all that often. That said, yeah, we need to get something done here. I would say the target date is probably Memorial Day.
Okay.
The probabilities are going to slip. So if it's this week, excellent. The big thing for me, and in terms of what I take away from this, is really the custody rules for banks. Banks are going to be able to participate in the crypto industry like never before. That's going to bring in more capital, bring in more users, bring in more use cases, and I think it's clearly a positive. The question, though, is then again, how much of this has already been priced in?
Yeah, that's what I was going to ask you. I was like, how does Bitcoin price things in?
I think it is largely priced in. I wouldn't, of course, you could see a little bit more upside. What I don't believe is priced in at all is a failure to pass this.
Okay.
Which I don't think is a high probability, but that's where the asymmetry would be, is embedding, how much downside is there if this doesn't pass? There might be limited upside, but I think you have a lot of downside.
What underlyings are you trading right now tied to the crypto Bitcoin space?
Mostly just Bitcoin. As we've talked about on the show, when you look at relative performance here, it's been Bitcoin over everything. I say that, but this weekend, everything else caught a bid.
Okay.
So, as soon as I say that, then just jump into the other tokens. But you're seeing a little bit better price action in Solana, in Sui, in some of the... Yeah. ETH is
reminds me of what was the movie with Burt Reynolds in the river? What is it?
Oh, Cannonball Run?
No. Burt Reynolds in the river. Sweet. Josh will know.
I know what you're talking about.
Come on, Josh.
With the banjos.
Yes, with the band.
Yes.
Yes.
What did you ask?
What? Pay attention. Pay attention, darn it. Burt Reynolds in the movie with the river, and they go, Sweet.
Oh my.
I know what
I
you're
don't
talking
know.
about. Hold on.
They
Deliverance.
Deliverance. There you go.
Deliverance.
Come on.
Yes.
Get a ball. Get a mitt.
I got you, girl.
Thank you. Deliverance.
So Sui, yes. So Ethereum.
Yeah, so you're
Sui.
seeing a lot of the...
And Deliverance. My buddies are writing in now.
Yeah.
Delay.
I got
Thank you.
You've seen a lot of the alts are catching a bid here, a bit of a pop. I mean, in some cases, and this is just what these smaller market cap tokens do, go up 20% when they do catch a bid.
Is there any juice in Coinbase post earnings?
I think.
I mean, yeah. I mean, it closed at 201. It's going to open closer to 200 this morning. It's been going kind of sideways. It's got good IV rank of 53. It's
Still?
Yes.
Wow,
yeah,
okay.
It's not my most favorite thing to trade, But June with 38 days puts you right in that realm of when
I might have done did something.
you might have done did something for option trades today. Markets could be about 50 to 60 cents wide. Sometimes you get a little bit wide, but if you have a directional opinion there, I like it. That I like for premium selling. The rest of the market getting a little bit.
Well, we will keep an eye on crypto, and then obviously if this does pass this week, then that would be good for Coinbase. So,
Yeah, absolutely. It'll help those few publicly traded companies as well. And I think, like I said before, it opens the door for banks to participate.
In other news, late on Friday, Intel announced they'd reached a preliminary deal to make some chips for Apple devices. That's according to the Wall Street Journal. In a potential boost to Intel's contract manufacturing business, Intel putting a banner year together, much like the Cubs. Intel just stacking wins upon wins. Intel used to make Apple's chips, and then Apple started making its own silicon with their M1, M2, M3, M4, and M5 chips. But now they're going to bring Intel maybe back into the fold. What are you doing in these two tech juggernauts?
Yeah, Intel's having a year like the Cubs, as you mentioned, not like the Sabres last night, but I just figured I'd throw that out there for my Buffalo fan
I turned it off.
over there. Intel, 130, up around $5 or $6 this morning. A new, as you say, new high. I don't know. I was thinking about this whole AI thing, because this is really, I think, what this all comes down to is, chips, AI, money being thrown everywhere. I don't think it fails now when money's still flowing. I don't think it's the product that fails. I don't think it's the use that fails. I think it's when the money starts drying up.
Yeah.
It may be until they pawn this off on the public and you get these 10 or 15 stocks that are all high valuated, and they kind of sort themselves out to the 2 or 3 that are the leaders, and everything else languishes. I think that's when maybe AI bubble kind of bursts a little, but I don't think it bursts anytime soon.
No, as long as they can continue to spray it down with the money hose. Tony, I mean, you look at the percentage of CapEx coming out of the hyperscalers that's going into all of this. It's like 30%. It's just absolutely insane. It's going to continue, though, as long as they spend money.
Yeah.
And it seems like...
But slowly, though, people are starting to feel the impacts, and it's affecting their quality of lives and things. As the data centers get bigger and bigger, and they encroach on more and more communities, and they start approving things without the votes of people in those municipalities, then I think there's going to be a massive tipping point where something's got to give, because if you have one of these in your backyard, you're not having a good time right now. Meanwhile, the rest of us are just like, oh, what do I look like as an astronaut? Like,
well, everybody wants it until it's in their backyard. It's like the prison from the 1930s.
Yeah.
I mean, the story changes, but it remains the same.
Yeah, these two things move at entirely different speeds, though, right? When you think about eventually, yes, there will be some regulation. How much farther ahead and how much will have been done already before we get there? I mean, we just had a slide about regulating the cryptocurrency market.
Yeah, Finally. But I think it'll be too late to put that genie back in the box. Just bonkers news. Micron surged 38%. Not for the year, not for the month, for the week. For the week, last week, Micron was up 38%. It had its best week since 2008's Great Recession. Shares have gained 80% in the past month, and the stock's market cap is above $840 billion.
Yeah, I met my friend Tom this weekend. This is his biggest short.
Love that for him.
It's flirting with let's just say it's flirting with 800 this morning. It's 780, up another $40 or so. I think he shorted around 550 or so. So you too can be thankful he's no longer here right now. That being said, MU Ivy rank of close to 100. If you're doing something in there, you can't be naked. It's just silly to do anything, because it's in La La Land right now. And also, we have Rigetti after the close tomorrow.
Rigetti.
Yeah, before I should mention that too. RGTI, more $20 stock, but maybe something more tradable than MU.
Ryan, how are you treating the chips and the semis, and is it ripping your face off?
No, I've been watching from the sidelines in terms of the move in Micron, the move in Intel. I think if you're going to look to short these, you probably want to do it like Tony mentioned with defined risk, or volatility is higher at times.
It's a vertical spread, if anything. This is not where you sell premium to make money. Matter of fact, you can't sell premium in here to make money
Right,
because you'll
'cause it's
eat
so
like a
juicy.
bird,
Yeah.
and poop like an elephant. But you can take a directional shot in here, whether it be with a diagonal spread or a vertical spread, or I like the diagonal spread because it has more convexity to it. But I mean, you certainly can do something in here. You just can't have undefined risk. It's just silly at this point, even with the high implied volatility.
Yeah, there really isn't much premium either. I mean, implied vol, if the IV index is 91, I've got a realized vol of about 91 as well.
There's no edge there, you're saying, yeah.
Exactly.
Yeah.
Anything to be done in SMH, which is kind of the big matzo ball of all the.
Yeah, so SMH, I have a position in, I put on a $10 wide. That's the way I would play it. Like if you really want to, participate in there, board trade, angry trade, I put on a SMH $10 wide iron condor, and I've been rolling up the put side into any kind of downturn movement in the market. I think I'm out about 50 or 60 cents. I've had on about a week and a half or so, but it's a death trade. I won't do that anymore. SMH up $2, by the way, 668.
Yeah, I've got some put spreads on in there, and same thing, trying to define the risk, but I need it to move another 100 points to the downside, and that's
Good luck with that.
Markets aren't great in SMH either. Again,
Okay.
Yeah.
That's good warning. Speaking of the money hose that you mentioned, Ryan, Anthropic has signed a $1.8 billion computing deal with cloud services provider Akamai. Remember Akamai, you guys?
Sure.
They're gonna, of course, make the partnership to meet surging demand for its AI software. What can you do in Akamai? I literally forgot this was a company.
I haven't traded it in forever. I can't even. AKAM is the acronym here. This was a $120 stock last week. It's $147
Seems about right.
right now. Yeah, you're not kidding. Matter of fact, middle of April, it was a $90 stock. So it's gone
Love
from
that for
90
them.
to 140, almost 150, with very little downside movement. IV rank of 52 is pretty good. When you go take a look at the markets in here, they're about 50, 60 cents wide. Another one where I think you'd have to have some sort of defined-ish risk.
When
trade.
will they have earnings?
I don't have it on here, but
Okay.
I can.
They might have had them already. Like I literally forgot that they existed.
earnings were on Thursday.
Okay, perfect.
Yeah.
Okay, so then it's just
Reported revenue of
August 6th will be the next one.
okay. Good.
So August volatility it's a good thing you mentioned. August volatility is 60. June volatility is 55. There's no July options yet.
Oh, okay.
So I don't think you could put on anything calendarized in here, diagonal or calendarized, because you got 5 vol point differential with August, the one that you're buying, being the higher vol, and June being the lower vol. So if you're going to do anything in here, I think you have to stay in June until you get July options, which probably will come this week, if not before Monday, maybe Thursday or Friday of this week, possibly, because May expiration is here. I mean, it's 4 days away.
That's good info.
Yep.
In other tech news, Alibaba is preparing to unveil the integration of its AI platform Quinn and online marketplace Taobao, a move that seeks to drive shopping with conversations rather than keyword searches. So it's their agenetic shopping AI bot, whatever. What are you doing in Baba?
Have you bought anything from Alibaba, Temu, or anything like that from recent?
I have not, but I've got a quick one for you. I'm a little worried I maybe inadvertently have purchased something from Temu off of eBay. I bought a golf club, a putter,
Okay.
and it's arriving today, so I'll know for sure. But after purchasing it, and I didn't get
They got you on a little bait and switch kind of technicality.
it
It
wasn't
says
like
Scotty Cameroon.
so it was a little bit cheaper, but it wasn't like, oh, here, you can get the Scotty Cameron for
Right, one's $300, this one's $30.
Exactly.
Yeah.
It wasn't like that. But then I started to do a little bit more research. And I was like, oh my God, the fakes that they make are, I mean, they're not even fakes, they're just replicas. It's coming from the
Same factory. Yep.
And, you see a lot of that, of course. So maybe I might have purchased something from.
TBD. Update TBD.
Well, Bob is sitting at 140. That's where it closed, actually down $3. One of the first stocks with the market basically unchanged that I've mentioned that's lower this morning. It's trading 137 change. I don't like trading these Chinese stocks. I haven't liked it for years. I've stayed away from them personally.
In news that I literally forgot about, the last Tesla Model S's and taxes have rolled off the Tesla assembly line. During a January earnings call, Musk did declare that production of the Model S and X, the higher end of Tesla's line, were coming to an end. And the ramp down of its high-end models has now completed. Tesla is right now the only thing that you could trade, but SpaceX is gearing up to be the largest IPO of all time. Are you worried about Tesla's status as a car company?
I don't know. I don't own a Tesla. I tried to convince Vinny to get a Tesla instead of the Porsche.
Sure.
It was a better purchase there, but I haven't been able to because he's a label whore. But Tesla down $5 to $423 instead of $428 where it closed. So it's down $5 this morning. It's caught itself a nice bid the last 2 weeks or so. Ivy rank was relatively low in there. I don't know if you looked at it. It was like 9, 10, 11.
Oh.
It's edged up to around 19.
Okay.
I kind of missed this up move in Tesla. Stop it being a car company.
Well, because they're going to go to like the robo-taxis and then the robots. So that's going to be Tesla and then
Wasn't
space.
that always
I think the plan.
the theme? Yeah.
Where's the Roadster? Like, where's the, like, I thought they were supposed to, where's the $30,000?
Well, you saw when the Cybertruck came out. Do you really want to see the Roadster?
Where's like the $30,000 EV? Like,
Yeah,
you see what's coming out of
anomaly.
China that BYD is doing in terms of functionality and affordability. Like, you are gonna choke. You are gonna get but it's never gonna be available to us.
Maybe not in our lifetime, but that's going to come when the infrastructure can support almost everybody getting an electric vehicle.
Yeah.
And that might be decades away, the way we move.
Yeah, it simply doesn't exist in the United States today, right? I mean, think about here in Chicago, everyone parks on the street.
Yeah.
There's no way to charge your vehicle on the street.
Yeah.
Sure.
And the Chinese angle, like, they're well ahead of us. I mean, I just read an article this weekend. They burn more coal than the rest of the world combined. So maybe they are on the forefront of this electric thing, but they are far from doing anything more than what we're doing that I can see.
Their manufacturing quality has certainly increased over the
For sure.
Yeah.
For sure.
but the capacity to flood other markets elsewhere will probably prevent that. But I go back to does anybody care if they aren't making cars as long? Because if you look at their multiples previously, a few years ago, and the argument was, look how overvalued this automaker is versus PE on Ford, if you look at that.
Sure, that's true.
And the argument was, well, it's not a car company, it's a tech company.
That's true.
Yeah, right.
So then you can't get mad at them for leaning more into tech then, I guess.
I mean, I think it's synonymous with each other. Because the cars are so technically, I mean, they're not just they're obviously not a combustion engine, but I mean, they're not, the regulator and the fuel pump. Now it's just one big computer. I know you still have those things, but
sure. And they were the first to pioneer like over the air updates like for your car and like which I think is cool. Like anytime you don't have to go to your dealership to have something done, like
it's kind of like the phone that you carry around. When I carried around a phone, when they first came out, a portable phone.
Sure, well, it weighed 5 pounds.
Yeah, but it was a phone. I mean, that's all it did. It didn't do anything else. It couldn't find you. It didn't ping you. It didn't.
Yeah, well, that was great for your first marriage. Anyway, Lime.
Yeah, you're right.
Lime.
It may have saved my second marriage.
Lime, which operates as an electric bike and scooter network and is backed by Uber, reported a jump in yearly revenue. And the San Francisco-based startup has now filed for an IPO. Activity in the U.S. IPO market has rebounded after a slowdown earlier in the year. Are you all aboard a Lime IPO?
No, they're pouring it off on the publics. Run, don't walk.
I mean, these things are everywhere.
Yeah. Uber, you can't trade Lime around $76, maybe up a couple of pennies this morning, but it's down from, last year's highs of around 100 or so, about 75. So if you're trying to go on a value play here, maybe Uber is something there. Markets are okay in Uber. I always kind of forget how good they really are. They're about 5-6 cents wide. Not bad in Uber, but I haven't done anything. Ivy rank at 32.
I was remiss. I didn't know that this happened on Friday, so I'm just mentioning it, but it's already happened, so it is technically old news, but just be careful if you're trading it. Carvana split. They did a 5-for-1 stock split, and that was effective on Friday. So. Yeah,
Carvana, CVNA, now $77, as you pointed out. I've truthfully, I didn't know this.
So again, I didn't know either. I was like, oh, I should have probably been on top of this for Friday. My bad. But now I'm telling you
Thank you for bringing it to our attention. Kind of like a take under-ish now that I look at it. Last 2 weeks have been around the same price it is right now. Now, it had rallied the prior month from April lows of around $60 after this split to about 77 where it sits right now. So maybe a little buy the rumor, sell the news here on Carvana. We'll see. It's always one of the bigger movers. $77 is a decent sized price for people now to get involved in something that has a relatively high implied volatility in the 60s for a $70 stock, $80 stock. Pretty good. So maybe Carvana will become a better trading vehicle for us. So you might have did something 2 times.
Yeah, I think seems like in these markets, and maybe Tesla was the poster boy for this a while ago. But the stock split, that's a bullish catalyst. It's cheaper now, of course.
Right.
You have to buy it. It's only going to go up.
Right.
Yeah.
Right.
Gotta get in there right.
Get in while you can, not when you have to.
This is for you, Ryan. Target is trying to win back busy families from Walmart, and they're starting with the baby aisle. Tell me, as a new dad, you're just flush with disposable income?
I was shocked. You have the Upper baby. I believe that model might be the Vista.
Not you. Oh, not the Vista.
Yeah, I was shocked at what these things cost.
Yeah.
We need to start a stroller business, my friends. The margins have to be fantastic.
Yeah, you're right. Brands like Upper Baby, Stoke, and Bugaboo.
It's plastic, right? And it goes for about $1,200.
Well, they're made with oil.
Stroller?
So, yeah.
Yeah, that's a good point.
I will give you, since I am a new grandparent and I have been, besides Ryan, I'm the only other person who has really held a baby stroller this weekend. They are good. Yeah. They've gotten to the point now where you don't need, we always needed that, the seat for it to pop into at the very least in your car. So you can only be in your car.
Oh, I see. Yeah.
Half of it.
Yeah.
Now these things, you click a button, they collapse and they fit in any car.
When I think about
I could give you my grandkid and you could take them.
When I think about the photos from my childhood and the flammable death trap of a stroller that was my child, how far, do you know, the cheap, it folded like a cheap umbrella, the strollers of my childhood.
They're still the best ones to use, especially on vacation. They're the best ones to use. And I used to sit on the armrest of my father's caddy. So,
God. I'm not sure
who needed a stroller or a seat.
Target is trying to turn around. It's a broader effort to turn around a 3-year sales slump and attract more sales from busy families. You can look at TGT and Walmart, which are normally later in the earnings cycle.
Yeah, May 20th for Target, and WMT has earnings coming May 21st. So you're 100% correct on both of those. Sitting around $125 at the higher end of their range, at least Target is. Tradable vehicle, good IV rank.
Where do you get your baby stuff from, Ryan?
Amazon, typically.
That's what I was going to say. I was like, Target is trying to do all of this, and when they should, no, I'm not trying to make it about me, but they should be focusing on single women to get back into their stores with their disposable, because smart parents are just going to go on Amazon or find the best price.
Well, it's just so convenient too, and it's hard to compete with that convenience because it just shows up at your door the same hour that you push the button.
Yeah,
it really is amazing.
Right? Yeah, some big beefy man just brings it to your house.
Thought I ordered you.
Finally today, Costco is adding a popular item to its food court menu, but the internet is divided. For many shoppers, a trip to Costco is not complete without a stop at the food court to get the chicken bake or the hot dog combo or a slice of their iconic pizza. But now the discount retail club is offering chicken tenders. But one review online says you need a Costco-sized soda to choke these things down. But then other people are saying that they're delicious. It comes with kind of like a cane-style sauce, but now available.
What took them so long? Costco has been the chicken king of the rotisserie big box chicken retail stores.
Yes, the new meal, the chicken tender meal deal, $6.99, which is great.
I think I love it. I think I've seen my son and his friends, if they get to sneak out of school for lunch, because the seniors are allowed to, they're not allowed to, but if they mingle in.
I was like, your son is a sophomore. Okay.
Yes, they mingle in with the seniors. Mm-hmm. They all run to Costco and get food for For lunch,
So
because you
cheap.
don't need a card to go into
To the food court. Yep.
the food court. So a great thing, I think. I don't know. Seems to work.
Those look pretty good.
Yeah.
Yeah.
$6.99. It's not
What's your
$6.99.
Costco
How do
food
you beat
court
that?
item go-to?
hot dog.
Hot dog? I like their smoothies. I like their fruit smoothies.
I like their ice cream.
Yeah, they're good ice
Yeah.
I'm not sure what Costco stock is doing.
I'm not going to eat the
Costco.
food. Costco 108, 1,008. Somebody who owned Costco thought it was down
Yeah.
90% there. No, 1,008. It's been going sideways.
When's Costco going to split?
I thought it was going to split at 1,000. I watched it go down to around 925 or something like that. Had to work myself fight myself out of a paper bag. Doesn't seem like it's happening anytime soon.
Finally, for my video of the day, because I can do what I want. Here's a cat video. Work smarter, not harder. It's the look back.
I was going to say the same thing. It's the look back. It's not the act itself. Yeah.
This isn't AI.
It's not AI. It's not AI. It is a cat account. that I
AI has
follow.
gotten so good. That was
Scary.
phenomenal. I mean, and I have a cat now.
Yes.
I don't have a cat now. My daughter's in town until tomorrow, and then she can leave with her cat. I have a cat in my house now, and it can't do anything like that. The cat I have is not like this cat. But AI, it's gotten good.
Really good. Scary good.
Really good. I am
I
following
get
way
tricked
too AI
sometimes.
bots on
Yeah.
Instagram. They look too good.
Nope.
This is horrible.
What's coming up next?
We're going to take a quick 90-second break and come back. We got more Tasty Live after this. Even the S&P's complacent, down 8?
Maybe.
We'll see. We'll take a quick 90-second break. Thank you, Vanetta. We got more. We got confirm and send. We take a look back at yesterday. We've got option jive, opening bell. We'll be back in 90 seconds with Tasty Live. Got so much.
Investopedia says we're the best for options trading, period. Investors Business Daily raves about us. With stockbrokers.com, we're #1 for options trading and best in class for futures too. The Motley Fool really likes us, and so does Broker Chooser. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move. Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and Tasty Live web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
It feels good to get smart. Get even smarter with the ultimate how-to guide. Learn 31 different option strategies, covered calls, iron condors, jade lizards. Become a trading mastermind. Get the guide at tastylive.com/guide.
First thing about Tasty Trade is how easy it is.
It's a very quick, light platform.
Whether it's a pool, a puddle, or a sea, you can navigate your way out of it with the Tasty platform. So I love that.
Think you know where vol's gonna go? Test your theories with backtesting. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial the DTE, stack the legs, see what survives. Trade what you want, when you want with Tasty Trade.
almost said, Nikki, we're back, because that's what I usually say. Ryan, what am I going to do for you? I got to come up with something.
I would not have been offended, though. Anyway.
Well, you don't know him that well. I know him his entire life, so
Yeah.
he's the fruit of my loins, as they say.
You call me whatever you want. I don't know.
Ryan, we're back, my friend, is all I'm going to say. Let's take a quick look back at yesterday and a little bit of last week. Even the S&Ps are down 12 handles. We open unchanged or lower seems like every night at 5 o'clock there, Sunday being no exception. Matter of fact, Sunday has some of the bigger moves to the downside. Very tight range last night of 30 handles, 73.90 to 74.20, and we're sitting right at 74.07, down 11. But we open a little bit lower, like you missed selling the top just about every night, and then we slowly creep up as we move higher and higher. What do you think about this market and how things behaved last week and going into this week?
Yeah, I mean, that's been the theme where any weakness has caught a bid. As soon as the market opens, you get a little bit of liquidity.
Weakness like what? Like 30 handles on the E-mini S&Ps?
0.3%, yeah, maybe.
Yeah.
I mean, look, I think you still have a setup that's pretty bullish. It does feel like we were just talking about off camera. When you look at some of these chip stocks, it feels maybe it's a little frothy, but there's real money behind that can end at some point. And at some point, you will get a sizable correction in here. But I think that everything right now, aside from if you can ignore the war, everything else lines up where I do think you would be trading this way, if not much higher. You didn't have the war sitting in the background, given the setup that you have right now.
Mm-hmm.
So I'm not surprised, but at the same time, as somebody that's not, I don't have a position on in the S&P right now, would like to add, but just have not seen anything that is meaningful in terms of a correction to be able to feel like, okay, I'm getting in at the bottom of that trading range and maybe we can sell out at the top of it.
Yeah, you actually asked me a question. Is this AI bubble similar to what we had in the .com area? And we did have, your Microsofts and your Intel, which, by the way, Intel, I think now it's well above its 2000, but I think last month it finally got back to where it was in 2000 during the whole .com explosion to the upside. But you had other stocks like pets.com that, they added .com to it, or there was another one called Books A Million, which I was reminding myself of, where, it was basically and I'm exaggerating here, but not by much, a $10 stock, and it went to 500, basically overnight, because they just added .com. They didn't have a .com commerce or anything else like that. It was just like, that was the thing to do. We joke about it on the show sometimes that, when crypto was going crazy, we were going to be, tastytrade.crypto. You know what I mean? Like, anything to get that frothiness and name out there. So I don't think this is the same. I mean, it's never the same, but there are always some similarities to them, especially in hindsight, looking back after you get these moves that we've had, either to the upside or to the eventual stopping or downside or sideways action that we'll get in these markets. But MU up another $35, $40 here. Intel, INTC up another $6 or so. There's no getting in front of this train. I mean, you can with, like we talked about earlier this morning. If you missed it, we'll do it again, like a vertical spread, or what I would prefer is some sort of diagonal spread. Unlike the other stocks that we looked at a moment ago, Intel does have June and July options. You'll see July has an 87 vol, June has a 92, so you're actually taking advantage. You're selling the 92, you're buying the 87. You're going to do it with some delta. We like to get around 20-ish delta. You can get as big as you want, as small as you want, by doing it as bigger diagonal or smaller diagonal. But Intel and the rest of the overall market, I mean, NASDAQ caught itself a bid again. NASDAQ is down 47. When you got volatility at 19, and I actually think it's encouraging that it's staying bid a little bit here, at least for some two-sided action. It's a 1% move in the E-mini S&Ps. So you're probably looking at close to a 74 handle move in the E-mini S&Ps. They're showing 50 and change right now. 74 would be all night long. So you're looking at, you've had a 30-point move already. So this volatility, realized volatility, is actually, Not realized volatility. Realized volatility is higher right now than what we're seeing in the daily movement of volatility. So I don't know. It looks like much of the same here. Like I can't look at this and see that there's anything different. The only thing I can tell you is the Dow has been the weakest of the group. It hasn't made new highs. The Russell has made new highs, but it's just off of that. I think I made it Wednesday or Thursday of last week. NASDAQ closed on or near its highs. The same thing with the E-mini S&Ps. They're all higher. Bonds we talked about real quick, 113.06 back at 113. They've been 114. They've been 112. You said that you think that rates might catch itself a bid in rates, right?
Yeah, that's the way that I've been trading it. I mean, and I'm doing this small. You have that small.
So you're bearish on bonds then, if you think
bearish on the price of bonds. Looking at higher interest rates here short term. Not so much playing the front of the curve, but playing the 10-year yield and doing that through that 10-year future allows you to scale into that a little bit. I just think structurally, you have the setup for higher rates. You have positive economic growth. You've got a little bit of a reacceleration in inflation. You probably see that again into the next month's, it'll be the April number, but when we report CPI. I think that's the setup, at least for now. You've got this kind of just structural supply shortages as well. And you look at the price of oil, it's closer to $100.
Yeah. There's so many people writing into me now that remember Amazon lost, 90% of its value between, 99 and 2001, but at least it survived. I mean, Priceline dropped 98%. William Shatner had he was a multi-gazillionaire and went out basically almost worthless. Other ones are talking about Gadzook, which was another one. It shot up 300% on its first day of trading, only to go bankrupt in 2002. So, I mean, they just added .com to anything, and these I don't know if we have that right now here. And like you said, and I think I said with you, as long as they're throwing the money at this AI, it doesn't go anywhere. When they shut that money hose off, as you called it, which is a nice way of saying it, I think then you get some sort of capitulation.
Yeah, the catalyst will be an earnings call where the CEO of XYZ company mentions that they're going to pull back or that a deal isn't going to continue. And in some of these cases where you have these setups where, okay, we're signing a multi-year contract, but it's contingent on some variables, you could see some of that go away. A lot of excitement in the space right now. I think on the other side of it, you do have to question, will the revenues be there, the consumer use cases be there in the short term? I do believe they'll be there in the long term, but in the short term to justify just the continued CapEx that you're seeing.
Vanetta mentioned Carvana, and it's split to about $78 or so. Looks like it's down a couple of pennies here this morning. It still only has about 700 million shares outstanding, so it's not a big floated stock. This should have some good volatility to it. So we'll see how the options come out priced here. Right now, you've got June sitting at a 65% vol. So we'll see if that changes big or not as the day goes on. Bitcoin getting into your realm, up around $900 or so. I'm just rounding here to 81.2 or so. You can see here that it got up to around a high of 83 and change. It's been as low as around 80 and change. We're sitting right at 81. Let's just call it the middle of the range, middle lower end of its most recent 1 week range. What do you think about Bitcoin here?
Yeah, I think it has I think it has room to move higher. Like, I don't look at it here and think, okay, you've got this set up, this kind of FOMO trade where you're going all the way back to 100,000 anytime soon. But we've shown and talked about the correlations with other areas of the market, with equities specifically. As long as the market continues to trade higher here, as long as the economy holds up, I think Bitcoin likely just trends higher as well. I don't think it explodes higher. We've seen it back at, as you mentioned, closer to 83. It's sold off of there a couple times over the last week or so. But I don't see where there's a ton of downside or a ton of downside risk right now, given the structure of the market. Or if you went back to October, and of course, hindsight's 2020, but you were at all-time highs with massive leverage that was built up, and it didn't take much. I think it was a tweet about possibly, an escalation with the U.S.-China trade war, and that caused all sorts of havoc in the market. You just don't have that set up right now. So I think, you could absolutely see back in the low 70s, and maybe before this is all over, Tony, you take another look at that low, which is at the low 60s. But I don't see something where it's now that it's at 81,000, let's get ready for it to crash to 20 or 30. I think, again, as long as the market continues to trade positively here, the equity market, then you probably have higher Bitcoin prices too.
Very good. Oil, I think I don't know, it's on everybody's lips, but I don't think it's really kind of in the forefront of the market itself. I'm talking about the equity market. $98 or so, traded over 100. It's certainly not having the effect on the market that you would think if I told you that oil was going to be, flirting with $90 and trade $100 in the same calendar week or so, 5-7 days. I think you would say the volatility was a lot higher than 19 and change, flirting with its lows, and that the market would be nowhere near its highs. But keep an eye on oil. I think it has a little bit of an inverse relationship. If oil sells off, I think the market catches a bid. If oil stays bid here, well, so far it's had a muted move to the downside, which I would not have thought would be the call. Gold over 4,700, but it's 4,712. Down around 18. Silver's doing much better, up 4.5%, $3.60 to 84.5. You can see silver's had a good move higher. Corn, wheat, and soybeans are all higher also. Let's get to confirm and send, and then we can get to our option jive right after this. Go ahead. Monday, May 11th. Confirm and send. I said option jive. I apologize. Confirm and send. I'll give you the first one. You ready?
All right.
If I want to use an average of $5,000 in buying power per trade, look at this big shot. But am I better off with a naked strangle or doing a bunch of iron condors?
There's so much more I think we need to know to be able to answer this question. I would start with how much money do you have to start with? And is that 5,000 in buying power? What is that as a percentage of your risk? I personally want to look at each trade as a percentage of my available capital and kind of size things appropriately. That said, I also, if I have the capital, and I'm not worried about, as we've talked about, this gap risk, or sometimes these announcements come out with these AI or chip stock companies, then I'll probably just go with the naked strangle. It gives me a little bit more flexibility to manage it. That said, it depends on the underlying, and it depends on what your ultimately what your view is, because you can define that risk and, as this mentions, just put on a few contracts and get to a similar credit.
Yeah, well said. I think you went through just about everything. Position sizing, maybe 1 to 3% of your account, 5% if you have a smaller account. The $5,000 works for you. I mean, who am I to tell you what your size is? We're just giving you kind of guidelines. But I mean, I can remember, not as a retail investor, but as a market maker, risking basically my whole account every day. So I'm not here to throw shade on anybody else who wants to risk more. But as long as you understand what the risk is, so I think you answered it perfectly. You put in there, which I think in this environment is the right thing to say. I want to know what stock it is too. If it's Apple or Tesla even, or any other stock, but the Intels, the MUs of the world. Sure, you want to put on a strangle, go right ahead. Those other stocks kind of things, you might want to take yourself a little bit of a breather or back yourself up a little bit.
And I think, it also depends.
You could do a wide, so I'm sorry to interrupt you. You could do like a wide call spread, i.e. a Jade Lizard, but I'm not doing it for the width of the strikes. Like usually for a Jade Lizard, you're selling a naked put, so you have more risk to the downside, and you're selling a call spread, $5, $10, $20 wide, and collecting more than the width of the strikes, $20, $10, or $5 wide. You can do something like a $30, $40 wide call spread and a naked put, which is like a synthetic strangle, but you don't have that shot up risk to the upside.
Yep.
I mean, listen, we turn around, you're going to wish that you had it the other way around. But I mean, until then, that's a good way of getting rid of that upside risk.
Yeah, the other thing I tend to look at too, Tony, is the per strike volatility, because a lot of times we'll see very, very high IV rank, very high levels of volatility. And the meme stocks are a great example of this, especially on the call side with the skew in there. But you go in and you look to place an iron condor and you go so far out of the money, but those strikes that are another 50, 100 points up, if they are listed, they're all the same price.
Yeah, basically.
And so in that case, you're probably going to want to go undefined, even though it seems somewhat counterintuitive given the risk in there. But that's how I would think about it as well.
Next question, please. Next one, please. There we go. Your turn.
All right. Question. I'm looking to gain greater diversification by adding crypto to my portfolio. However, I don't really understand the differences between the different crypto products. How do I decide which one makes sense for me?
Yeah, I'm going to answer like a Neanderthal, and then I'm going to let you take it over from there. I just trade Bitcoin and Ethereum, and I haven't traded that much of it. I don't want to consider myself a long-term investor, but I'm a dip buyer. I don't really sell that much of it. I mean, if I buy some, I usually try to sell it higher, get my cost, like my dollar cost averaging at a better price, but I usually don't sell short. And I had an email this weekend, like, when we're going to be able to short crypto. You can short crypto. You've got the Bitcoin futures. So you can trade it as any other product. I'm just a buyer of it. I'm a Neanderthal.
I think that's an excellent answer. I would start with Bitcoin and maybe add a little bit of ETH. The research that we've done around this indicates that, anywhere between 2 to 5% is to the benefit of your portfolio long term, because at least historically, of course, doesn't mean that this is going to repeat, but historically, there's a lot more upside, or there has been a lot more upside in Bitcoin, even though you've had that large downside move at times. 2 to 5%, start with Bitcoin, add a little bit of ETH. I wouldn't get distracted or worry about too much else. It's the same question or same answer if you were saying, hey, I've never really participated in markets before. I want to invest. Should I start with the S&P 500 or should I start trading Carvana?
Yeah, well said. Next one, please. How is expected move calculated on the platform? It's a tough one. I'll grab it for you. Not 100% sure. I mean, like, if you're asking me for the real formula of it, if you really want it, you can email me, bat@tastylive.com. I'll be happy to give it to you. But it really is just a blended rate.
Yeah, it's weighted of straddle, strangle.
Yeah, exactly. It's taken from the option chain themselves. And then every brokerage firm has a little bit of a different formula. That's why you might see, at ABC brokerage firm, you might see an expected move of $5. And on another brokerage firm, you'll see $4.80. Another one, you'll see $5.10. It really is a pretty good range. And it's about as good as you're ever going to get anywhere, because it really is taken in the market itself. So it's just a strangle and straddle combined with each other. We used to do it. Just looking at the straddle itself was kind of the back of the envelope way, and then you can sell the strangle price and add the two together and get whatever you get with was what you thought the market was going to, what the market had priced in. See, that's what expected move is. Expected move is not an absolute thing. It's what the market is pricing in the options. Now, what do you want to do? Like, you can think it's too low, and you can do a strategy that takes advantage of an exponential move to one side or the other, or both. Or you can say, I love the market. Market's deep. Market's true. It's not going to be outside this move. I'm going to do something that puts us inside it. That's all the expected move is. It's not an absolute. A lot of times people will see, the expected move, look at an option that has a 15 delta, 30% chance of a touch, ain't ever going to happen. As time goes by, that expected move gets even tighter, the delta, meaning smaller. The delta gets even smaller. This is free money. Nothing's free money. There's always a shot. That's why it has a value.
Well, I think to your point about using the straddle or the calculation of the platform, or there are other formulas that you can use to come up with a daily or weekly move, given the vol and the price and the amount of time that you're looking at, they're all going to be pretty close.
Yeah.
It's not going to be wildly different.
Nope. Next one, I think the last one.
All right. What has a better chance of being a successful trade, a zero DTE, or an earnings trade? Assume the strategy is the same for both.
I mean, if they both have a 70% probability of success on entry, they're probably over time both going to work just as well. I happen to like the 0 day way better than the earnings trade. That's just me. I mean, I gave you the math a second ago. Now I'm going to give you my opinion. I think, especially if you're trading SPX, or if you're getting as small as XSP or something like that, cash settled product makes it very, very easy. It's not set it and forget it, but it is set it and forget it one day to the next, right? I mean, if you're trading 0 days, no matter what, and if you're trading in the cash settled products that I just mentioned, no matter what happens today, you start off with a fresh, clean slate tomorrow, which is the way that I traded as a market maker, 9 times out of 10. I always had little straggler positions out there, but it wasn't like my, and I hate to say core position, but it wasn't my business plan.
Yeah.
Like my business plan, a lot of guys traded the back month and they had thousands of options on in the back month. I liked having thousands of options on in the front month. Never flat, but as flat relative as I could get in the market, and then reset each day. Because I think each day brings a great opportunity. So I think you have your positions that you put on, and then you have your business plan. And I like the idea of the 0 days right now. They're very hot.
Yeah, you don't have that company-specific risk. You probably have, of course, more liquidity in the S&P versus most individual names. Makes sense.
Very good, very good. All right, let's take a quick 90-second break. We'll come back. We've got an option jive coming at you. We'll be back in 90 seconds. Let's Tasty Live. Even the S&Ps haven't moved. They're down 8. We'll be back in 90 seconds.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Investopedia says we're the best for options trading, period. Investors Business Daily raves about us. With stockbrokers.com, we're #1 for options trading and best in class for futures too. The Motley Fool really likes us, and so does Broker Chooser. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Tasty Trade's active trader interface makes futures markets your arena. Built for the bold, not the bored. Trade CME futures with a single click. From micro contracts to major ideas. And go even further with futures options. Tasty Trade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. Tasty Trade, pro-level tools, intuitive design, total control.
Think you know where vol's gonna go? Test your theories with backtesting. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial the DTE, stack the legs, see what survives. Trade what you want, when you want with Tasty Trade.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80+ Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
It's options. Jive. Ryan, we are back, my friend. And you know what that means. Time for a little bit more Tasty Live with an option jive. I've been told by our producers that reading is not my strong point and that you should read the slides.
I thought that was unfair.
I did too.
Borderline mean.
Yeah. Some would even say the gentleman that said it was angry. But I'm
not untrue.
I'm not going to be that person.
You had an angry tone.
All right. Let's go with this little research corner here on Option Jive from Tasty Live. First slide, please.
All right, here's your weekly summary. Stocks hit fresh records with the NASDAQ up 5.6% for its 7th week.
Big record week, too. I mean, a record amount of time, but go ahead.
No surprise, semis led the rally with the chip group reaching all-time highs. One of those stocks, Samsung, crossed $1 trillion in market value, added to the list, becoming the second Asian company after TSMC to pass that level.
Okay, Asian company there. Yeah, all right.
A strong jobs report reshaped the Fed narrative, bringing hike risk back into focus. What do you think, Tony? Are they going to hike interest rates?
I mean, just like when I have an opinion, and it's an opinion, I think it's one shared by many. But again, it's just a narrative or opinion. So sure, subject to change.
Okay. Consumer sentiment hit a record low as gas prices have surged, showing Wall Street and Main Street still diverging.
I think that's another one. I don't know how many people all of these things, how many people they really talk to about consumer sentiment here. And I think gas prices, I've always said gas prices go right to the bottom line of the consumer. I mean, if you're a driver of an automobile that's combustion and, costs you an extra $25 to fill up this week as opposed to last year or last month or 6 months ago or 3 months ago, it comes right out of your pocket to the bottom line. So oil is definitely something that, and gas is something that consumers feel the pinch right away. But as we've always said here, at least on this show, the president doesn't control the oil prices.
Right.
That's neither here nor there.
And I don't think,
whether it was 4 years ago, 8 years ago, 26 years ago, or two days ago, they don't control it. Next one, please.
All right, looking at the week ahead, on Tuesday, May 12th, you've got CPI for last month. Wednesday, you've got PPI, that's producer prices. On Thursday, you've got retail sales for the prior month. Got Trump and Xi Jinping and the summit in Beijing. We'll see if anything notable comes out of that. And then on Monday, Monday through Friday, you've got ongoing hearings. But you've got the Warsh confirmation vote, and Powell is no longer the Fed chair.
So quick question, because you'll be on the show with me tomorrow too, and I know you got CPI and PPI, which can move the market. Do you think that volatility has a knee-jerk upward move? Like, I think volatility low is in, and if you get any move lower in the market, you're going to get an exponential move. At least I'm hoping so. I mean, I want to see volatility kind of expand here a little bit just to make these options a little bit more juicy in some of these ETFs. So that's what I'm hoping to play for. I think volatility is going to stay bid, not just for these reasons, but everything that you have going on. You got oil at 100. At some point, it's going to 96 now. It's only it's down $2 since the last time I quoted it. So there goes that narrative. Next one, please.
For today.
For today, yes.
Yeah, I mean, look, on the economic data there, if it's enough to move the bond market and kind of get people rethinking what's happening with inflation and where yields are going, then if you see a VIX that holds on to 19 and higher, then I think, a game on. That said, let's take a look at our weekly performance last week.
It's a pretty good week. I mean, I don't know if it was my son, I would say you did good, son.
Right?
Yeah. I mean, 2.5%, 5%, 2%. I mean, the Dow is the most complacent of the group, obviously, here. I mean, this is just a look back. But, I mean, I remember when 5% moves were a major move for the year.
Yeah. I mean, what is it? Historically, the S&P goes up on 10% on average, right?
Yeah, I think that average has got to go a little bit higher as time goes by. If you throw out a couple of years, it's 10% would be a huge win.
Yeah.
Now you got 5% in a week on top of. See, the amazing thing here is it's on top of a 10% move off of lows or more. Coming from April. Again, another V bottom. Next one, please.
All right, looking at weekly expected moves. So last week, you saw an expected move of $98, and that gave you a 1.4% percentage move. Actually, as you had mentioned earlier, realized vol a bit higher. Mm-hmm. You got a 2.4% move with the VIX at 17. You got the VIX still at 17 here, or just above it. And for this week, we're pricing in about the same thing. We'll see. Do you think it's going to be inside or outside, Tony?
I think it's going to be outside, just like it has been. But again, we have the moves and then we don't go anywhere.
Yeah.
And I think that's why volatility is staying so relatively low. Now, this morning we haven't had any move, so I'm thinking that maybe you get a move today, but we'll see. Next question, please. Or next slide, please.
All right, looking at the trend in IV rank for a lot of the major assets that we track here, you go back over the last couple of weeks, and the trend has, of course, been lower.
For volatility, right? This is just volatility, not the market itself. Those numbers are all about volatility.
Yep. Yeah, exactly. So just looking at last week, S&P 500 IV rank of 38, bonds 4, euro 57, gold 36. Crude oil, 47, nat gas, 6, and Bitcoin, 18.
Yeah, I've been nibbling on nat gas a little bit from this slide. It should be mentioned to everybody, more towards the 2.7, 2.6 handle. It's 2.8.5 right now, so I don't have anything on. I actually sold mine a little bit lower than where it is right now. Nat gas is kind of interesting, I think, here with oil being bid. There's been a divergence between the two. Today, they're both up, but there's been a divergence between the two. I like nat gas. I think it's a little easier to trade at this level than oil itself, maybe even a little less risky, even though nat gas is a bigger product relative to each other. Next question, please. Next slide, please.
All right, looking at our biggest movers to the upside and the downside, we've got Datadog up 42%, Akamai up 42% as well, Micron 38%, SanDisk 32%, SMCI 31%, and then on the flip side, less of a move here to the downside, given what we've seen gainers. But Expedia down 9%, Occidental Petroleum down 10%. I think Devon Energy, DVN, down 10%. PayPal down 10%, and ANET. I don't know ANET. Tony, you would have to fill me in there. Down 18%.
I'm long ExxonMobil after earnings. I know it's not on that list there, but you've got some other oil-related type stocks like Devon Energy and stuff like that. XOM up $1, 145.5. I think my break even is something around 143. So I'm not just because it's up $1.50 this morning. But here's one that hasn't gone anywhere as oil's gone higher. It just has stopped moving with oil. So I need a little bit of reprieve here. But SanDisk up another. We haven't mentioned that, up another $30 to $1,580 and change, flirting with it's although this will be a new high if it can stay here. These moves, and Datadog was for earnings, these moves are just exponentially large. Next slide, please.
All right, talking about rare air here. The NASDAQ rally reaches rare extremes. NASDAQ posted a 95th percentile weekly return, a 99th percentile monthly return, and a 99.9th percentile 6-week rally if you look back over the past 20 years. When this happens, historically, this combination has only appeared near major crisis recovery bottoms. We saw this in 2009 and 2020.
I have nothing to say here, but you know what? You look back at this and say, hey, if I survived the April downturn in the market, picked up some long delta, started laying it out at some point, whatever that be, up 5%, up 10%, or maybe up 13, 14% like we are now, you got to pat yourself on the back and say, I survived it. And not only that, I may have prospered from it. For those who missed this move up where they got long and sold it out 2-3 days later, ring the register. I have no problem with that. I do that myself on a lot of the trades I do for option trades today. When we move in the 99th percentile, you got to say to yourself, hey, I can't play for that move. And for those that got run over, because we got to talk about that group too, in some of these stocks, hopefully you stayed with the proper sizing. That's the only thing that can save you from this. But it is a waiting game now, and it is a very hard one to wait on. You got to roll up the untested side. You got to reduce that delta and take the whipsaw when it comes and deal with it then. Next slide, please.
Talking copper. Copper closes at all-time highs. Copper closed at an all-time high of $6.28, more than double its 2024 low of $3.92. What's behind this? AI and EV demand are rising while mine supply remains constrained. Past copper supercycle peaks in 2006, 2011, and 2022 were followed by 50 to 70% drawdowns within a 2 to 3 year period.
I don't trade a lot of copper, or I don't trade it at all, to be honest with you, so I can't comment too much on there. And we've talked a lot about AI, so I'll leave it. I'll leave everything all there. It's a nice little graph. Next one, please.
All right, and looking at some post-earnings moves here, some of the biggest movers, you had an 85, almost 86% move from INOD, RXT 56%, HUT, Rocket Lab, Datadog, all 30% movers to the upside. Akamai, SMCI as well, up 20%. And then, who disappointed following those earnings results? PLNT down 30%, FSLY down 38%, and PRIM down 50%.
Yeah, I mean, these are the stocks that have been moving, and the other ones, and every other stock has been a non-event. So next slide, please. Yeah, 50-50. I mean, you look at this, and in the week 4, you've actually had more losers than winners here over the whole 2,500 companies, right? So you had 500 last week. It's basically 50-50. And this is why I talk about earnings. You know, when you look at that, so there was a question a moment ago about what would you rather trade, like earnings or 0 days? And you look at this and you say, hey, you're selling premium in these earnings days. It probably works out good. It's 50-50 shot that it's higher or lower. But sometimes those moves can be a lot more than what you expect. That doesn't give you the whole picture there. So I'd rather trade the 0 days one more time here. And basically, it's a 50-50 shot on earnings for direction. So you really have to have good, deep liquid markets. That's what I think you need there to trade earnings. Wrap it up and let's go. Got the opening bell. I can't wait.
All right. Really quickly, continuing with the earnings theme.
HIMS. I forgot. That's another one that helps you out. I know with Mother's Day being here. You got HIMS and Rigetti.
That's right. Mm-hmm. Circle is before it came out. I haven't looked at that yet.
I haven't either.
I don't know. Oklo has been one here where, I mean, this is a pre-revenue company. They make small modular reactors, nuclear stock. Could give you some volatility. It's gone from 90 to 40 or so, back up to 70 or so right now, I think. But yeah, anything else that stands out to you?
No, Circle up around $6, which is about a 5% move. 4-5% move would be inside. I would expect it to be inside the expected move. I didn't do anything in Circle. I don't care about JD coming out. Alibaba, another one. Cisco, OKLO will be something that maybe we'll look at on Tuesday. HIM's a decent market, and then you got Rigetti. We'll be back in 90 seconds. We got the opening bell coming at you in about 90 seconds. This is Tasty Live.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Tasty Trade's active trader interface makes futures markets your arena. Built for the bold, not the bored. Trade CME futures with a single click. From micro contracts to major ideas. And go even further with futures options. Tasty Trade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. Tasty Trade, pro-level tools, intuitive design, total control.
Pay for backtesting? No. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial in the DTE, and stack the legs. See what survives. Check out Tasty Trade today.
When you trade options at Tasty Trade, you see your probability of profit and loss right where you need it. Earn up to $3,000 in commission rebates.
Ryan, we are back, my friend. And you know what that means. We've got more Tasty Live with the opening bell in less than a minute. Let's just take a look. Well, we have about a minute before the market opens here. We can say we're pre-market right now, as even the S&Ps are down around 9 handles. They've been down around 8 or 9 handles. The big mover pre-market right now is silver, up $5 and almost 20 cents. It's almost a 6.5% move, a little bit better than a 6 1/3 or 1/4% here. While gold just caught a bid. Also, it's up $7, trading near its highs, but it hasn't caught quite a bid as you can see, that silver on each other. If you look at the gold silver ratio, with my son and I typically trade, it has now come down to around 55. That has been sitting, just to let you know from a chart perspective, of around 60 to 62. So that's how many ounces of silver go into gold. So now you've got, might look to maybe kind of buy that today. We'll see as we get the opening bell. I think we just got the opening bell, though I don't think we got the opening sound. Producers are hard to find these days.
How do we know if it's open?
Yeah, I don't even know either. But yes, the market is open. Even the S&Ps are down $7. NASDAQ, can you give me it? Ding, 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 ding. There we go. Thank you. NASDAQ down 32. Russell up 9 or 10, and the Dow up 25 or so. Volatility completely unchanged at 1922. Let's take a look at VIX here too. VIX 1820. That's up from the roll of VIX futures, I believe. Bonds are down 7 ticks to 113.11, just off of their lows. Bitcoin down. I'm sorry, Ryan. I didn't mean to say that.
It's okay.
Up $900. They have not moved. Ethereum has moved a little bit here. It's on the lows now, down around 1/3 of a percentage point, $7. Small move. Oil, after flirting and trading over 100, is back near its lows of 96.40, and the NASDAQ just caught itself a bid. I mean, before I let the stocks open here, I mean, everything is really just like it was yesterday. Like, and the day before and the day before that. We open, you get a little bit of a scare, and then all of a sudden it seems like we are just going to, continue to march higher and march higher. I mean, that's what it looks like so far to me. Volatility hanging in there, 1923. What do you think about the market here?
Yeah, I agree with you. I think, like we talked about, until something happens to cause anybody to want to take a lot of the profits that they likely have, you're going to see this trend higher. And I think at some point, maybe you're starting to see signs of it already. You have larger institutional managers that are going to chase that performance. You look at just the volatility you went through since the start of the war. You had that huge dip in April and then this massive rip higher. You can't really sit on the sidelines here. That said, it's easily something that could be upset.
Yeah, but you have to do something, right? So, if you're fortunate enough to be a 3-lot trader, for argument's sakes, and you're rolling up puts, you're losing your delta just because the market's going higher. You do one,
Yep.
And you kind of hope that that's the worst sale of the day if you're losing delta and you're trying to get delta, so you would want it to go a little bit lower. If you get the one off, you say to yourself, all right, I did something. I wish I did all 3, but I did something. The harder part is if you're a 1-lot trader. What do? You've watched this movie day after day. We open with a little bit of like what's going to go on here in the market. And then you say, all right, I missed it. Now you're chasing it. I think you got to do it earlier rather than later. I mean, that's kind of a hindsight answer because we've only opened lower and gone higher. We really haven't opened higher and gone lower. So that's kind of a crappy answer by me. But if you want to say that what we've done yesterday is what we're going to do today because there's no change in it, then that's the answer that you have to come up with.
Yeah, I think you stick with the script until you get some new information.
Yep.
And
you roll up less. Like if you're rolling up to the 30-ish delta, you roll up to the 20, 25 delta. You play that game and you say to yourself as we go higher, I wish I rolled to the 30 delta. I mean, you gotta play the game. Let's take a look at what's moving this market while we're here. To the downside, you got Dell down $10 and change. Big move in Dell. That's almost a 4% move. AppLovin down $10, smaller on a percentage basis. The same on a monetary basis if you have positioned each one. TSM, which was just on one of the slides a moment ago, down $8. Google down around $6 or $7. Meta down $7. Surprising with the NASDAQ. This is all going to be chip related here when I get to it in a moment. But Marvell down $7. That's one of those that has really caught itself a bid. Tesla down 5 and change. Microsoft down 5 and change. Oracle down 4. AVGO, which is usually a leader, down 3 or 4. OKLO, which has earnings tomorrow, I believe, after the close, down around $3. Let's see what's moving this market. is this light up $100. That's a 10% move. I believe it sold off. It did the last couple of days and now back to its highs of around $1,000. MU, I mean, the $66. This is an 8 or 9% move in MU. WDC up 30. Qualcomm up 20. This is all chip related. BE up $14. That's a 5 or 6% move. Man, they really are coming for these chip stocks here as even the S&Ps are languishing up 5. AMD up 9. SMH, which was unchanged all morning long, is now up $8. By all morning, I mean pre-market. Was unchanged, is now up $8. AMAT up $4. USO silver up $4. Baidu, wow. What do you think here of a basic unchanged market with some huge movers in between there?
Yeah, I'm curious. Are we seeing some early signs of rotation out of the leaders here? It has been Mag 7. I don't think breadth in the market has been all that strong or robust. Do you look at this, Tony, and you kind of sort that watch list by your change, and now is it time for some of those that on a 52-week basis have been left for dead? Do we see a rally here? Or do they participate in the rally that we've been seeing?
Yeah, I don't know. I was married 17 years the first time.
It's a long time.
A little over 22 this time. I usually stick with the people that brought me to the dance, regardless of what you think of me. I think I'm going to kind of stick with the Mag 7 here.
Yeah.
I'm probably going to miss a lot of this move here, but man, Godspeed to those who have caught it. And those who have caught it have really kind of let the chips roll. Like they don't think it's ever going to end, which I think hurts a little bit. I'm going to miss the top. I've been saying it for the last 3 weeks, and I have missed the top, but I haven't got hurt because of this move higher. So it's a double-edged sword here, but I think you've gotten to a point now where we are a little too frothy. I think volatility is going to stay bid, even if we don't go anywhere. I'm going to keep my eye on that. If we break under 19 on volatility, and we're sitting right there at 1930 and change, we could be in for a crypto winter. And I don't mean by crypto itself, but one of those where volatility just collapses all through the summer, which you wouldn't have thought with a war
that's
going on.
Makes it so difficult.
It makes it so difficult because I have that in the back of my head, and I think everybody does. So for that reason, I hope volatility stays bid, but it hasn't, and I don't think you can draw a line in the sand anywhere, and you just have to trade what's in front of you. And if they're rotating out of these stocks, and even if you look at, forget about the names that are here, but if you're just looking at the magnitude of the moves here on this first page, you got $2 moves down at the bottom here, and you go to the upside, and you've got $3 to $5 moves to the upside. Now you got light only up 66. It does seem like there are those frothy moves in a lot of these stocks. But again, you got traders in front of you. You got the market basically unchanged at all-time highs. It's pretty complacent. You can't sell a creeper.
Yeah.
I mean, we're not going to fail from higher prices on bad news. Like it's going to be something else that gives us the cat. And don't worry, if they don't ring a bell, but you feel it. Yep. And there's no feeling right now except price. Like you could say that price has gotten out of hand. Oh, okay. But there's nothing I can do about that at this point.
Well, what else would you be buying really other than these companies on this news of this continued spending and this ongoing growth that exists for now? Mm-hmm. You're looking to put money to work. Mm-hmm. Hard to argue that you're not going to put some of it into these names.
Yeah.
I'm looking for a little bit more of a pullback. I think you want to be somewhat patient just after the move that you've seen. I think you stick with, the upside, but maybe it's not the first down day or like you're talking about where if you have, potentially you're going to be able to layer into some positions. Maybe you looked at a little bit here, but not the whole thing.
Oof. Well, what a market we have right now, my friend, because it really doesn't seem, the equity market really doesn't seem to be going anywhere or doing anything, but you've certainly got some movement underneath the market here for sure. And I am surprised, I think as everybody else, that oil hasn't had any two-sided action. Like we ran kind of stair-stepped higher, and now we've stair-stepped lower. And I got to imagine that volatility hasn't moved. Let's see, OVX, CGI. It's up around 2.5%. I guess that's a decent move, but just under 75 from what are lows here, as you can see in the overall market. I mean, I guess you would think that volatility expanded a little bit, but I would have thought it would be in the 80s if oil was flirting near 100.
Yeah, me too.
Right now.
I'm very surprised. Also just surprised with the amount of time I spend trying to figure out what's going on in the oil market. It is somewhat perplexing in that, you have this setup and the market hasn't really priced or worried about it too much, but we'll see.
Yep. All right, my friend, let's take a quick 90-second break. We'll come back. We've got more Tasty Live. What comes up next? You know what I usually say when this man comes on?
What do you say?
Nothing says Monday like this man. That's right, Dr. Jim, the skinny on options, abstract applications. If you haven't been slapped in the face by Monday yet, you will in about 90 seconds when he comes on. We'll be back in 90 seconds. Tasty Live.
First thing about Tasty Trade is how easy it is.
It's a very quick, light platform. It's all on one page.
And with 1 or 2 clicks, you can be anywhere on the platform.
Being able to see graphically where your profit and loss zones are.
Whether it's a pool,
What's up?
or a seed, you can navigate your way out of it with the Tasty platform. So I love that.
What's up? Man, I'm good. How you doing, Tony? Ryan, what's going on, man?
Stop. So why should you?
What?
Diversify.
Yeah, I can hear you. Yeah.
With stocks, options,
Yeah,
futures,
it's good, man. It's good. This is gonna be fun. Yeah.
From Tasty Trade. Focus on the markets that matter to you.
We'll struggle through. We'll be okay.
See the odds before you trade using curve analysis.
I'll tell you what, my Hurricanes, I've been telling you guys, dude.
Insights that help you
like, they got that point guard, they got that quarterback, they got that goalie, and they're ready to go, man.
Download today.
We wanted to call in because recently.
Apparently, the YouTube chat can hear us. That's good stuff.
Crazy activity in the SPX.
Yeah, what's up, YouTube chat? I see
200 or 300%. And what happened, unbeknownst to us, is the trade desk just emailed us and said these trades have been busted, and you're not going to have to pay it. It saved us about $10,000. And then Marty calls us this morning and says, I just want to explain to you guys what a trade bust is. When you really get down into the nitty-gritty and you're in the foxhole and things are going bad, when you can reach out to the trade desk and you talk to someone that you've spoken with before who understands your account and the way you trade, that is a feature of Tasty Trade, which I think you guys need to emphasize more, because it certainly has meant a lot to us. It saved us a lot of money, and it's taught us how to trade a lot better, and that's really helped a lot.
Well, thank you. This
was not a paid, you're not getting paid for this advertisement. Looking for market insights you can count on? Check out Option Trades Today, your go-to podcast for timely trading analysis and strategies. New episodes drop every Tuesday and Thursday at noon. Available on YouTube, Tasty Live, or wherever you listen to podcasts. Don't miss out on the trades that matter. Stick with the bat, stay ahead of the market. Watch Option Trades Today.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80-plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
We built Tasty Trade's web platform for today's traders. Drill into data, find opportunity, and track the action with hundreds of indicators. Fund your account and start trading right in the app. Join the club. Tasty Trade.
Ryan, we are back, and you know what that means. Time for a little bit more Tasty Live. That's right. With this man, as I told you, nothing says Monday. Nothing slaps you in the face like Monday. That's right. I'm talking about this man, Dr. Jim the Skinny, on options, abstract applications. How are you, Dr. Jim?
Man, what's going on, gentlemen? How we doing? Ryan, this is fun, man. I don't know the last time we've been on air together. It's been a long time, I think.
Right. It's been a while. It's good to see you, Jim.
Yeah, you too, my man. Really, really good to see you guys. And so, yes, we are ready to go.
What kind of BS are you? What kind of BS are you coming with on a Monday? Like, it's really good to see us. Be honest.
Oh, Hey man, I gotta talk my book, right? Everybody's talking their book. I'm talking my book this morning. But last week, so I'm very curious to get y'all's take on this. I'm very curious to get Ryan's take because I don't oftentimes get Ryan's take. So last week I was down for the count, end of the week, like I was really not doing well. I had to call in, blah 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 blah. So I had a chance to catch up on some movies. Here's a couple oldies but goodies. Let me know where you guys are at on this. Do you guys remember that Ed Norton movie, The Illusionist? Where are you guys at on The Illusionist? Have you guys seen that movie?
I haven't seen it it's an old movie. I mean,
it's like 10 or 15, 20 years.
Yeah. It's if I remember correctly, it's an excellent movie.
Ryan, do you remember it?
I don't remember the plot. But I remember it. It was just like an excellent movie.
I remember it, but I think I'm confusing it with another movie that was about a magician. They came out at exactly the same time. It was like two competing studios.
That's correct. That's exactly right.
But The Illusionist was better.
I don't know about that. Those are some fighting words. I'm not sure, but they're both excellent. They're both. I mean, man, yeah. So if you haven't seen it, for my people out there watching, if you're looking for something that if you haven't seen it in a while, you kind of forgot what happens. It's amazing. But then the second one that I saw, do you guys remember Everest? The movie with Jake Gyllenhaal and Josh Brolin that went over the 1996 expedition where a bunch of people died up on Everest?
Didn't see it.
I don't think I saw it either, to be honest with you.
Guys, where are you guys at? You guys are killing me this morning. You guys got to check out Everest. So, man, the first like half of the movie, very slow, but the second half, man, you're going to be on the edge of your seat, 100%.
Okay. All right. All right. Not my cup of tea.
See, Ryan doesn't understand. So Ryan, you don't understand. So when I was on the road with Tony for so many cities and whatever, like Tony always looked to me for guidance. Like, hey Jim, where should I go to eat? Hey Jim, what should I do tonight?
You're in the know.
I just had to kind of show him around the world, you know. So it's the same thing with movies. The Illusionist and Everest, you guys will be taken care of. Don't worry about it, Tony.
Somehow I think that's not 100% true, but I'll let you run with it. Okay.
All right. Fair enough. All right. So let's do some finance this morning. So this is going to be great because I know, Ryan, your forte is, it's Bitcoin, it's crypto. So I'm be very curious to get your take on this morning's topic because this is very, very options trading centric from a derivative standpoint. It's going to be very interesting to hear what you have to say. So Josh, go ahead and cue us up here on the title slide. So are options just a zero-sum game? So before we get into the topic and the content, give me some initial thoughts, gentlemen. What do you guys think?
Go ahead, Ryan. I'll let you go if you want to. Won't cherry pick this for you. Go ahead.
I don't think so. In that, when you look at the market and you're putting on a strategy, you're participating assuming you're in very liquid markets, you have no real sense of why someone is looking to buy that option that you're selling. It could be part of a spread that you're. Part of the spread that they're putting on.
Mm-hmm.
So I don't think I don't necessarily think so.
Oof. All right. So I'm going to answer this a little bit more to help Dr. Jim a little bit here. Everybody will tell you, not everybody, academia, like a Dr. Jim used to be with, or a news broadcaster who's in finance or anything like that, will tell you that it's a zero-sum game. And there's some truth to that. It's not a zero-sum game because you never know what's on the other side of what somebody has on. Meaning they could be long stock, short a call, and that call loses money. One person made money, one person lost money. No, one person made more money, one person made less money in that scenario. You now have zero-day options, which you could argue are the purest form of zero-sum game. But even then, you have people that will roll from 1 month to the next. If the world was to end tomorrow, everything could match up, and you could say it's a zero-sum game in that scenario. But on a daily basis, it's not. Dr. Jim, prove me wrong.
Well, okay, so there's actually a lot of truth to what you both said. And so this is going to be a very interesting discussion here this morning. All right, so this is really good. Okay, excellent. So Josh, go ahead and get us going here on the intro slide. Okay, so it doesn't take long trading in the active space to hear the term zero-sum game thrown around, right? We hear this all the time as active traders. As Tony kind of alluded to, you hear this in the media. You hear it from, broadcasters, academia, what have you. Well, a zero-sum game simply means that the net result is going to be a wash. So whatever one side gains, the other side loses, and vice versa. So in the end, nobody ends up ahead. You just end up spinning your wheels. Like that's quite literally the definition of a zero-sum game. So naturally, that's going to prompt the question, is trading itself just a zero-sum game? Like, are we just spinning our wheels where we're not going to make any progress? And in the end, we're just going to be left basically at net zero, less whatever commissions we paid. And so that's obviously not a scenario that we want to be in, but this is a fair question that we need to ask. And so what's interesting about the answer, it's not so simple for reasons you guys both brought up, which is really, really great. It's not a simple yes and no. There are elements of yes and there are elements of no. So that's what I want to talk about here this morning. So Josh, go ahead and get us going on the next slide. Let's talk about the first one that literally by definition has to be true. So when I look at a trade, specifically options at the contract level, so at the contract level, you have the short side, you have the long side, you have the seller, you have the buyer. Whatever one side gains, the other side loses, and vice versa. That is quite literally the definition of an options contract. And so if you're only looking at this at the individual trade level, the micro level, the gains and the losses are going to offset at the contract level. And thus, every independent trade looked at from this context must be a zero-sum game. What do you guys think about this?
If we're only looking at the option contract and ignoring that it's a derivative of the underlying, then I think at that microstructure, I would have to agree with you. If we have very few participants, that probably reinforces it.
If you're only going to let me eat hamburger, I'm going to say hamburger is the best meat in the entire world.
That's it. That's 100% right. And you remember, Tony, when we were on the road, I took you to many hamburger joints. Because that is right up my alley, man. Like, again, I mean, you said it on the market, on the opening bell, you got to dance with who brung you. Like, I know who brung me, and it's going to be ground beef. And so it was you, and it was me, and it was at the hamburger shacks, you know?
I never mind eating with you, although your palate is not that sophisticated. I don't think mine is either, but you bring it to a new level. But I will say this. I will never make the mistake, and I've said it on the show before, but I haven't said it in a long time. I will never make the mistake of traveling with you again and having you in front of me. You will be behind me. Not because it's a subordination thing or anything else like that. It's just that the amount of time it takes you to take your bag, a big, strong guy like yourself, to take your bag up on top and get all your stuff situated, people hate being behind you.
I'm not going to lie, Tony. We both know, the truth has to be told.
Over the years?
Well, I'm just saying the truth has to be told. When I go through TSA, there's an 80 delta that I'm getting stopped. There's an 80 delta I'm getting stopped, and I'm holding up the whole line. And it could be a number of different reasons, but I think that's totally fair.
Okay. I can live with this.
So contract level, we're all in agreement, right? Okay, zero-sum game at the contract level, that makes sense. Again, kind of structurally by definition, okay, that's fine. But as you guys kind of alluded to when I kind of kicked it off, wanting to know where you guys were at, it goes a lot deeper than that. Like when you start thinking about, what are you doing over time? What are you doing strategically to adjust? Ryan, like what you were saying, who's on the other side of the trade? Is it an independent trade? Is it part of a spread? Like all these things are very, very important. So Josh, bring us back to the slides. But there's another even more fundamental aspect of this over time that I think really addresses the spirit of the question that oftentimes the questioner has when they say, hey, is trading just a zero-sum game over time? Basically meaning, can I make money as an active trader? That's what people really want to know. When they're asking that type of question, that's where they're trying to go. And so I thought, man, let's go straight to the source here and let's start talking about P&L and let's start talking about probabilities.
Okay.
So let's say you have a $1 wide vertical, just as an illustration. You collect 1/3 the width of the strikes. This is very textbook, very cookie cutter for what we've been talking about for many, many years. If I have a $1 wide vertical, I collect 33 cents. I have 33 cents of profit potential. I have 67 cents of risk on the trade. Based on theoretical pricing, the way that the probabilities are going to line up for that trade is my pop is going to be about 67%. It's essentially going to be the inverse of the credit that I collect. And so when you look at that on a per trade basis, right, 67% times the 33 cents that I make minus 33% times the 67 cents that I would lose, in the end, I'm going to net out to zero. But gentlemen, we know that this is not the end of the story, is it not?
No, you're 100% correct.
Story's not over, Jim.
Story's not over. Although the math is right, the story's not over.
The math is right, but it's incomplete. Why is it incomplete? So why is it incomplete?
Because it's not a binary option where you can trade. You could trade anytime you want in here. You can get in, out, improve, or otherwise remove your risk or do something else. I mean, there's so many different ways you can go with this.
That's right. And Ryan, what do you think?
Yeah, same thing. I mean, it's not a binary option. You have the freedom to kind of find, where's your edge, I guess, I suppose. You're probably not going to sit in it for the entire 33 cents.
Correct. Right. When you start bringing in things like managing early, you start bringing in things like managing at some percentage of profit target, like that brings in all kinds of strategic advantages that I'm not even going to get into necessarily. Again, I mean, what we talked about in terms of other side of the trade, in terms of liquidity and activity and rolling and things like that, those are all kind of layers on top of this that I'm not even going to address. I'm actually just going to go one base layer deep this morning. So Josh, go on the next slide. Structurally, there is a quote unquote edge that's built into this that doesn't even require any action on our part. And it's essentially what we all know to be true. Over time, implied volatility has been shown to be greater than realized volatility on average. Now, it doesn't mean it's a guarantee. It doesn't mean it's a promise. It doesn't mean it's always going to work out when you need it to work out. But it does mean that on average, this is what we have seen over and over and over again. So what that means in English, in practical terms, the probabilities are not going to map what they should be theoretically. The actual pops that you experience are going to be better than what the theoretical pops are suggesting, because options are priced based off of IV. But if RV, the actual volatility that materializes, is below that, then it's as if you actually were overcompensated on entry for the options that you did sell. So in this example, my 33 cents and my 67 cents are not going to be 67.33. They're actually going to be maybe 70.30 or maybe 69.31 or what have you. There's only going to be a small edge, especially with something like defined risk. But now you see in the end, it doesn't net out to zero. It actually nets out to a small winner over time. And that's what we're hanging our hats on. And again, this is with defined risk. I mean, defined risk, the advantages and the benefits are going to be quite muted relative to undefined risk, because that's when you have the unfiltered exposure to the Greeks and the unfiltered exposure to this IV-RV differential. But of course, for every gimme, there's a gotcha. You're also taking on unlimited risk. You're also taking on undefined risk. So you've got to have the adjustments ready. You've got to have, your skills sharpened, because you're playing a much different game at that point. But over time, statistically, that is going to be where you're going to essentially realize the greatest level of effectiveness. And so I would say, structurally, this is the thing that actually, before we even get into any action on your part, kind of addresses the zero-sum game and shows that it's just not a zero-sum game over time.
Can't argue with your logic, because it supports my answer. If it didn't support my answer, I would be arguing with you here. But you're right. Now you'll say they'll be better, and you touched on that a moment. But elaborate a little bit more. Why do you say that? Because volatility is overstated. Go ahead.
That's correct. That's exactly right. They're going to be better. And so I think, like, when traders hear, like, they think about implied volatility and they think about realized volatility and they think about the relationship. And we talk about this, and we've been talking about this on the network, I mean, for 10 years now. I mean, and even longer than that before I even showed up. And Ryan, you were at Tasty when I joined, I think. When did you join?
I've been here, 2013.
Wow. So that's like the beginning.
Earlier days.
Yeah. I had my 15-year anniversary yesterday.
Congrats.
LinkedIn or somebody, or maybe something internal told me. And I have seen all the employees that are here. Not one person wished me a happy anniversary.
Happy anniversary.
At all.
Happy anniversary, man.
Thank you.
Happy anniversary.
Thank you, guys. Appreciate it. Appreciate it.
You got it, man. You got it. Well, I mean, going all the way back to even 2013, Ryan, like we were talking about this on the network.
Yeah,
because
absolutely.
it's just something that, I mean, it's shown up in the data over and over and over again. And so when you see that, you're probably like, okay, that's cool. Like, they seem pretty excited about that, but what does that mean for me? And that was the connection I wanted to make here this morning. It simply means that your actual probabilities are going to be better than what the theoretical pops are suggesting. And this is why, when you look at Like I think Kai's coming in right after me. He's going to have a study on zero DTE or what have you. You know, you're probably going to see probabilities that are like better than what they were expected to be. That keeps happening over and over and over again, which again, that doesn't guarantee you're going to make any money, but man, it gives you a pretty good starting place. It gives you a pretty good foundation. The reason why that's there is multifactorial, that probability differential. But one of the reasons that's structurally kind of in there is the implied volatility, realized volatility differential.
Which I think has to exist in this market, right? Where if you're going to bring in participants that sell options, there has to be some premium or some incentive, right? It's the same thing with the insurance market. If there were no premiums and the insurance companies all went out of business, you wouldn't have much of a market.
That's exactly right. That's 100% right. And if you think about in the end, and I like the fact that you brought up the insurance angle because we talk about that a lot, but in the end, like who wins in the end? The insurance buyer or the insurance seller?
Right, yeah, obviously the seller.
Obviously the seller,
But
right?
to the benefit of the buyer in the event
more,
they need the insurance.
Correct. That's what I was going to say. It's more complicated than that, though. I mean, that's kind of a simple, like just one liner, like there you go, put on a bumper sticker, what have you. But it's like, well, if I'm an insurance buyer, though, and I want the peace of mind so that if, you know, my house does go up in flames, I'm going to be covered and I'm actually okay, you know, losing 200 a month, 300 a month, whatever, that's fine. That's totally fine. And what's interesting is this relationship, IV and RV, in my humble opinion, will always exist because there are so many stock investors that they don't care about the numbers. They don't care about the fact that, you know, they're quote unquote lighting their money on fire when it comes to the insurance, because most of the time they're not going to need it when they're buying those out of the money puts in SPY or QQQ. But that's what makes the market for us, the sellers. And so in the end, it's kind of like what you were saying earlier, Tony. You know, if I sell a call against shares, it's like, well, both parties kind of won there, and that's correct. And so in a lot of ways, it's like the put buyers are getting what they want. The put sellers, which is kind of us, we're getting what we want. And in the end, you know, I mean, that's what makes a market, as we say. And so it's, you know, it's kind of buyer beware and buyer behold.
Very good. Can't argue with you.
There you go. All right, guys. So you guys got to do me a favor. You got some homework.
Oh, no.
I need Illusionist or I need the Everest. One of the two. You don't have to watch them both. They're both pretty heavy. So you may not be able to do both, but if you got to do one or the other, I'd probably go Illusionist.
Okay. It's a deal. It'll be a refresher for me. I read the book.
It was for me too, but I forgot everything, man. And it was like watching it for the first time, you know?
Okay. You got a takeaway slide or we're good?
I do. I got a takeaway slide. Let's go.
Beautiful,
Let's do it.
Beautiful.
Yeah. Josh is kind of front running us on the slide changes this morning.
Yeah, a little bit. He's he needs a coffee or something. I don't know what he's got going on.
I mean, he needs something. Yeah.
We'll figure it out.
So a common criticism of active trading is that simply a zero-sum game in the end, which is true at the contract level by definition, as each contract is indeed a zero-sum game. But because implied volatility exceeds realized volatility over time on average, option sellers squeeze out a slight advantage in the end. And again, this doesn't even address all the things you guys brought up with who's on the market, the liquidity, the activity, and all the things that we do. We don't know. And so the advantages can really start stacking on top of each other pretty quickly.
Very good, Dr. Jim. I am now getting people wishing me a happy anniversary. So thank you very much. None from inside the firm, all outside the firm, which just shows you where the love is here. Dr. Jim, excellent job as always. I know it's a tough subject to kind of tackle because I think early on in your career, you would have said that it is a zero-sum game. Have we changed you or you never would have said it was a zero-sum game?
Oh, I mean, you mean like in academia?
Yeah. Like if you were doing this in
100%.
school, if you were teaching this.
Oh, my gosh. Oh, yeah. I mean, think of how scary that is, man. I was giving all these kids wrong information for years and years and years. And they're still out there with the same wrong information. Like, think about that. That's scary stuff, man.
Terrifying.
Yeah, I don't know if it was wrong information. It was just a little bit misguided. You didn't have all of the truth.
Yeah. No, I definitely taught this back in the day. And I mean, I was like, it's a zero-sum game. You know, don't waste your time. And then because I just didn't know what I didn't know, you know?
Do you think you can ever go back and change academia for the better so that they could be better equipped?
Oh,
Is
man,
that something that you're up to? I mean,
wow. So look at Tony, man. You're bringing the thunder this morning. Wow, man, this is good stuff. I'll tell you what. So one thing I know about academia and I started to realize this at the end of my time in academia. Academia, if you try to change academia in any way, shape, or form, it's like steering an ocean liner. Like you can make it's not a speedboat. You're not going to do it quickly. It's going to be very slow moving. It's going to take a really long time. And you have to work through so many levels of hierarchy to actually make like lasting change in there. I wish it were different. And maybe it is now. Because I left academia in 2015. So it's been over 10 years. Maybe it's different. I don't know. But I know
it cannot make a
experience.
10-year turn. Trust me on this. They can't even get the books ordered in 10 years.
Well, that's what I mean. That's what I mean. I can tell you right now, I can almost guarantee, somebody please write in and somebody confirm this. For all of my students out there that are taking an investments class, somebody let me know. You can email me, you can write whatever. Are you guys still using the Bodie, Kane, and Marcus textbook? I almost guarantee they are. Because that's what I was using 10 years ago. If they're still using the same one on like the 19th edition, that makes my point. It's very hard to make change.
Very hard to make change. Dr. Jim, thank you so much for your time. No change in the market right now. Maybe a little bit of change. Even the S&Ps are up 12. Very complacent kind of market here. NASDAQ up 28. It was up a little bit more the last time I quoted it. Russell up 17. The Dow, relative to the rest of the markets, is the weakest of the group, down 19. Volatility really hasn't moved, although it is up 13 cents. Small move here. Bonds, 113.08. That's right where they were last time we quoted them. Bitcoin, I say it was up 1,000. It was really up like around 900. It is up 1,000 now. A small move there. Oil up $1.40, sitting at 96 and change. Gold up $5. Silver up a lot more, up 477. I did the gold-silver ratio spread just a moment ago. There was a time when I was up in both. It now looks like I am down in gold on every 1x2. I'm down on gold by about $350, and I'm up in silver by about $1,000. So I'm up about $700 on the pair there. So I'm going to look to close that as soon as I get rid of Dr. Jim here, because I can't do two things at one time, trade and talk to Dr. Jim.
NASDAQ 30,000 though, guys. Is that not crazy? Like that could happen. It could happen this week for sure.
Yeah, we're 29.3. Expected move for the week is, let me give it to you here, about 700 handles on 7 days, 4 days, about 600. Yeah, you're right there, Dr. Jim. Yeah, sure. No problem whatsoever.
It's a function of time, Dr. Jim.
Yeah. Good job.
A function of time, meaning it was only a matter of time?
Yeah.
Yeah, that's fair.
All right, my friend, we're going to take a quick 90-second break and come back. We got more Tasty Live immediately following these messages from our sponsor. We'll be back in 90 seconds. Tasty Live.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
First thing about Tasty Trade is how easy it is. It's a very quick, light platform. It's all on one page.
And with 1 or 2 clicks, you can be anywhere on the platform.
Being able to see graphically where your profit and loss zones are.
Whether it's a pool, a puddle, or a sea, you can navigate your way out of it with the Tasty platform. So I love that. You guys have the most unbelievable customer service in the business.
Email support, call support, get through right away.
They actively listen to the customers to make changes to the platform to make it better.
In fact, I've never seen anything like it in any corporation in the United States.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
Today's episode of Market Measures is brought to you by SIBO. SIBO is partnering with tastylive to provide educational opportunities for traders at all levels. Did you know index options like these can provide opportunities for diversification, lower volatility, liquidity, and other benefits? To continue your education on some of the mechanics learned in today's Market Measures, check out SIBO's Retail Trader Suite at www.sibo.com/minis.
Ryan, we are back, my friend, and you know what that means. Time for a little bit more Tasty Live with this man. We got Kai in the house with a market measure. How are you, my friend?
I'm doing great. How are you?
I'm doing good because I just scalped out the gold-silver ratio spread I put on and I butchered it. I made about $900 per 1x2. Should have been a little bit more, but it was really good, actually. I think I had it on for... I'll mention that because it worked. I won't mention anything that hasn't worked yet. Had it on for about 15, 18 minutes. It was a good one.
Good return on your time.
Good return on my time. Very good. Nick will say that when he comes back on Wednesday, he DM'd me to put that trade on, but he didn't. I want to go on record right now if he says that. Anyway, how are you, Kai?
Sure. I'm doing great.
Okay. Are you? I just want to make sure. Are you?
100% sure.
100%. Beautiful. All right. Well, what do we got today?
We got a 0DT again.
All right. Let's do it.
So we never analyze the put spreads for my show.
Mm-hmm.
So because I'm going to do a lot more comparison between the put spreads and the Iron Condor. So I need to bring back the very basic put spread analysis first. So for everyone to understand what happens if you just manage a put spread as standard 25% or 50% without or whatever stop loss. Then we can move on to the more complex, moving around, rolling, legging out, adding an additional layer, all these kind of complex topics.
Okay, I like it.
Yeah?
Let's do it.
Okay. So,
because put spreads aren't that interesting to me, so you better come up with something magical here, okay? I know you got a bunch of slides, but you better come up with something magical.
I like put spreads, Kai.
See? Do you sell put spreads or naked put in indices? Not 0DT. Never?
Not 0DT?
Yeah. Do you keep selling SPX or QQQ?
In ETFs, I'm naked all day long. In individual stocks, I'm typically more spread, more defined risk.
So you're still using like a naked put or a put spread to carry bullish or a positive delta, right? But probably not 0DT.
That's correct.
What's your reason?
0DT, well, I trade SPX. It's just too big. If I went into an XSP, I could get naked. I mean, I'm not going to use a...
No. Okay, so what about put spread?
Oh, put spread was the way I do it for 0 days. Yes, you're 100%.
So you're not interested in it.
It's just not that interesting. I mean, you sell a spread for $3. I don't know how you can make 10 slides about it, but I'm proud of you. I'm not poo-pooing you. I'm actually proud of you.
Good point. Yeah, I try very hard.
You succeed. You don't try.
That's right. Yeah, we have 10 slides.
That's right. Right.
So a couple of reasons people prefer put spread over Iron Condor. One is, in general, market drift higher.
Put spreads work. Iron Condors don't work. It's why the people like it right now.
Exactly.
And that's what the market...
In the past six weeks.
That's right. That's what the market is giving you. Not because one is better than the other.
I agree with you. We're going to see the results.
Yeah.
But there are a couple of reasons. It's pretty reasonable for a lot of traders. Overall, market drift higher, especially for indices. So there are more than 50% chance you're going to see the market close higher than lower, statistically in SPX and QQQ. And the second one is when the market rallies, implied volatility decrease, so your premium comes in faster. than the other way around. If market drops, implied volatility expands, and we saw how that cost spreads works when the market goes down. The cost spread premium and the distance between the break-even point of the strike rarely changes when the market goes down.
Yeah.
These are little difference. And third one is some people just don't want to have the upside risk. They just prefer one side, and you definitely don't want to sell the naked call spread forever, right? So put spread is one of the strong choices that we understand. So now we want to go back to very basic put spread. Today we only use the 20 delta and $20 wide. So make a fair comparison against our 20 delta and $20 wide iron condor, so we can see the difference. So definitely you're going to collect less premium than iron condor. So on average, you should expect a smaller P&L. That's reasonable.
Okie dokie.
Okay, so let's go to next slide. So we're going to have 4 slides with the heat maps with all data. As your request this morning, I increased the font size for all these charts.
I like it. You did good, but you sent it to me with the really small font, which made me like zoom in on my screen while I was going over this. So I'm glad you fixed it. It looks good.
Yeah. So again, every single time when I show those massive heat map with the 20 grids inside it, don't worry about the specific number. It's 20 or 30. What's more important to try to see the trend and pattern of these different management. See which corner or which area is more profitable, which area is kind of losing more money, or in general, they just don't make money, or in general, it's great. So for P&L wise, majority of these combinations management, we have 4 profit targets and 5 stop losses. So over 20 combinations, majority of them make money. So put spreads, and we also test a lot of different delta and width. Majority of them profitable. So still a very good strategy for long-term trading. And but there's only one box that can beat iron condor with the 25% profit target, no stop loss. But for this one is you don't even touch this trade. Just don't manage winners, don't manage losers. Keep it all the way to the end. The only downside of this is you're going to see a much higher volatility.
For sure. When you look at the stop loss for 200%, 500%, I'm assuming that is percentage of the initial credit received?
Yes, exactly. So if you collect as you said, like $3, mostly probably not, $2.5, your stop loss is going to be $500 and $500 for 200%.
Okay.
Right? Yeah. Yeah, so P&L wise is not bad. So let's take a look at the success rate. So success rate is the success rate is actually on average is higher than the iron condor because the market is actually.
What's the time frame for this? What's the time frame?
All data size.
All data you have. So that's
3.5 years. Yeah. So and also we enter at 8:30.
Okay.
Yeah. So on average, the success rate is slightly higher than the iron condor that we saw before, but the range is wider. So we actually see higher, better win rate and lower, worse win rate. It's understandable. It really depends on how the market moves. So this one impact more by how the market goes up or goes down.
Okay.
Not a big deal. On average, it's very close. And also, I think a threshold above 80 to 85% is great for both iron condor and the put spreads.
So it really is kind of market awareness that makes you slide into one camp or the other.
Yeah.
Right?
I believe so.
So
if you don't know anything, iron condor, I think it's better.
Okay.
Yeah, if you really strong, like opinion has, I think right now it's the bottom market for the rest of the 6 months or so. I'm more bullish. Yeah, put spreads probably fine.
And that's interesting that you say that, because that is the way that we do it here on the show, regardless of what we think the market is going to do. When we put on these 0 days, we usually just put on both sides and not one or the other. Now, sometimes we'll skew it one way or the other, put side a little bit closer, the call side a little bit closer, but then you're just really kind of playing games with yourself. I mean, I think if you go to the 20-ish delta on each side, which is what you tested here, right? 20-ish delta on each side with the short strike?
Yeah.
Yeah, that's the way we do it too.
And also another consideration, as you said, you only collect $3 versus $5 on the iron condor, and your return capital is going to be lower because your buying power almost the same or even $2 more expensive.
Right.
Return capital is going to be lower. and a similar P&L, similar win rate, why don't you just use the iron condor? You don't even need to worry about the direction.
Yeah, yeah. Well, the instant gratification, I guess, if you get the direction right, is what I mean. Are we searching for that dopamine? Like, is this like? I think 0-day trading is. You think it's a young person's game, or do you think it's embraced by everyone?
I think it's embraced by all speculators. Yeah, I do think that, to some extent it has it's supported more participation, more active participation by new users or new participants, customers in the market. So I suppose you could say that.
What do you think?
I agree with you with the dopamine hit.
Well, yeah. What do you think?
I haven't done market surveys.
See, he's going to be too analytical. He's going to want to know. Your opinion. What do you?
My opinion is probably toward more sophisticated traders, because
more sophisticated. So you would say
a lot of people don't even trade options.
Yeah.
Right. A lot of young people don't even they don't even trade options. If they trade, they just long call, long put. Iron condor is very sophisticated for a lot of.
All right. I mean, you're kind of skewing my answer now, because I agree with you to a degree. I was going to say that 0-day is the dopamine chase that everybody's looking for, which is typically skewed to the younger investor than the older investor. And I'm gonna make the younger investor, under 40, the older investor over 40. That's how I'm going to skew my answer being correct, even if we have no idea of checking it.
So your younger threshold is under 40? I thought you were talking about
when you're in your 60s,
25.
40, when you're in your 60s, 40 looks pretty good. Yeah.
Okay, fair enough.
Yeah.
I would assume that people are more often buying these 0-DTE options without knowing anything. Especially if you're coming in, you're relatively new, you're going to speculate. I don't think you default to selling, even though that's where the edge.
And they probably buy out of money, right?
Yeah.
I would think so.
Yeah, they want a really low risk.
Yeah. Okay.
Okay, next one is the CVAR or the risk control. CVAR, you can see the range is wide, and of course, the tighter the stop loss you put on the trade, the smaller the CVAR or the largest loss you're going to have. So this doesn't mean too much. On average, you're still on par with the iron condor. Slightly higher, slightly lower, really depends on the premium you collected. You have extra buffer in the iron condor. But in general, if you let the trade run, your CVAR is going to be higher. Your risk is going to be higher. This is pretty much the same for all the all the iron condors, all the strategies. And the last one, probably one of the most important ones, is Sharpe ratio. So Sharpe ratio tells different. It's kind of combine whatever we see in the first three charts. We see the best kind of area is either we don't touch the stop loss on the very right side. Doesn't matter your profit target, or at the bottom, right? So there's no profit target management. You can use stop loss. So either way, you probably don't want to touch stop loss or profit target. I probably prefer the right column. You don't use a stop loss because the one of the reasons is this is not the only pattern we see in this put spread, but we also see across different strategies. Iron condors with different deltas, and also put spreads with different deltas.
Well, one of the raps that against it that an iron condor gets is, it goes through your short strike, right? Like on one side or the other. It goes through that's the rap it gets, and you can't roll up the untested side, especially in 0-day, because there's just not enough time left. You don't collect enough.
It's very difficult. Yeah,
it's difficult. But that's almost the beauty of an iron condor too, that you already have an embedded stop order in there by the nature of it being defined risk. These might be considered synthetic strangles, but they're not. Like, they have defined risk to them.
Yeah.
Right?
But it's still a big product in a very short
big product in a very short period of time, and nobody wants to lose, the $1,500 on one contract. But it
happens, yeah.
That's the game.
It takes, let's say if you collect $3 per trade.
I was collecting $5. You're right. Usually we collect
it takes
$4.
like a month, like 1 or 2 months to come back if you hit every single winners after that. Yeah. So it hurts.
Sure.
So in general,
it wouldn't take months if you're losing.
It takes, like, if you collect $3, you make 50%. We don't even make 50%.
Sure.
50% is $150.
Sure.
That's 30 trading days.
In that example, you're right. But that's also not kind of doing any kind of market awareness, closing one side, putting on another one. We've done a lot of, a lot of not trading it. It's really kind of setting it and forgetting it. And then it goes back to Dr. Jim's original argument of zero-sum game. You know what I mean? Like after a little while, you could look at this as a zero-sum game.
Yeah, I would think that you would likely have some view as to what direction you think the market's going to go in, and therefore you're going to deploy XYZ strategy. Versus maybe you're just running all the strategies at once and relying solely on the numbers. But I would think, like, let's just say that, okay, most of the time there's a upward drift.
Yeah, of course.
As you're showing, you put this trade on, this works, and I would prefer to be in the no stop loss category from the volatility adjusted returns here versus, a smaller return and less volatility. That said, if we see that the market just goes from where it is today and it just plummets by 5%, I don't know if you might rethink whether I'm going to put this on tomorrow.
Right. Why shouldn't I put on the Iron Condor earlier this day? So the Sharpe ratio actually is kind of combine the success rate, P&L, and CVAR. So we see the managing 25% without stop loss is still one of the best choices. It's probably not the optimal in any means, but we can still use this one as a benchmark compared with the same management in Iron Condor. So now let's go to the next slide. So now we want to compare the similarity and differences between the Iron Condor and the put spread. Let's talk about the similarity first. The similarity first is if we use the same setup, 25% profit without stop loss, the Sharpe ratio between Iron Condor and put spreads are very close, 0.92. It's very good Sharpe ratio, getting close to 1, really good. But the internally, probably the picture looks a little bit different, even though the Sharpe ratio looks almost the same. So you're gonna feel differently in the losing and winning days, even though the performance of long term very close in terms of the risk and reward. And the second one is no profit target, no stop loss probably works the best to maximize your long term return, but your volatility is going to be higher. But we're still going to choose 25% profit target, then can increase your win rate very close to 90%, which is pretty good. And also stop loss in all different kinds of analysis is going to hurt your profitability. Iron Condor put spreads is the same. Probably for the 20 delta or kind of a small spreads, you don't want a stop loss.
Yeah.
Yeah. Now, similarities are very simple. Let's take a look at the differences. The first one, can we go to the next slide? So the first one is their loss distribution is very different. So this actually circles back to my previous point. Even though the Sharpe ratio, a long-term average P&L looks very, very similar, the role you actually being through is very different. They actually share very small percentage of the same loss days. So we can see from this chart, totally we have 68% of win rate. So 14% are the losing days. And they only share like a 2%, 2.7, less than 3% of days, they share the same day loss. And we have the put spread loss only, it's 3.3%. It's very close. But we have the Iron Condor loss only days is like close to 8%. So there are a lot more number of occurrences happen on the Iron Condor. And if you have enough experience, you can immediately spot it. That 5% difference comes from the call side.
Sure. Because I mean, we're at all-time highs. I mean, that would have been my guess too.
Not even all-time highs. Just in general, you tested them more on the call side.
Okay, so
you have more number of losers to the call side. That's why Iron Condor generates more number of losses. But the largest losses magnitude probably comes on the put side because the market goes straight down and without coming back.
So I thought this was the most interesting slide of the group that you showed me here. And so I have a question or maybe a request for you to put in. And it's because 3 years of data will be good. It's not, just like
we have one of 750 data points, yeah.
What if we looked at a long delta Iron Condor strategy in SPX, how it performed over the last 3 years? Okay. Now, I don't know how to skew it. Like if we're doing the 20 delta, do we get enough going up to the 10 delta on the call side or the 15 delta with our short strike, or would it be, better from a risk, or maybe you do both. Instead of doing the 20 delta, we do the 25 delta on the put side, and we still do the 20 delta on the call side.
I can do that, yeah.
I think we're going to find that the results are better if you move the call spread further away than moving the put spread closer. But I would like
you can, because the call spread, if you use the same delta, same width, the call side actually collect more premium. If you want to make them more balanced, you can either move put spread closer or call side even further away, or make it the put
because
wider.
of put skew that you're getting more credit on the call side because the put skew that you have, the put that you're buying is so much inflated,
more expensive.
Relative.
Yeah, we can. I saw a lot of results. I don't have a very clear takeaway. Based on my impression, it really depends on the delta and the width you choose, because you can push the call side further away, but when you push it too far, that additional risk is not going to be adjusted for that tiny credit you collect from the call side. Right. It really depends on how you're going to balance that. So that's why in our past 2 years analysis, you don't want to push your delta very small, even though your success rate is extremely high, but the premium probably too low to justify the risk you're taking.
Mm-hmm. Okay, cool, very nice.
Yeah, so it just in general, put spread, yeah, that's fine. The risk is a little bit different. So this one's very interesting. The second difference is the efficiency and return of capital per hour or whatever the time you want to measure it is much, much faster on the put spread. The same reason why many people want to choose the put spread is the IV depreciated when the market goes up. So your profit takes in, that speed actually accelerate with the market going up. So you can see on average, median, 25% profit target comes in 30 minutes for put spread. But for iron condor, it's 70 minutes. So it's more than double the time. So if you put in 8:30, half of your position should be closed before 9. That's actually really good.
That's outstanding.
Yeah, before 9. And for iron condor, probably you have to wait a little past 9:30.
Way too long.
1 hour, way too long. And for the first hour, 70% of the put spread you already exit. So this is one of the best advantage or benefits the put spread traders can get. You don't in that trade for too long. Probably 30 minutes to an hour, majority of the time.
Okay.
That's one thing people can consider.
This is cool to see. As we talked about earlier, don't do too many zero DTEs, so you're gonna have to start. But it seems like you want to be in and out, and you've really kind of captured that initial window.
Yeah, especially if you have strong assumption or opinion that market is going to bounce like it to the upside. Yeah, you can put in a put spread, right? So the next one. Now we want to do something very interesting, because when I do the study, rather than on top of looking at the macro results, I also want to test the specific dates, like a stress test. And in my most fresh memory is the big beautiful day, like 7th, 8th, 9th. We saw like on average 8% average daily trading range. I think it's a 7.36 and 11% for these 3 days. Although some of the days actually went up, but these are days I remember is very stressful trading any positions. But I don't remember, because I trade 0 DT in these 3 days, but I didn't manage my position quick enough. So this is the 3 days I want to test for the put spread. We can see all these 3 days, we are able to exit the put spread at 25% within 20 minutes. And one day is even 10 minutes. And that's actually the down day, the big down day on the 8th. 10 minutes, we took that off. So this tells us it really doesn't matter where your market close. It depends on the first hour how the market behaves, if you're able to close that fast enough or not. We've seen that so many times in the iron condor.
I'm watching, and I know you trade a lot of 0 days, and I know you're hyper focused on this. I'm wondering, does this change your illusion on anything? Do you think about, I know you can't do it for a study, but would you think about selling a put spread first and then a call spread? I mean, do you ever
I actually considering adding some put spreads into it after I done not only this one and a couple I want to show.
Put spreads into an iron condor.
Yeah, I think you can mix them up. So let's say you have more. So
I mean, 2 put spreads would give you a very small long delta on entry to the overall position. It's going to give us more buying power again. I mean,
if you use the same width, it's the same buying power.
No, you'll have two puts versus 1 call. You're going to be using.
You're doing a ratio.
Yeah.
Well, ratio spread, I guess, is what I'm saying.
Oh, okay.
So,
I think.
I mean, it would be it would be doubling. Let's just use $5 as your credit received. I know it's a little bit less than that, closer to $4.20 or something like that. But let's just use $5. So if I'm doing it $20 wide on an iron condor and I'm collecting $5, I'm using $1,500 for 1 iron condor. If I did 2 put spreads,
it's going to be close to 3,000.
3,000. Yeah,
close to 3,000.
Well, a little bit more because you're only going to get, let's say, $2.50 or $3 on a
exactly.
put spread or something.
I would consider if you trade multiple contracts. I think a lot of people don't only trade 1 contract. They're going to put on 2, 4, 6, or 10, 20. You probably can mix these trades, so you can take advantage of both strategies. So mix up your P&L and mix up your risk. So I actually have another study to combine these strategy one by one. So it's pretty much the same as what you're talking about.
Yeah,
right? Making 2 put spreads is the same as 1 iron condor plus 1 put spread. I think the final question comes down to how you're going to manage that. Are you going to manage that one by one, or are you going to manage 6 legs as a whole? Yeah. This is actually a tricky question we want to test more. But in general, you're still making money. It just really depends on which kind of risk profile you want. You want to hold it a little bit longer with more protection, so you use iron condor, or you want to get a quick in, quick out trade like a put spread. But this slide shows even in the most scary days, even though it's going down, it doesn't mean you're going to lose money or full loss in the put spread. There are still opportunities you can make money. And the title is true is because in our database, there's no back-to-back loss in put spread, which means if you lose the first day, you're probably going to put in, don't worry about it, put in the second day. It's pretty independent.
Well, because
I would say pretty.
We haven't had 2 down days in a row. I mean, we haven't had 2,
roulette.
I mean, yeah, exactly. It's like roulette. Yeah. Just double. Listen, that's how Karen, the super trader, made her money. Rest in peace. I mean, she would double up on puts when they went against. She would just keep selling the same amount of premium.
Okay.
And you had, basically V bottom. So you collected more long delta on the way down. It really worked.
I wasn't trying to talk about double down the next day. I was just saying.
No, I know. You were just saying
it's kind of
you
independent.
Be confident in doing it.
Even though the market is kind of related, like the first down day, second even the magnitude even stronger, or second is rally.
Sure.
But for the option trading, 0DT, probably you're looking independently.
Okay.
Very different pattern.
I would imagine if you're going to that 20 delta strike, and you have that spike in volatility, you can still get at some point. You will have that delta move, but you will not see the Vega. You will not see that Vega risk increase.
Yeah. But it really depends on how you're going to manage them. Most traders, especially the sophisticated traders, they don't follow them mechanically, right? We always have a very strong opinion. I'm going to take 50% today, not 25%.
Right.
Okay. So next one, I think it's the takeaway. And we pretty much talked through everything. One thing is put spread is still very profitable. It just showed a different risk profile compared to iron condor. You still want to manage them, or you just don't touch them. But you manage winners is what you want. You probably don't want to touch them on the stop loss side.
Good job, my man. Very nice job. We're going to take a quick 90-second break. Had a little bit of movement in the market, although you seem pretty complacent over there yourself. NASDAQ was red by about 30, 40 handles. It's now green small by 1 or 2. Volatility really hasn't moved. You know what? I say the market's moved. I'm looking at a heat map here, and I'm seeing things like NVIDIA up 2%, Microsoft down 1%, MU up 4%, Glowworm up 8%, Dell down 6%, SanDisk down 1%. I mean, it really is stock pickers market today, but it really is everything that sold off ever so slightly yesterday, to your put point of view, has come back today. You know who's coming back right now? Marty, fan favorite, coming from Tasty Trade World Headquarters. He's going to be in here with G in just about 90 seconds. Let's Tasty Live. Good job, Kai. Thank you.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
First thing about Tasty Trade is how easy it is. It's a very quick, light platform.
Whether it's a pool, a puddle, or a sea, you can navigate your way out of it with the Tasty platform, so I love that.
On Tasty Trade, adjusting your option positions is a right click away. Rolling just got quicker. Switch to Tasty Trade and earn up to $3,000 in commission rebates.
Ryan, we are back. So are the even the S&P's up 16, trading about 6 handles off of their highs. NASDAQ about 50 handles off their highs, but they're no longer red, which they were just a second ago. But somebody who's never red, always green, always smiling, this man. I know him as Marte. You know him as that guy from the trade desk.
Right.
Marty, what's up, my man?
What's going on, fellas?
Good to see you again.
You got your good-looking other son. You got the scholar son on today, which is awesome.
Yeah.
The Rhodes Scholar son, right?
I got the performer today.
Oh, listen, you know what? Like to give them all a chance, right?
Speaking of performing, how's your little guy doing? He's been
good. He's
track and field.
Track and field, full recovery.
Beautiful, yeah. Because he broke ACL. Did he do his?
He had a full tibia fracture, just non-displaced. They put a 1 foot rod in his tibia in like January, I think.
Jeez.
Yeah.
You'd have to shoot.
He's now the fastest Jew in Valparaiso. And when you were the fastest one out of all 30 of us, think of it. Fastest, right? But yeah, full recovery, ran the 4x100, the 400.
It's great.
The 100 meters. It was nice. He's fully back.
Good, man. Awesome.
They recover differently than people in our
like I was going to say,
mid-50s age group, right?
Yeah, you have to put me down.
Right.
If you don't, just put me out of my misery.
So what are we thinking about this market, boys?
Same as it ever was, right? I mean, you can't step in front of it.
I was talking to your son, and we were talking about Micron. And we were like, that and AMD. And we're like, yeah, he goes...
Micron another $43.
He was like this thing might go to 1,000 by the end of the year. Worth like now it's going to be like at the end of
Could be the end of the month. Or the end of the week.
You know, I've that at AMD too. I watch them. I was trading Micron too, but then I'm at the point where how long can you sell these put spreads for?
Right.
Yeah.
Until it doesn't work, which it's worked for the last, 300 points in this stock.
And the optimal word that you said there was spread.
Yeah.
Put spread. Even if the stock's going higher, the naked put looks so great. Forget about the buying power requirement or anything else like that. It's that exponential move to the downside, which is going to happen someday.
Right.
And it's going to last.
And when you have a stock on it,
right,
that's up $100 in a day, would it be odd to see it down $90?
Yeah.
I mean, it would be odd to see any of them down that much. But yeah, you're right.
Well, you just mentioned AMD. I mean, it's up $100 in 3 days. I mean, so why can't it go down $100 in a day? I mean,
easily.
Not priced in right now.
Micron, I think, was down 21 or 22 on Thursday. And the next day it opened up, it was like $30 higher. And I'm like, this thing, it was up 100.
Is that the biggest talk on the trade desk from the customers? Is it these?
I've got guys I had a guy call that I do that does a lot of business with us, the nicest guy. He's short AMD and he's been selling, he's got a couple covered calls. He owns a stock at about 144. He started covering at 235.
Start covering the calls that he sold.
He started covering his stock at 230. He's got 235 calls.
Yeah.
I'm like, just try to get some time value in it.
Sure.
We had to go out to like September to get any type of extrinsic or credit, but he was able to bump up his strike from like 230 to 240 and get a little bit of credit. But at this point, do you tell somebody or do you observationally look at it and go, well, maybe you can.
You're in a lose-lose situation.
Right. I mean, do you cover the call and then just go with the stock, or
no, probably not.
I mean, you've already locked in, $100 in stock value.
But the issue was managing it from when it went from 230. I'm just
exactly
or whatever you said to 280.
Right.
That was the time to make a decision. Am I going to roll up the strike to 250 or 260? I'm not saying go out to 360.
No.
But that's the time. And then when it goes from 280 to 350, do I roll it up now to 320 or 330? That's the time. It's too late now when a stock is 150, 200 handles high.
You don't want to start looking at your flat tire in mile 12 of it, right? You want to get it the minute you start hearing it rotating off your rim, right?
Well said. My intellectual friend would not have said it that way, but you and I would say it that way.
We use the brain power that is available to us, right? Him and Glenn would have had an actual explanation for it.
Use that brain power for our list. Bring us to our list.
We like to use the flat tire, and you hear this. Right, whatever works, right, with us. But yeah, it's been interesting. You got guys that have just killed it with the stock.
Sure.
And then that allure of having these juicy calls that they can sell just becomes, it's like you can't stop looking at it. It's like an accident on the highway. You can't take your eyes off of it. Again, with the vehicular travel analogy for our options trading. But I mean, what do it's like you got 15 grand and
you made money. That's the thing.
Right. You're trying to
through the rear view to use your car now.
Rip the rear view mirror off and just go with it. But it's been interesting. That's been a lot of it. Trying to get guys to make adjustments at $150 in the money is always going to be a bit of a challenge. But I guess if you can collect $3 every couple months, and if you do get it taken away, because I mean, you see these stocks breaking $200. I don't. They make too much money. I don't know.
Let's get to your list because I got to get my man G in here.
Yes, we got to get
to talk to about him too.
He's going to analogize quite a bit differently than I do.
Of course,
I feel.
Of course. He's
all right. At number 20, we have SOXL at a 108. That's impressive. 19 GLD at 38. TQQQ 18 at 54. ASTS at a 74 at number 17. 16, Amazon at 18. 15, Qualcomm at a 116. Well, there you go. Palantir, 14, 22%. 13, SMH at an 86. RBLK at a 65 at 12. Apple, 11. Can't even crack the top 10 at 42. IREN, 44%. Microsoft at a 9 at 48. Top 8, Meta 31, 7, SNDK at a 79, 6, AMD 85, Tesla at a 15% at number 5, top 4, Intel 107, SLV at a 46, NVIDIA at a 71, and then Micron, number 1 at 117%.
Yeah,
Go figure.
Go figure.
Right.
That's a tough one. I think is Microsoft actually down? I think Microsoft is actually down today. It's down $5, 1% move, and you've got the market and MU and everything else going higher.
But tell me, there's something to this chip storage thing.
There might be.
Right?
There might be
onto something.
Might be something onto here.
Right. It's not really that sick.
I'm going to make you get onto the desk, and we're going to take a quick break here while we get our next man in here. /Micro Glenn. What's up, my man?
Yeah, that one I didn't really think through.
We named our hypothetically naming our children using, it was out on social, using
trader terminology.
Trader terms. You came up with /Micro Glenn. I mean, do you really want?
It's no butterfly.
Name your son Micro Glenn?
You know, I immediately after I had everyone, because Vanetta came up at my desk, and immediately after, for the next 5 minutes, I heard 30 better ideas.
I thought it was brilliant.
Yeah.
I loved it when I saw it.
Don't worry, mine's a stripper. I came up with butterfly, so don't worry about it, Theo. Don't worry about it.
No, I liked it. We're sure it's mine. Iron Condor, also a good one.
Yeah.
From Ryan Grace here, but no,
not as original, but
that's good.
Yeah, well, the still of Micro Glenn is now in a lot of shared photo albums.
Well, redeem yourself. What's going on with FX here? Where's everybody running to?
Yeah, they're not running.
I think it's a crowd that runs.
Yeah, they're not running to the U.S. dollar, and you're seeing this.
It's been a little bit stronger, wasn't it, or is it reversed?
Yeah, no, I mean maybe overnight through Asia and part of Europe, but in this U.S. session now we're back at lows, and you start to get. We've seen this for the past week plus of just demand not really flowing into this U.S. dollar as a safe haven anymore. Rising yields in treasuries aren't helping this either, which that could go one of two ways, and it's not helping demand. And you're just seeing across markets, it's risk on until proven otherwise. But we're right here at kind of a crucial price point across these major dollar markets, because you've got this euro dollar pressing up against 118 again. Yeah. If you're looking the past month or so, anyone selling that 118 has gotten paid 8 or 9 times. Right. But we're right here at that inflection level. It's a very similar chart across these dollar pairs. Pound exactly the same, right above 136.
Pound almost looks like a better sale from this layman's eyes than the euro.
Yeah,
because it's kind of more in no man's land than if you're just trading price than the euro, which has been a little bit higher, about a month ago.
Yeah, you're exactly right that we've seen this level sold more clearly more recently in this pound, and I'm also keeping track of that. This week, we've got some political back and forth in the UK. I'm not going to begin to understand the Labour versus Conservative versus third-party electoral map in the UK. But story over the weekend is the leaders lost a lot of local seats, and it was interesting to watch the Sunday night open. If you're looking at that euro-pound cross, we almost had a euro runaway before snapping back. We had the PM, Keir Starmer, speaking to hold his seat, but markets now pricing in that something there, that inertia is the most likely outcome, like we see out of time and time again from political back and forth, that nothing happening is the more likely outcome than something radical, but still something to keep in mind for that UK currency, the Great British Pound. But if you're looking for high beta in currency markets, you're still looking at this Australian dollar and this New Zealand dollar, now over 72.5 cents. This Australian dollar is, and we haven't closed above there in more than 3 years. So we've flashed a couple times to end last week at these prices, but I'm really looking to see if this daily candle holds above that 72.5, and then the last time we were back here, you can zoom out, and we got all the way as high as 80 cents, 90 cents. If you're going back to 2013, we were at parity with the Australian dollar. So that continues to be one of the longer term, more fundamentally clear macro plays in this currency landscape. But other than that, you're still surprised by, the back and forth from the geopolitical spats not doing anything. We've got Trump talking right now. It's not doing anything. So it's pretty interesting that market's not really biting on anything so far, and
chewing the fat, as they say.
Sure.
Kind of just meandering sideways. I mean, it's almost like equity market. It's hard to sell a creeper.
Yeah, you're absolutely right. And so
this
we'll see.
The FX markets are creeping. You just mentioned 4 of them at their recent highs.
100%. And so we'll see if there's a lot more. Who knows what's with these round numbers, right? But you do have a lot of people looking at this euro at 118. That's what I'm looking at to see if anyone steps in there. If not, then we could see a lot more dollar weakness trading through some of these key congestion levels. On the horizon, we've got inflation data this week. Who knows, those rate cut odds that usually juice our markets with a lot of speculation have really been stuck as well, not pricing out anything until anyone knows more, right, which is the end of the year. But we do have a potential new Fed chair coming in pretty shortly. Historically, we've seen the dollar sell off.
Wasn't it supposed to be today? I thought it was today. I could be
wrong. Who knows?
Yeah.
But there's still a couple more steps before he actually has a crack at the Iron Throne, the FOMC chair. But we've seen historically dollar sell-off when new Fed chairs come in. He's definitely one of these people that wants to make his impact in a myriad of ways through balance sheet reductions, et cetera, et cetera. We'll see how much markets try and front run that versus just call his bluff and see how much he can change, because historically it's a slow-moving institution.
Do you think he bends the knee to the real king?
Are you calling him a human sock puppet?
Ooh, Greenspan?
How dare you?
Given he was installed essentially by, or he's kind of more so Trump's pick here. Trump has been banging the table on lower interest rates. They're too high.
You're absolutely right. And he has, in front of the Senate committees, tried to defend his honor as an economist.
For sure.
And we've seen, of course, across the board, Trump's first term saw more perhaps career politicians be his picks. But lest us forget, Jerome Powell was his as well. So
that's true.
And he's really held the line. And they are not friends anymore. Jerome Powell and Kevin Warsh getting dinner together.
We will always be friends.
I hope so.
Never going to happen.
When I'm Fed chair, I will not forget.
I appreciate that. I'm not going to forget to take a quick 90-second break. It's kind of interesting, the market, for a moment, if we get to the equities. Even the S&P's up 23, just made a new high. NASDAQ up 63, Russell up 21, and the Dow up 34. Although we lost some of the leaders from this morning, SanDisk is actually down $20. What? It was up like $40. AppLovin is down $16. It's down more like $5. Microsoft, which was down around $10, is only down around $5 and change. You get a little bit of a rotation here. Apple, which was down earlier, is almost unchanged, down 38 cents. So it's almost like the Mag 7 are coming back, and these other stocks that have been kind of leading, some of these chip ones, are coming back to relative earth. But don't worry, MU still up $42. We'll take a quick 90-second break and come back.
Touch this.
Ryan, thank you for your time.
Thank you.
/Micro Glenn, thank you for your time. We're going to take a quick 90-second break and come back. We got more time with Liz and Jenny next. Peace.
backtesting. tastytrade now has options backtesting for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get backtesting at tastytrade.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, two female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on tastylive.
Whew, let's make this quick. I gotta get going. I make $4.97 every second that I work, and if I don't clear $145,000 by the end of the day, I'm gonna go crazy.
Okay.
It's a cute dress. Where'd you get it?
Oh, thank you. H&M.
$23, 10% off sale.
That's pretty good.
Probably not worth more than $4 now. That's too bad. You gotta be aware of these things. Everything has value.
Well, not everything is value.
Everything has value.
I am pretty sure I can name a couple of things that don't have value.
Go ahead, go for it.
Okay, caution.
5 cents.
Feebleness.
That's a sad one. $1.12.
I have a toughie for you.
All right.
What about us?
Me and you?
Yeah, did we have a price?
Yeah. 2 cents. We should have sold that one a long time ago.
2 cents?
Yeah, we could have made a lot of money on that one. Oops.
2 cents? I wouldn't even pick that up off the street.
Exactly. I think that's more on you than it is on me. Lord knows I'm trying. Hey, you know what, though? There's money to be made everywhere. Take you, for instance. Look at you. You're a young buck. What are you, like 37? I'm joking. How old are you?
I'm 26.
With your genetic makeup, you know, you're not putting on too much weight. I think you could sell those little lady eggs of yours and make quite a profit online. But I wouldn't wait too long. Next month, those would go down big time, especially if you keep eating the way you're eating. I gotta take off. Time is money.
Are you serious?
Yeah. Hey, look, can you get the check on this? I left my wallet in the car. I don't like to carry around bulky things. It slows me down.
Diversify your portfolio with stocks, options, futures, crypto, and more. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. tastytrade. Download today.
Global markets never sleep. Explore them with Forex. Now available on tastytrade. Get in on over 80 Forex pairs. 24 hours a day, 5 days a week. With the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on tastytrade.
What is theta? Options lose part of their value over time as they get closer to expiration. That's why they're called wasting assets.
Hello, everybody, and welcome to the Monday edition of the Liz and Jenny Show. My name is Liz Deerking. That beautiful brunette is Jenny Andrews. Happy Monday, Jenny.
Happy Monday, Liz. It seems like I haven't seen you in a while. Maybe because Friday we did the morning show and I haven't seen you since 10 a.m. Usually I see you on the train and after
Yeah, and I will tell you, you and I usually talk a lot more than we did this weekend. It was radio silence for both of us this weekend.
It was such a busy weekend. I hope everyone had a wonderful Mother's Day. It was just a busy weekend of activities and beautiful weather. So yard work.
Yeah, it was crazy. It was crazy. Yard work. My prodigal son has returned. It was fun. It's fun having him home.
I bet. How is JD? How does he like being home?
He loves it. He says he's very happy to be home, but he had a wonderful first year. So I mean, he's living the life. So no harm, no foul. Both my kids are now back working at the golf course. So it's golf all day, every day in our house because they both golf for free. So
oh, nice. Yeah. I just cannot believe. I feel like we were just on air talking about him leaving for college, and now he's finished. The 4 years that your kids are at college are going to be like the fastest 4 years. I mean, I cannot believe Logan's graduating next weekend.
I can't believe he's graduating next weekend either. That's insane. That went by in a blink. But yeah, so I do hope everybody had a wonderful Mother's Day. I'm so glad that your son's going to be returning too. We got to get those boys together again. They haven't seen each other in a while.
Oh, they should all go golfing together.
Yeah. They should.
Yeah.
He's got to come with JD. So that'll be. Go ahead.
I was going to say, you got a little tan over the weekend. You were working out.
Oh, no. Face, no tan. Back, lobster. I was doing yard work. I was making my kids do yard work with me, getting the pool and everything ready. Because, in the pool, it's just layered. In the spring, everything's coated with a layer of dust, right?
Yeah.
So we had to get out there. We repainted all of our plant. Every painter's box got repainted. So we were all leaning over. So our entire family has red backs.
Oh, well, that's fun though. I mean, it's nice to have it done. It's nice. I got my fountain up. I got the hot tub cleaned and ready to roll, and the fountain up.
I thought the hot tub was going bye-bye.
It's the yard project that I'm doing, which is going to include the hot tub going bye-bye, cannot be done until August.
Oh, okay, perfect. So you got one last hurrah.
Yeah, hot tub's back up and running. Fountain is up and running, and yard is pretty much ready for the year. But we did have gorgeous weather this weekend. Gorgeous weather.
Yeah, we did. We really did. So I'm glad the hot tub. Viva la hot tub for one summer.
One more summer. I'm getting rid of. For viewers who are older and like me, they might get it. I'm trying to eliminate work around my house. So I'm going to get rid of the hot tub. That's going to eliminate a lot of work. I'm getting rid of my fountain after this season. That's going to eliminate a lot of work. I'm getting these giant planters in place of the hot tub, which are going to be linked to my sprinkler system. So I'll never even have to water them.
I never have to water my flowers.
That's funny.
So yes, I mean, I'm joking because I've taken the other side. I've gone complete and total artificial, and I love it. I'm never turning back. And I've turned half my neighborhood into it as well, which is so fun.
It's funny how as you get older, you want to do less and less work around the house, but that's what I decided. I'm doing everything I can to make this house as maintenance free as possible.
Okay, so on that note, let's jump into the markets because this is maintenance free too. Every day just goes up and up and up and up and up. I mean, there's nothing you can do. Every day, can't stop, won't stop. Look at the spoos, up 22.
Well, and it's interesting because that's what I would on Friday. I would rather have been at my computer until 3:00 trading than out doing yard work.
Yeah,
100%,
for sure.
100%. I'd rather be at my platform trading than out doing yard work.
For sure. Yes. And so we've got a lot of stuff in this show. So we're going to do our market mover segment first, where we're going to take a piece of research from last week that Kai did, which was great, and we're going to recap that. We are taking live tweets with the hashtag LIZJNY on it, and we're also going to manage this account.
Yes, we will. But yeah, you're right. Let's do the market measures first. Friday, we did the morning show. So we did not have our show. Usually on our show, we do a recap of the weekly market measures. Just the anything important that we might need to know or you might need to know that we may have missed during the morning show. So this market measure recap has lots of valuable information. And we're going to do it today on Monday since we missed it on Friday.
Yeah, we are. And so we're going to take a look at that right now. I'm going to pop right into it. So it is 10:08. And the market measures recap, number one is VIX volatility. How fast does the VIX spike or drop? I thought this was a really good one.
I think this is interesting. And I'm interested to see what it says because I feel like the last few down moves where we had that long VXX, we had a long VIX position. It took market down, market down, market down. It took so many days to get that vol to really pop. And we never even got much out of that long VIX position.
We made something, but it wasn't much, right?
It wasn't much. It wasn't much.
I agree with you. All right, so let's do the first slide. Let me get in there so we can move it. Due to the heightened VIX levels at the beginning of this year, we've received many questions about its volatility speed. Will the VIX come back down to normal levels? When?
I think it happened already. I think we're just about at normal levels right now. But we have shown in previous studies that the VIX rises slower. VIX rises slower from lower values than high ones. The VVIX and VIX also show a strong correlation. So the VVIX is like the volatility on volatility. It's the
volatility on the volatility, right? And let me ask you this: where do you think the VIX is right now?
I think it's 17,
18.
18.
That's what I'm saying. Okay, so SPOOs are up 23, and the VIX is up 5%.
So now 18 is the average of the VIX, right?
Yes, it's 1802 right now. But yes,
so we're right at average. We're right at average VIX levels.
But if you see the market, like if you see the market at all-time highs, in my mind, it should be much lower.
But we talked about this last week, and we talked about this on the trading floor with some of the market makers. There have normally markets going up and vols coming in, but there have been so many call buyers out there, that the market makers have actually, bid up the prices because there've been so many call buyers out there. And now with the market up so high, the put buyers are probably coming in. So even though the market's at all-time highs, we're seeing a higher vol than expected. But I think because
right? Yeah,
I think we've got a lot of buyers on both sides, calls and puts.
I think you're right. Okay, so this market measure will answer these questions in detail and analyze how the VIX behaves when spiking or dropping 5 points, depending on its starting value. So this is where I was like, Jenny, what are they talking about here? This next slide, Jenny was talking me through, which was great. And I actually do like this slide. So it gives the starting range of the VIX, meaning 10 to 13. And so what is a 100% chance it's going to go up 5 points?
Within the next 24 days. So that's how I'm reading this. If the VIX is 10 to 13% of spikes greater than 5 points, 100% in the next 24 days. So that would mean VIX going from 10 to 15, which
is nothing.
Yeah, right. And percent of drops greater than 5 points, 0 when VIX is 10 to 15, because we've never seen it at 5 or 6. The lowest we've seen it is in the 8 handle. And that was very brief. So I get that. Now we're in that 16 to 19 level. So there's only a 50% chance, 50.
But look at that 16 to 19 level. It's a 50% chance of it going up or a 50% chance of it going down. That's that spot where it's anything goes.
Right. It's just a coin flip. It's like betting on, black or red. Who knows? The market could keep going up, and we could slowly grind. VIX can slowly come down. I don't think.
But we're grinding up, and the VIX isn't coming down.
I'm surprised that there's a 48% chance of it going down more than 5 points, meaning it would go from 19 to 14.
Well, that's that sweet spot where anything goes. And I'm going to let's go to the next slide, okay? So we can look at this. So now this is, if the VIX is around 20, that's what we talked about, there's a 50-50 chance of it experience a spike or a drop, because it's kind of it's that range where anything goes. Below that value, it's more likely to experience a spike. Above that, it's more likely to experience a drop. That's pretty interesting.
Well, and let's talk about how we can get that drop. If we're, coming up to Memorial Day, summer, we're doing nothing. Market's just kind of holding steady. Maybe we're up slightly, and nothing's going on. People stop racing in and buying all these options. The market will settle down. The vol will come in, and we can get into a very boring slump in the summer where we do have a VIX in the mid-teens.
And the summer doldrums are derived from options traders. I'm kidding. I'm sure it's from something else. But it is true. In the summer, notoriously, the volatility is low and there's not a lot of stuff going on, right?
Oh, in the summer, on the trading floor in the summer, there's, some beautiful grounds outside the building. And in the summer, most traders would be outside, sitting outside. Do you know how many traders I would see laying on those planters outside, just in the sun by the fountain, hanging out? Because in the middle of the day in the summer, it can get very slow, very slow.
I wonder if the zeros and the cheap insurance and the cheap shots is going to change all that. You know what I mean? I think having all these options to buy the inexpensive, meaning 0 days, the least duration days, might change that.
Maybe, but if we're not moving at all, if we're barely moving, I mean, we can get into a point where we're barely moving. Or, like we saw, there's a 52% chance that the VIX will spike more than 5 points, and we're going to have a lot of action. Who knows? Who knows what the end of May and June will bring?
True. Okay, but as the cycle duration increases, the average duration as a percentage of the cycle reduces. Thus, the VIX is expected to mean revert within 20 days or so once it hits its highest or lowest point in the cycle. So
I'd love this to be followed up with the study on, the whole sell in May and go away. Are we mostly down in June? Is June notoriously a bearish month?
I don't know. I mean, the sell in May and go away. There's lots of phrases from the trading floor like that, right? But I don't know. You know who that's a question for? Well, Mr. Christopher Vecchio.
Oh yeah, right. Or our research team, because they could look back at previous Junes and see. But I don't remember too many big down moves in the summer. Maybe just the August of 2015. I think it was August of 2015.
Yeah, but it was near the end of August, which is almost fall. Do you know what I mean?
Oh, yeah. I think it was like August. I think it was like August 24th or something.
Yeah,
like
the
that.
kids were back at school. It was right around my anniversary.
So I do remember a big down move in August, and I can't even remember if it was 2015. I'm guessing maybe, but that sounds right. Because I think we had that big down move that August, and then our next big down move was like December of 2018 or 2019, and then we had COVID. But
oh yeah,
so I don't remember a big down move in June or July.
Yeah, no, I kind of agree with you, but we'll take it to people smarter than us and see what they have to say. And so let me get back in this. So to kind of go to the next slide, the takeaways. As the average VIX increases for that year, there are more large price moves.
Yes, the VIX does take longer to move at the same point amount when starting from a lower VIX compared to a higher one. This pattern occurs both when the VIX spikes or drops.
And if the VIX is around 20, there's a 50-50 chance of it experiencing a spike or a drop. The VIX is expected to mean revert within 20 days or so after a large point move, 1 month cycle. Another reason why it's important to keep duration longer for our trades.
Okay. So we're not expecting, can you go back a slide or two? I just want to take a look at when the VIX is so high. Go to the slide before. Okay, so when the VIX is greater than 25, you've got a 76% chance that within 11 days, the VIX is going to drop 5 points. I think that's important to see. So when the VIX is high and everyone's panicking, there's a 76% chance within 11 days, VIX is going to settle down and the panic will end.
Yeah. And we'll usually see that. You know what, Jenny? Let's go to just because we like to put our money where our mouth is. I'm just going to go before we wrap this up. Let's go to the VIX right now. This is what I was saying. It's exactly at 18. I was surprised by that. And we're going to take a look at the chart, right? So you had a spike up to 34, and then within a month, it's back down to 20. It's happening.
But look what's so weird. This is what's so weird, and I don't understand what's going on. Or maybe there's news this week or meetings or something going on this week that is causing this. But you see, the jump is today. The jump.
That's what I'm saying. It was 17. It was 16 yesterday. It's 17 today. Nothing adds up for me with this because SPOOs are up 20. If I didn't look at the VIX, that's why during this cycle we see SPOOs up 22. I was like, Jenny, where's the VIX right now? And you said 16.
I was 17. This is like 16, 9, 17, because that's where we were last week. So if you go on last week and look at Tuesday, Wednesday, Thursday, or Wednesday, Thursday, Friday, we were all right around 17. And today we jump up to 18 on a Monday. Why? I don't know. Maybe there's some big news coming out this week that I'm unaware of.
But you know what this tells me, and I don't know if this is right or wrong. I don't know if there's news or not news. I don't really care. But I do tell you, when I see the market up, VIX up, I close things quicker.
Usually the VIX is a tell.
That's what I'm saying, because we've seen this before where everything's up, and then it gets killed at the end of the day. And it's usually the VIX that shows it. So all I'm saying in my mind is that guess what I'm doing right after the show? I'm going to get in, I'm going to batten the hatches for last call.
Batten down the hatches. Right. So we've seen it before where with the market, we saw like VIX up when the market wasn't doing anything, or VIX up when the market was up. And we thought, geez, that's weird. And then later that day or later that week, the market was down. And then we thought, maybe we should have listened to the market.
Yeah, the market's smarter than we are. for sure.
So maybe you're right. Maybe it's time to batten down the hatches.
I'm battening down the hatches at exactly 11 o'clock our time.
All right. Well, that was a good market measure recap.
Okay, now let's manage the account before we jump into Twitter, if that's okay. I know we wanted to look at NVIDIA. Here we go.
Yes, so we had this diagonal going, and we had a short. I think it was like the 217 or something, and we moved it. We were able to move it up and out to the 225.
Yep.
Yes.
Yes. 225. So that's good.
And now NVIDIA continues to climb. So maybe we take this money out. Can you look at our order chains in NVIDIA? I know we had a losing earnings trade.
This is the 365 days.
And I just go back like 30 days because I know we had a losing earnings trade. And okay, great. And we made our money back. Excellent.
We're on solid footing.
Excellent. Take that $519 in NVIDIA, and we ended up digging our way out of our losing earnings diagonal.
So that's good. So that is NVIDIA.
Yeah, that was great. And look at Hood. What do we have in Hood?
Oh, I do want to close.
Oh no, forget it. You don't even need to. What do we have?
OKTA. I know this was a roll because we collected $5 for it, but we're almost at 50%.
I mean, we've won on both OKTAs. If you go to order chains and OKTA for the last 30 days, we had a put, moved it up, and now we have another put. So we made $216 in the last 30 days. Yeah, maybe that's just this. Maybe we never got filled on rolling it up.
I don't think we got filled on rolling it up.
No, we can close it again. Batten down the is it batten down the hatches?
Yeah, that's what we're saying. That's how. Batten down the hatches, because guess what?
I'm gonna look up the exact like where that came from and what that means.
It's got to be on a boat, right? Batten down the hatches. So we've the great thing about trading is if our intuition doesn't come true, we can jump right back in and sell another put tomorrow in OKTA. It's not the end of the world.
All right, batten down the hatches is an idiom meaning to prepare for difficult times, trouble, or an emergency. It originated in the early 19th century Navy, you're right, referring to securing a ship's deck openings, the hatches, with wooden strips and canvas to prevent flooding during a storm. So,
batten down the hatches.
Batten down the hatches. That's another thing I decided this week. I'm selling my boat. Putting it for sale. That's what I'm gonna do. I'm glad batten down the hatches reminded me. I'm gonna call the boat dealer right after the show.
So as of last week, you were keeping the boat and getting rid of the hot tub. This week, you're keeping the hot tub, getting rid of the boat.
Well, I have no choice. The guy who was coming for the hot tub isn't coming for it till August.
I get it.
But the boat, I mean, this might sound insane, but I would just wanted the only one. Nobody in my house wants to keep the boat except my son. So I said to my husband, if he doesn't call me until like afternoon on Mother's Day, I'm selling the boat.
What time did he call you? 12:01.
It was like 12:01.
I mean, honestly, it's probably it's good to get rid of it.
Oh yeah.
We've crashed it once.
Nothing but trouble. Nothing but trouble. Sorry, Mike.
Crashed it once. Oh my God, that's funny. I want to bring your attention to natural gas. Hold on, let me get rid of this stuff. Natural gas is up. Look at this chart.
I know. We could take our $80. We could take our $80, or we could butterfly it off.
So I think we should take our $80, but we're going to go through the process, right? So what did we sell this for?
$14. For $140. $140.
Okay, so we can make $80.
Hey, or I mean, 40, 50, 60. We could lock in $60. Let's just lock in $60.
Yeah, lock in 60 for the chance, right?
Yeah. Okay. If we can get it for 8 cents, so if we collect 140 and we
I'd love to get it for 7.
Yeah, I mean, right. Then we'd lock in $70. You're getting crazy. You're getting nuts, Liz.
So I will. $60 is okay to lock in. It's wider markets. We're 6 cents at 10 cents, it's a very, very wide market because each one is $10. Okay.
We're only giving up $20 for the chance.
For the chance, right. Okay, so what we're doing is I'm buying back, we had a broken wing butterfly. Mm-hmm. You're buying back the broken wing, the 245, and you roll it up to make it a complete butterfly. And we have to make sure that we're paying less than the price of what we collected. So we took in 14 cents. We are paying 8, so we lock in 6.
So we put it on for 0.014, which is $140. Now we're turning this into a butterfly, taking risk off for 0.008, which is $80. So we're locking in $60.
And
yes,
see if we can get filled. This isn't something we need. I'm not going to chase this because right now I would be happy taking my $80 either way, right? So I'm fine with either.
Look at that. American Airlines can't keep its wings up. Up last week, down today. And
I do think all these airlines, though, are directly affected by the price of CL.
Yeah.
And so they're calling for.
We got oil almost back to 100.
Yes, oil almost back to 100. I mean, the Gen Pop news stations are calling for oil at 150 again.
Are they?
Yeah. So we'll see. And they can say whatever they want to, right? So like the airlines can claim, I mean, I'm sure it is affecting them, but they can claim whatever they want.
What do we have in Robinhood? Is that just a put? Is that, well, no, what the heck is it?
It's a Bob on Fire.
It's a Bob on Fire.
Hold please. So, I received an email and I'm going to link this show to it. They've scoured the internet and cannot find what a Bob on Fire trade is.
Okay. Let's put a new Bob on Fire on somewhere else.
Okay. I was also going to link the YouTube for the Bob on Fire that we did to that email so they could see it. Because I know there is a YouTube. If you go to the Tasty Live, can I try to find that real quick?
Sure, good luck.
I think I can do it. Tasty Live YouTube. Videos. Can I search in here? I'm going to go Bob on Fire and see if it comes up. I love it. There it is.
This trade costs nothing. It makes $3,200 if the stock goes up. Here's how to do it. And that came up by searching Bob on Fire.
Yes. Okay, ladies and gentlemen, just go to Tasty YouTube, Tasty Live YouTube, type in Bob on Fire, and bada bing, bada boom.
There it is.
Pretty good, right?
Do you remember what we did this one in?
No.
I don't either.
Oh, it says right there. We did it in Marvell.
Oh, okay. And
because NVIDIA invested in Marvell. So because NVIDIA invested in Marvell, we did Bob on Fire in Marvell.
Okay.
Yeah. Pretty cool, huh? All you do, type in, scour the internet right there. I don't know if you actually type it into Google if this will come up, but it's there for the taking.
I don't know. Yeah, if you go to Google, well, I'll try it later and type in Bob on Fire to see what.
You know what? You can't stop me. Hold on. Bob on Fire trade. Oh my God.
Oh yeah, this trade costs nothing. Makes 32. Okay. And it doesn't cost nothing. There was buying power in the trade. There was the selling the two puts. I mean, we put it on for even or a small credit, but there's the buying power. It's not like it's free to put on.
We did not title that. Somebody else.
No.
So I thought that's pretty cool. Okay. So that's a Bob on Fire trade that we have in Hood. You can also see it in the video that we did. But take a look at this, Jenny. I'm going to close natural gas so we don't have to look at it. Hood is up. Why is it not hitting Hood? There we go. Hood is up.
It's $8 since we put on the trade.
Yeah, we know because our 70 call, it's a 70 level. It's up $8 since we put on the trade, and we're up about $4. That's exactly what you should see in a Bob on Fire.
It's about half. And we took in a nice credit when we put this on. So we took in a 335 credit, and now this trade's trading for about even. Let's just take that in Hood, I think.
I bet, because we're battening down the hatches. I mean, this is work.
Take winners. This is how to reduce risk. Take winners off.
And then once you close a trade, they can't take it from you, meaning they can never take our profit from us from that trade once you close it. That's what's nice about that.
Right. Okay. And what else do we have to close in here? Oh, no, natural gas. We did get filled on that roll. So
good.
That's good.
We closed OKTA.
And Microsoft, I'm half tempted to close that because I know, or do we need more? Maybe we need more.
Microsoft, this is going to be Jade Lizard-esque is my guess because we've got $20 on the bottom and $5 on the top.
And I know we put this on, same thing, we did a diagonal. We did an expensive earnings diagonal in Microsoft. And we did this to try to make some of our money back.
Honestly, let's leave this because it's smack dab in the middle. We have GTC in for 50%.
I just know there's a lot of risk because it's a $20 wide put spread.
Yeah, it is a big put spread. We just got back a little bit of buying power too. I think we're done in the management techniques. IBIT is doing its job right now. We're not going to, I don't think we would ratchet this yet. We have a Zebra, which is a zero extrinsic back ratio, a stock replacement in IBIT, just to kind of take a look at it. I don't think we'd ratchet it. You'd buy back one and sell another one.
It's so close. I don't think we'd get much credit.
No, we're only up $40 for it, so we wouldn't be getting much.
What do we have in coin? I know it says we're only up 24%. I'm just curious. Is it just a short put?
No,
put spread.
It's spread.
It's put spread. That's fine. Leave the 50% in at coin.
Okay.
Okay. Yeah. How's Annabelle doing? Did you get her account up and started yet?
No, it's not funded yet, so I can't link it to her bank account. We're working on it. That's my goal for today. Sasha and I are gonna work very hard as soon as this show is over. They require something else when you link it to the bank account. I didn't have to do it for my son, and I didn't have to do it. She needed a selfie with her ID, and I couldn't get her and her ID together in the same room to take the picture for a while.
Oh, that's how
yesterday.
Logan's is just totally his, linked to his own bank account.
So that's how this is. It's her linked to her bank account, but they needed her ID and her in the picture. This is new.
So with it being linked to her bank account, so I know for Logan, and again, Logan takes a lot of risk in his account. He usually is he used to be all in, all buying power in. So he takes a lot of risk. So at some point he had a margin call, and when he had a margin call, I couldn't send the money over. I couldn't say I'm sending the money in because it's linked to his account. I had to, and his account was small. This is when he had his $5,000 and he was just starting. It wasn't long after he started that the market took a turn, and I threw another $500 in. So I had to zell it to him and in his account so he could zell it over.
And that's always how it works. You can't do it any other way.
Yeah, and you have a choice. With a margin call, you could take positions off or you could add more funds.
Yeah.
And I added up because I got a lot of questions. On how much money did he really ever put in over time? And he started with $5,000, and I think twice I zelled him over another $500. So I think we put in about $6,000 total.
That's pretty good.
And you said you think you put in maybe 200 or so.
A couple $100. I mean, nothing. Every birthday I would give him. So for three or 4 years, every birthday, that's what he would get, is money to go into his trading account. And he was such a good kid because I told him, I would text him, I'd be like, send me a screenshot of these positions. And he would. So he's a good kid.
But so if it's linked to Annabelle's account, her bank account, the money can only
I know that's true. All I'm saying is they added the extra step where, because it's now Tasty step is they need a picture of you holding your ID with your face in it.
Oh, you holding it.
Yeah, so that's the problem. I couldn't get her because she was so busy because she's graduating. So I finally took it yesterday, and then I'm going to do that today.
No, you didn't have graduation's next weekend, right? Or
it's Friday.
Friday. Yeah.
Friday, and then they get locked in. So I texted Vanetta. I'm so happy for this. My daughter in the yearbook, they only give away X amount of things. Most likely to become president of the United States of America.
It was so funny because you texted me and I read it out loud. Lily was here and I said that the Annabelle one most likely to become president, and Lily's like, that makes sense.
I think it does. I mean, everything she's run for, she goes, I'm not going to be president. She said she's 7 for 7, everything she's ever run for, becoming president. I was like, okay, let's pump the brakes here, sister.
Oh my gosh, that's cute. Good. And it for sure. And she's been a wonderful president of every activity she's ever been in. The kids love her.
It's pretty weird. Okay, so that being said, let's jump right back in here. I wanted to make sure we have nothing on an SPX right now. Now mine came off. I put the zebras have been coming off. So we have a choice. Let's pop out our SPX.
I don't know, but we just talked about what the only thing that makes me hesitate is the VIX.
I know. It's the only thing that makes me hesitate as well. So take a look at this. We had a zebra on the 7th. It came off on the
Jade Lizard.
I'm sorry, Jade Lizard, not zebra.
We couldn't afford an SPX zebra.
I don't know anybody that can. So we had a Jade Lizard on the 7th. It came off on the 8th. Then on the morning show. So our GTC hit on the morning show at 9:00, and then we also put on that put spread for 140 where we just let it go. Remember that?
And we let it go. Great.
And we let it go. So I agree with you that the VIX is very dangerous, Will Robinson, right now.
Just the pop up in VIX to 18.
It's back into 17.
But it doesn't make any sense to me. It doesn't make any sense. Like, go to Frank's calendar. Go to Frank's calendar and see what the heck is going on. Like, or Josh, text me. Josh, like, is there news we don't know about? Why is the VIX up today?
It's call buyers. 2 best days of owning a boat: the day you buy it, the day you sell it.
I know. I feel bad, and Logan's going to feel betrayed, but I just don't want to deal with it. I don't want
I'm not going to lie to you. It's also good that you're getting rid of it. He's 22 years old, which is great. And he's a very, very trustworthy kid. But you'll sleep better at night knowing that he's not on the boat.
Oh, the worst day was when I got the phone call. It was like my worst panic when he had, I don't know how many friends, 5 friends out on the boat, like him and 5 friends on the boat. And he called me and he said, we're in the middle of Lake Michigan and we can't, they like docked, anchored, parked, playing the music, and didn't know there's like 2 batteries, whatever. It's tricky. The battery situation on boat is tricky. You switch to 1 battery if you're going to sit and listen to music, then you put them both back on while you're driving to charge them both. But they were both batteries dead, middle of Lake Michigan, and to get a boat tow was going to take like 5 hours.
Oh my God.
Yeah. So they were in the middle of the summer, stuck in the middle of Lake Michigan, waiting 5 hours for a boat tow. Some kids like swam to the closest beach that they could swim to, but you can't. Then if you're in a boat, you can't take your phone. Now I have like these waterproof bags that you put your phone in if they have to swim to shore.
Yeah, right. Yeah, so it'll be you will sleep better as a mother.
I think so. Yeah, as soon as I agree. Yeah. There's one person I blame for me owning a boat. His name is Summertime Ken.
Oh, I thought you were going to blame Mikey. I don't know. I thought for sure.
And Tony Batista.
I thought for sure this had Mikey's name written all over it.
It kind of Tony Batista. He was an encourager of buying the boat.
He bought Vinny a boat. Now it's different. Theirs is in Florida, so they don't use it that much. And I do think they're in inland waters where Lake Michigan is crazy.
I know.
Yeah, Lake Michigan is crazy. Okay, so here's Frank's economic calendar because we asked for it, but Josh did say Trump said Iran's proposal. I love Josh. That Iran's proposal to end the war is unacceptable. That's why VIX is up.
So that's why VIX is up.
Yeah,
VIX up.
So we took off a lot of stuff. I'm putting on the SPX Jade Lizard.
And what did Fazia come in with? Fazia, happy Mother's Day to you and all the mothers that watch our show. The QQQ SPY pair is a bit out of whack. Normally around 26, now around 80. Sell Qs, buy SPY. I don't mind it, Fazia. I don't mind a Q SPY.
I don't mind it. That's not going to give us any buying power relief.
If you're in like portfolio margin, it would, but not in this account. Like so buy Qs, sell Qs, buy SPY. I don't mind it. I really don't.
I actually kind of like it.
I do.
You know what? Let's go back into the platform. And I'm just going to go to the.
You could do Zebra, and TP and I talked about this. Like you could buy a put Zebra and Qs.
Very expensive.
It would be very expensive, but you could buy a put Zebra and Qs and you can buy a call Zebra and SPY, and those would be very expensive too. Like we can't afford that.
Yeah, that's what I'm saying. But what we could do is baby trades, right? So if I was let me go to the trade page, trade table pairs, because we could do.
They're the same price. You could just sell 1 share of Qs and buy 1 share of SPY.
SPY Q.
Right. Really, just buy 1 share of SPY, sell 1 share of Qs, and this is our baby trade.
It's using $726, which is fine. If we need it back, we'll take it back. But I would like to watch it.
No, go to the pairs. Go to the chart just so people can see what she's talking about. How look this pair is so down to 30. She says usually around 80. It's usually a pair. It makes sense. I was thinking of a pair myself. I don't know if you want to see it.
Sure. I'm going to send this, though, because we'll be in it with Fazia.
Yeah, ship that one. Okay. So I was thinking of a pair of, and this was Logan's idea, buy AMD, sell Intel.
Now they're not the same price.
No. So let me see. 461 divided by 126. It's 3.6. 3.6. So
I'm going to go 3.
Sell 3 shares of Intel.
You know what? No. I'm going to go 2 to 5. Right?
Yeah, let me see that. So 461 plus 461 divided by 126.
That's the most notional.
7. It's 2 to 7.
2 to 7, right? Okay, 2 to 7. Then that's the most notional to notional we can get.
Does that make sense? Because okay, I'm gonna do this. So 7 times
1.2
126. 7 times 126 is 882. Yeah,
Perfect.
2 to 7.
2 to
So
7.
sell set Intel, buy AMD. And this would be the ratio, and you can make it any ratio you want. And again, this is not my idea. This is Logan saying.
I want to hit review and send. I want to see how much it is. It's only $126. Oh, buying power effect is $900. Yeah, buying power effect is $900.
So I don't know.
I have no problem pressing the button, but you have to tell me if you want to do this or not, because I don't. It's very hard for me to short Intel.
I don't know. It was just a thought. But we don't have to put it in. I'll put it in and watch it. I'll let you know how it goes.
I mean, it's very low risk, I think, but I also think we have our Qs SPY in.
Yeah.
We've got one pair in, which is pretty good. So I'm gonna go back to the SPX and I'm gonna get a certified badass card. So we're gonna go to the 4-day because what I'm not gonna do is what I'm not going to do is the 0-day. That's the one thing that I wouldn't do with the VIX, right? So anything can happen right now, and that's why, because the VIX is up so high. But the 4-day makes me feel a little bit better. So I'm going to go $20 wide on the bottom. So we get $3.35 and $5 wide on the top. $4.55.
Sure, ship it.
So this is a Jade Blizzard-esque position. We've got a $5 wide call spread on the top. We've got a $20 wide on the bottom. We understand that it's going in as an iron condor. We are well aware this is a Jade Lizard. We're trying to eliminate as much risk as we can to the upside.
Now, I will say, I like that when I've been putting these on, I've been pulling the call spreads down and collecting 5 because every single time, Liz, it's gone through my call spread. And then I don't know. I haven't worried about it, or I can leave it and think, oh, what if we come down? Because I'm not taking a loss to the upside.
Well, you know what was crazy is, and it was a viewer, I think it was on TikTok Twitter, that somebody sent to us where they said, just take $50 or $60 out of this. Then it never goes through your call spread.
I know, but again, be mindful of fees because watch when you push that button.
Let's look at this. Okay, so you've
got 4, 5, 6, 7, and then 8, 9, 10, $10. So $10 round. You've got 7 on the way in and 3 on the way out. So
yeah. So if you take $60 out of it, you cleared 50.
Yeah, that's fine.
It's not bad. I'm just going to ship this. We're going to keep an eye on it. I just wanted to be, give ourselves a little bit of room there. These have been working in my account. Mm-hmm. I put one on Friday. It came off today for 50%. But once again, we're up today.
Can you do me a favor and go to the trade page? Someone asked me about this and I just want to walk through. If you go to the trade page and go to the 21-day.
You want SPX or do you want something else?
Yeah, SPX. Just go to the 21-day. So these monthly, I'll put the 45-day iron condor on. So at the 21-day, I'm managing them. Go to I've got one that's right there, right in the money. So just go to the 7420. Bring it to the 7420, 7420, 7440.
Okay.
So if this is what I'm doing, and right or wrong, I don't know, but this is what I'm doing. When it gets to the 21-day mark, I'm taking this and I'm rolling it, and I'm rolling it to the 45-day. And if you go to the 45-day,
same.
And I'm just trying to roll it for even. I'm rolling it for even, and I'm making it $25 wide, so then I can move it up.
Wait, hold on.
I can move it.
Here you're taking in a credit, but I understand what you're saying.
Yeah, and I'll make it try to move it. See if you can move it to 74.75, 74.50.
74.75. Okay.
74.50. And you're still taking, so I'm able to go and maybe try to move it to the 74, 75, 7,500. You can, the cool thing is that if you take this out,
you're still taking a credit.
And you're still taking a credit. So I'm able to move it out and move it. I'm just trying to move it as far as I can and not even taking a credit as far as I can.
So here you're going at 7,500, 7,525.
So isn't it, and you can only do this when it's just breaching through. Move it further away.
Now this I went to 30 because you're kind of, no, this is 25.
Right. So you see, you could still move it a decent amount away. And every time it gets to that 21-day mark, if it's through it, I'm moving it out.
I like it.
Yeah.
That makes sense because you're following the mechanics of what you would be doing anyway, right? Mm-hmm. You're putting them on at 45 days. At 21 days, you're rolling it out in time.
And then with these, because on the original one, I'm collecting about $8. I'll add on a put spread, but I'll add on like a $10 white put spread. I'm not rolling these out and up and rolling. I'm adding on a narrower put spread. So
No, I get it. I think that's good, and I'm glad we walked through it on camera because it's good for people to see how you're managing it.
It's hard to realize, like, oh, you can get so far and still take in a credit, or get so far and move it so far up, just going out from the 21-day to the 45-day.
Yeah, you can. You really can. That's but I mean, even if you take a look at, and I'm sorry we're jumping around a little bit, but even if you take a look at, I think that's a good management technique. Even if you take a look at the 4-day versus the 1-day, how much farther you're getting in SPX. That's why I understand the VIX is higher, but these like shorter term have been working. So we're going to try to take, I'm actually just going to try to take $100 out of it if we can get filled on that. But you get a little bit further. Going from 21 days to 45 days in SPX is an eternity.
Oh,
meaning you have let's just show that real quick. I'm gonna go. The 4-day expected move is $86. Just because we were on it. Then if you go to the 21-day, the expected move is $200. Okay, and then if you go to the 45-day or the 46-day, wherever we were, it's $325.
I know.
Those are big moves.
And that's why you can get yourself a little further away. And the only way I could do it is by adding another $5 on, moving it from a $20 wide to a $25 wide.
Yeah, and that's okay. I mean, there will be one moment in time, in the words of Whitney Houston, that you'll be able to take that off, even if it's one day.
So now that's all I'm having is like these, call spreads, rolling them out and up, out and up, out and up. But then if it breaches again, I'll roll it out and up. But if it breaches again, am I going to make it $25 wide to $30 wide? I don't know. At some point, this rally's got to settle down.
So I'm just going to take 25% out of this one because that's what we've been doing in ours.
Sure.
Okay. So we got that SPX. I think that's a good move. I think that's a very good move going out and up with it. It is 45. I'm going to go to Twitter real quick. I know we already popped in. We looked at Fazia's. We looked at Frank's. Bob
we put Fazia's on. We put on that pair.
And I saw Ajit. Ajit was above Bob on Fire. So we will get to Ajit. But take a look at this. Hims. Do you have Hims still?
Ooh. I have a Bob on Fire in Hims, and it's through the call spread. And I thought, well, I'm just leaving it. That's one of those that I took off everything else and I just have a Bob on Fire.
So let me ask you this. And I really don't know the answer. Bob on Fire is new to us, right? Newer this year. Mm-hmm. So would you take it off because of earnings? Because you've already made money. If it's through it, I know you've made money.
Right, but half. So if it's the $20 wide call spread, I made $1,000.
Right.
And I still have another $1,000 to come out of it. So I don't know. Because when I put it on, I thought I'm tired of dealing with Hims or thinking about Hims. So I put it on in January and said I'm not going to think about this until January. For this a winner or loser, I'll close it then. So I'm not sure.
I know that's what I'm saying. That's a trickier one. Like, I don't know. I mean, and especially it's Hims because you've been in Hims before. If I had one that I wasn't that sure of and I've got a Bob on Fire in it, I might take it off before earnings. But like you said, you don't mind.
Look at JD. JD's got earnings.
JD's got earnings tomorrow morning because it's a Chinese stock, I believe.
So let's do a couple trades.
And so OnCloud has earnings, JD has earnings, I don't like that symbol at all. Mara, I didn't know Mara had earnings. Rigetti I was interested in this morning, but it's so cheap. It's only $20.
Well, let's take a look. Let's see if there's any premium.
Okay.
And I'm curious, how far can we get down on with puts in Hims?
In Hims? Okay, we don't have Hims, right? Let me just make sure. No, okay.
If you go to the trade page, 59 rank, I'm just curious, how far, $5 expected move.
I mean, if you want $1, you can go to the 20. You can go.
But you know how I said through my call spread? Look at the chart. Like Hims was down to 15, I think. Yeah.
Yeah.
I think my short call strike is like the 28.
So this isn't about, look at the return on capital here. You're only using $260, which is great to get $76. I don't mind this. I'm actually going to go to the 27 for $1.
Yeah, that's fine. That's fine. At some point I said Hims was dead to me, but or do a downside ratio spread for nothing, and then if it goes down,
if it goes down, we're going to capture something. I'm going to buy the 28, sell the 26.
Yeah. Just put it on for nothing.
We're taking a slight credit in. If it goes up, great, no harm, no foul. If it comes back down, we can catch it a little bit.
But I mean, HIMS was down to 15.
Yeah, let's not. I don't know. I don't care that much for HIMS. So,
although I saw an ad today, they have like a Wegovy pill.
Oh, they've had that for a while.
Well, maybe it's something new. Something popped up on Facebook. Some kind of I don't know. They come up with lots of stuff.
Okay, let's take a look. Let's take a look at something else because I kind of agree with you. It's dead to Jody.
I told myself I was not going to mess with it. I lost too much money in HIMS last year.
And I've never cared for it. So let's go JD. $30. I think we have a position in JD.
No, we don't anymore. Let's just put on a Jade Lizard. I think Jade Lizards and JD are good. Whoa,
there is no premium here, Jenny.
No,
I mean, none. It's a 56 rank, but there's still no.
No, you can't.
No, like take a look at this. This is stupid because you have a chance of making 50 cents, but you're using 1,000. If the wheels fall off scenario, you have to hold this to the tune of $1,000. When we were just in HIMS and it was only holding up 260.
No, I can't. Are you surprised that there's no premium in JD?
Yes and no. So I'm in JD, but you know what's crazy is because there's no premium, I'm just sitting long stock.
Yeah.
I've opened it up so many times and been like, I don't need 30 cents that way. Do you know what I mean?
Exactly.
I've opened it up so many times and been like, do I want to sell this call for 40 cents? No.
I know.
So that's why I'm not as shocked, but I'm shocked, but not that shocked because I was like, why am I just in stock? Because there's no premium to sell.
Yeah. So as far as the earnings go, Rigetti, let's take a look at Rigetti.
Yeah, but it's so cheap.
How cheap is it?
It's $20. So when you take a look at this, there's nothing there either. I guess you're getting something for the 19. And it's good buying power.
But so before we were doing like diagonal. Do we want to look at some diagonals? They'll be pretty cheap.
What I was looking at was the diagonal, and I was like, oh.
There's not going to be a ton of profit potential, but it's going to be cheap.
Okay, so I'm going to go to the 23. Let's try to get 23.20. So we're paying 140 for that was. It's kind of problematic.
I know. Maybe there just aren't any good earnings right now.
No, there's not.
What else? Look at Bob's list. What else is coming on?
I did want to go on cloud. So on cloud has a $3 expected move. My kids still love their on clouds. Oh my gosh. When I went in for mom's weekend.
Yeah.
Every boy there was wearing white on clouds. Every boy there. And I'm talking 170 of them were wearing white on clouds that were so freaking dirty.
Yeah. That's what
I couldn't take it. I wanted to wash all of their shoes.
That's what I was going to say. When I go to see Logan, all the kids' shoes are dirty because they get beer spilled on them in the bars. Like the bars are so crowded, everyone's spilling beer.
I was like, give me all your shoes. Give them to me right now. I can't take this anymore.
Every year at Christmas, Logan would just get new boxes of white shoes because they all wear white shoes, but then they get filthy.
Yeah. I mean, the on clouds are great because you can throw them in the washing machine. So he's got a couple pairs and he swaps them out, but you can wash them. That's why I was like, give them to me, throw them in the laundry. But we're not good. I don't know if we're going to do anything. Let's take a look at where they've been. It's down, down, down. I don't know if I want to jump in front of that train, but let's take a look at the markets are too wide. Look at this, 44 cents at 78.
I know. Let's go back to Twitter. See what other tweets are coming in.
Oh, we got to get to Ajit too, because I know he had tweeted earlier. Here we go. Oh, he's in Western Digital. Western Digital.
Well, that's expensive.
It's $515, and he's selling what put is he selling? The 515. No. He's selling the 410 put. So he's in June with the 410 put collecting $14.
$14, but Western Digital is scary.
I know but I gotta tell you, on paper, let's take a look at this.
I mean, Ajit, again, if I had my certified badass card laying around, Ajit gets it. He gets it every time.
He gets it every time. But he's going to the 410. So the expected move for the cycle of the 38-day, he's getting $1,400 and putting up $4,100. But this is scary.
Yeah. Ajit, it's too risky for me. Too risky for me.
But I like it, and I like that Ajit puts everything out there for people to see. It's great. He's very, very, very organized in his thoughts.
Okay, so single G. Based on your experience, does it make sense to roll short puts of a strangle to a straddle when a stock keeps going? And I'd rather go further out in time. then it reverses in the it's called the whipsaw. Like if it's blowing through your call, and then you're rolling up the put, and then it's blowing through your put, you're losing to the upside and you're losing to the downside.
Hold on, his example was MU. That's been a slingshot up.
I mean, I don't know when I had trouble during the GameStop meme stock, and I had short calls in XRT, right? XRT, the retail ETF. Yeah. What I did was take my short calls off, buy those back, and put on further out in time, like put Zebra, which would be super expensive in Micron, or like put diagonal or something super out in time, so that if it came back down, you can make some of your money back. But if it kept going up, your losses are capped, because at some point you can't take the bleeding anymore.
Yeah, at some point you're tapped out. Let's take a look at MU, and then I just want to show this, and we will get to I'm going to go back to Twitter too. But this is what we're talking about.
It's insane. It's totally insane. It was up $100 on Friday.
It was $50. Like on this chart, you don't even have to scroll. It was $100. It's now it's going to be $1,000.
It was up $100 on Friday.
Hit that bar.
I mean, it's ridiculous. So it's crazy. It's crazy.
I know.
And so go to the trade page. Like, let's just price out a put diagonal. Because if I had short calls, I'd take them off to stop the bleeding and do something else that would be defined risk.
I mean,
no, you can't go forward. You got to go further out in time. Like, you got to have something further out, because who knows when this is going to turn.
So you want a put diagonal. So I'm going to sell.
Sell the 600.
This is going to be crazy.
And then buy the 800.
$10,000.
$10,000. How wide is this? So
it's
600.
Basically,
$10,000 make $10,000, and it needs to go so far. There's nothing good. It's impossible.
There's nothing good in MU. This is the impossible trade, right?
I mean, maybe I'd buy a put spread and sell a call spread to pay for it, but I single G. I don't know what to say about people who have short calls in Micron. It seems impossible. I think that's why Liz and I, you hear us all the time say we don't like short calls, because you just don't know when it's going to stop.
You don't know. It's so tricky when they become meme like that, or not even meme, but when they're going straight up like that. And then I'm just keeping an eye on the time, because we are out of time. But Steve, maybe you can have somebody from TT Account Services on the show explain why TT is now. That's a great idea for them to do in the morning show when they have somebody from there. My daughter's having problems withdrawing because her selfie. It's new. Like, this is brand new. My son did not have to do this a year ago. He had to take a selfie, which was crazy. So yes, Steve, we will see what we can do for the morning show, because they always have
ask like Quentin. Hey, why don't you is Quentin on Twitter?
I don't think so. I don't think so.
But do they still have people call into the morning show?
Yeah, but no, they always have somebody from there, Tasty Trade on in the mornings. You could ask Quentin, you could ask Marty, you could ask all those people.
Yeah, and you could call just call support. Someone always answers. There's always someone to talk to.
Yeah, for sure. And then I just wanted to take a look at this.
We're out of time, Liz. We're a minute past.
Ooh. All right. Everybody, have a wonderful day, and remember to trade small, trade often.
Laugh with us, learn with us, and watch the Liz and Jenny show. We'll see you tomorrow.
Tasty Trade's active trader interface makes futures markets your arena. Built for the bold, not the bored. Trade CME futures with a single click. From micro contracts to major ideas. And go even further with futures options. Tasty Trade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. Tasty Trade, pro-level tools, intuitive design, total control.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
First thing about Tasty Trade is how easy it is. It's a very quick, light platform. It's all on one page.
And with 1 or 2 clicks, you can be anywhere on the platform.
Being able to see graphically where your profit and loss zones are.
Whether it's a pool, a puddle, or a sea, you can navigate your way out of it with the Tasty platform. So I love that. You guys have the most unbelievable customer service in the business.
Email support, call support, get through right away.
They actively listen to the customers to make changes to the platform to make it better.
In fact, I've never seen anything like it in any corporation in the United States.
Think you know where vol's gonna go? Test your theories with backtesting. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial the DTE, stack the legs, see what survives. Trade what you want, when you want with Tasty Trade.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
We built Tasty Trade's web platform for today's traders. Drill into data, find opportunity, and track the action with hundreds of indicators. Fund your account and start trading right in the app. Join the club. Tasty Trade.
What's up, Tasty Nation? Welcome back to the show. This is Options Trading Concepts Live. My name's Mike. I'm here with Ryan Grace. Full Tasty Crypto Takeover. How you doing today?
I'm doing well, Mike. This is going to be hour 4 for me today. I sat in for Nick as he's out. So Tony and I did Tasty Live this morning, which was a lot of fun. But yeah, we're here. We're going to keep it going.
Love it. Yeah, lots moving, lots shaking. Happy belated Mother's Day to all the mothers out there. Hopefully you had a glorious day yesterday. It was like perfect weather in Chicago, 70 degrees, not a touch of wind.
It's been almost summer-like.
Yeah.
Here.
But this morning, back to the frigid cold. But
I think 80 degrees this coming weekend, though.
Hell yeah. Hell yeah.
Cut your sleeves off.
There you go. Speaking of cutting your sleeves off, the NASDAQ is doing just that. No bottom, or I should say, no top in sight. I mean, this is just insane. Green day after green day after green day. Up 0.5% right now, 140 points. E-mini's up 30. Bitcoin hovering above 80K. And all of last week, it was chopping around that 80K level.
Yeah.
Seeing some nice sustained gains there. And ETH up to 2,300 as well. Crude chopping around. I mean, we've had some crazy intraday ranges there. I actually need to manage some of these positions here. I held on to this iron condor over the weekend because I was like, if we just open relatively flat, this iron condor is going to get crushed in terms of implied volatility. So that's a nice gain there. I got to close that. And then this crude contract, I have a contract in the M contract with a short call against it at the 100 strike. And I bought a more near-term put to kind of create like a calendarized collar last week, but that put expired worthless. So I need to actually just hold this 3-day. I'm just going to hold on to this, get all this value out of it. And then if we end up closing around the same level or higher, it'll be a nice profitable trade. But what have you been doing in terms of trading?
I've been in oil as well. That's presented a lot of opportunity on both sides. We've been all the way to the low 90s, breaking 90, depending on what contract you're trading. And then, of course, well above 100 at times. The volatility in there has continued to come in. If you track OVX as a proxy for that, you'll see it's closer to kind of the mid 70s. So selling vol in there, managing deltas still, but looking for opportunities just to buy dips in crude oil, and then trading this short term. You have to absolutely manage these positions. So I've been in there. I don't really have a ton of other positions on, Mike. I've been closing out of some stuff, and we really haven't had much of a dip at all to reload on some longs. I'm not looking at this and saying, okay, I've got to just rush in here and short it. I do have some positions where I've been carrying some long put spreads just as like a hedge, a little bit of a tail. That hasn't worked, of course. VIX calls have not worked, though we are hanging on to some higher levels. We haven't completely broken down there. But yeah, mostly been focused on oil and interest rates and some other commodities. Been trading copper, have been trading wheat here and there. But as of right now, I don't really have much of a position in any of those outside of oil. What about yourself?
I've just been trading around these markets. I mean, for the most part, I've been placing bullish trades, diagonal spreads, calendar spreads, those types of trades in a lot of these tech stocks. And then I've just had this I've had a couple of iron condors on in SPX that have become bearish hedges. One of these is 300 points in the money. Another one is just in the money here out in June. But the way I see it is like I place this as a neutral trade. On the way up, I'm closing winners in other products, and now I'm just leaving this on as this like extra bearish hedge in case we end up selling off. But yeah, it's been a wild run in the tech space. Someone in the YouTube chat on Friday had a circle idea, and it was a call crab trade, long July, and then short the 7-day against it. So buying the 120 in July, selling 2 of the 135s and 1 of the 145s for $10. I got into that, and then Circle reported earnings this morning, up 12%, and that was a nice winner, like $680 over the weekend.
Boom.
So we'll take it. We will take it. But yeah, other than that, I also am trading corn and wheat, placing these upside calendar and diagonal spreads here. I like these products because they have these like 2 days or the 2 expirations that settle to the same contract. So the 45-day, the 46-day, and the 11-day both settle to the end contract, meaning you can get into a more like traditional equity feel in terms of a calendar spread or diagonal spread because they both have the same settlement. So if the curve moves in corn or any of these products where you have the ability to have a diagonal nature or a horizontal nature settling to the same contract, it's a nice little trade there. So corn's flat. Wheat, I need a much bigger rally here, but both green today. And so is crude. Yeah. Not much else. Yeah.
Oh. Yeah, I mean, it's been it's just been this slow grind, right? I mean, you go back, you look at the move last week outside of what was priced in initially at the start of the week, but to the upside. So volatility hasn't changed too much, hanging around at the time 17. It's just been this slow grind. We're up or down 0.25%, it seems, regardless of what's going on.
Yeah. I remember back in the day when the VIX was at like 10, and it got to like 9. You would come to the office every day. I'd look at the E-minis, they'd be up 7. The NASDAQ would be up 30.
Just stop right there. And then they would.
And now it's like this is the new situation where E-minis are up 30, NASDAQ's up 100, and like that's the new grind higher on an average day, I would say. But yeah, need some potential volatility in this market. There are some other products that have yet to announce earnings. So Cisco, I just did an options math check on the YouTube channel for Tasty Live, so that'll come out shortly. But just talked about Cisco earnings. They have a report on Wednesday after the close. And then NVIDIA is another huge one. Obviously, we still have some time left for that one, but that'll be next week. And NVIDIA is going to be very interesting because right now it has a 17-point implied move for May 22nd, which is the week for earnings. That'll come down a little bit once we get some time value out of this option cycle, but still a pretty big differential or ratio from the 11-day to the 38-day or the 11-day to the 67-day, still accounting for well over 50% of the implied move for the next almost 70 days. So yeah, lots of implied volatility here, but Cisco is a really big ratio. 8-point implied move for this week for earnings, only a 989 implied move for June, and only a 12-point implied move for July. So like this is huge in terms of how much weight the market is placing on this earnings announcement, because you basically have the same number for the 4-day cycle as you do for the 67-day. So calendarized trades, diagonal trades, that's exactly where I'm going to go for this one too, but I'm going to wait till Wednesday and see where the market's at.
Beautiful.
Yeah. IBIT working out nicely. Ultimately took shares at 65 after selling premium all of last year, and then just was aggressively rolling up and out the short call. So I just have this position on. It'll basically be the last position that I have unless I take more shares at some point with like a short put, but just sitting on this calendar spread with a really long-term December option. But at a certain point, like if you're trying to roll up and out over and over, you're going to get into this scenario where you have a really long-term option that will still move based on delta. But if we just chop around here, it'll be a much slower decay trade. But I want to create as much offensive profit possibility on the shares as I can, which means moving my short call up and out every time it gets tested. And that's pretty much it. But yeah, if you want to join us on the YouTube channel, we are streaming live on Tasty Live. You can throw in your trade ideas, questions along the right-hand side chat. I've got the Tasty Crypto Substack pinned at the bottom of the YouTube chat. So you can click on that, get involved there. But we do have some slides.
Yeah, let's do our crypto market update quickly here. I'm going to pull them up on my machine over here as well. But May 11th, crypto market update. As you had mentioned at the start of the show, hanging on to 81,000 when we look at Bitcoin. A lot of areas of the market are trading a little bit better here. Some are calling it crypto spring. Maybe we are out of crypto winter.
Yeah.
The bear market is over. I'm not so sure, but let's run through what we are seeing. A bit more green on the screen, of course. Bitcoin over 81,000 right now. ETH underperforming Bitcoin. Solana outperforming over the last week, up 14%. So that's been a bright spot. That has been an underperformer, catching a bid. It's still, in my opinion, Bitcoin over everything. But Solana having a nice bounce here. XRP as well. Litecoin, Bitcoin Cash, and Doge continuing to show some signs of strength there. When we look at price momentum, really it was Bitcoin as the only one that was kind of hanging in there. And now all of a sudden we've gone from neutral to bearish in terms of that short-term price momentum back to bullish. But as we've talked about week in and week out, it's the weekly time frame that you want to focus on. That was breaking down. The one thing I will point out is that Bitcoin's weekly price momentum has shifted back to neutral from bearish. That's certainly a positive sign. But everything else still exhibits this bearish momentum on these longer time frames, with the exception of Bitcoin Cash on the monthly. But in terms of what I track, right, let's look at the first three in the list: Bitcoin, ETH, Solana. Bitcoin over everything. You'll see that in the Bitcoin market cap dominance. You'll see that in some of the relative performance. But from a price momentum perspective, it is trading a lot better on those longer term time frames. Everything is still pretty bearish when you look out at those weekly and monthly periods. We want to see that change before I start to pound the table on crypto spring, crypto summer, bear market is over. We'll see. Typically, what we've experienced historically, as you know, has been that it takes about a year to bottom once you've peaked when you apply this 4-year post-halving cycle analysis. We peaked in October of 2025 at 126,000 at the beginning of the month, and we've bottomed out here, at least locally, short term in February at 60,000. Could we see that again? Absolutely. But the way that we're trading has people convinced that maybe we won't. That said, we're nowhere really near yet that 1-year period. And when you look at, we put this in the Tasty Crypto email over the last weekend, there's a great chart that shows, the cycle analysis and where we've bottomed historically in terms of the number of blocks post that halving. We still would have a ways to go, as indicated by this chart, if it's accurate, historically. Maybe it doesn't repeat, maybe it rhymes, or maybe you could throw it out the window. But when we look at the prior halving cycles, they've all bottomed around the same time, and we are not there yet. Who knows? That said, for now, trade the market that you have in front of you. If we jump over to the expected moves, that'll help us with a little bit of this. So volatility has come in. Implied volatility is at recent lows. You can see that with the IV ranks over the last 3, 6, and 1 year period, 3, 6 month and 1 year period. Doesn't get any lower than 0, or I guess you can put it a new low on the following day. But you're looking at levels where we typically have reached a bottom historically. So I would say at least anticipate more volatility ahead. That could be that you get a move to the downside. But for our 1 week, 1 standard deviation moves using those implied volatility levels and the current spot price, you get about a $4,200, $4,300 move in Bitcoin. That's going to give you a 76.7 to 85.3, trending higher. Higher low in that range, higher high in that range for now. ETH, not the same as Bitcoin here, 2150 to almost 2500, but not seeing that higher high for the low of the range and the high of the range there. Solana, you are 90 to 102. Vol hasn't changed much in there, still looking for a $6 move. Doge, it has pushed above 11 cents, but hasn't really done much since. XRP is trading a bit better as well. That's one that I don't have a position in, but I like to trade the futures in there at times. Still looking for about the same expected move, but we've traded a bit higher here, so now your range is, let's call it 140 to 155.
Yeah, I think an interesting distinction and something to keep in mind with Ethereum, Bitcoin, and these other products is they're all going to behave in a similar way, where when you're kind of bottoming out and you have these narrow ranges of realized volatility, that's when your IV rank and your implied volatility gets crushed. But these are the products where if you get a big sustained momentum to the upside, implied volatility will expand. So it's very different than like the S&P 500 and the NASDAQ, where right now we're seeing the S&P and NASDAQ just rip higher and volatility is crushing. If this were to happen in Bitcoin and Ethereum, implied volatility would be expanding.
Yeah, absolutely. A lot more like the single stock names that we look at related to AI at this point, where you kind of have that to the upside, you have that chase, you have that kind of FOMO move, and you see vol expand. If you look at some of those chip stocks, right, they have IV ranks of 100 or above 100 given their vol today. Same thing here with Bitcoin, which is not, to your point, what you see in the indices.
Indeed. So I think like strategically, from a strategic standpoint, if you've been looking to get really long-term exposure into like leap options, things like that, leap call options, like these are the products where it makes sense because of the structure of how they would behave. If you get that rally, you can kind of get the best of both worlds there.
Absolutely. If we jump to the next slide, we've got relative performance here. Bitcoin over everything. That's been my theme. I mean, I get that you're going to miss some of these bounces. SUI, for example, up 20, 30% over the weekend. But you have to consider that these are down 70, 80% from the highs. Bitcoin had a similar move, but didn't fall by as much. That said, when I look at momentum, I look at relative performance, I still want to stick with some of these larger market caps. I want to stick with Bitcoin probably. I'm not saying, hey, it's time to jump into all these others just yet. There will be signs. I'm happy to be a little bit later to that party. But Bitcoin market cap dominance, that's Bitcoin's market cap versus the rest of the tradable crypto space, sitting at about 2/3, close to it, 61%. It's come off a little bit, but it's been pretty sticky at those levels. I would want to see this push back into the 50s, and obviously on the other side of that, you're going to see large moves in alts. But if we track Bitcoin market cap dominance in a similar way as to price performance and the momentum there, no breakdown at all yet, so kind of just use as a signal. ETH BTC trading very poorly. You can see down across all those timeframes that we track. Solana caught a bid. So short term, yes, it's up. But again, convince me. I want to see more of a trend in there. This is more of just a kind of counter trend rally, I suppose. Doge had the move over the last couple of weeks, hasn't done much since, hanging on to 11 cents. Bitcoin, again, has been performing well here versus everything else. So that is relative performance. Let's take a look at how we are correlated to cross assets or other areas of the market. That correlation between equities is as strong as it's been. I don't know if you'd call it an extreme, but on a 1-month basis, on a 3-week basis here, you're trading in lockstep with equities. So I think it's safe to assume that if there was something that upset the equity market at this point, caused a reversal in some of the high beta tech names, the chip stocks, the AI related investments, if you saw a reversal there, I wouldn't be surprised to see some weakness in Bitcoin. Doesn't mean that you will, but this has all been trading around the same thing for the same reasons. That said, much less of a correlation with vol short term, with oil. We saw that very strong inverse correlation if you go back about a month or so, where you had a lot of oil volatility. You had, of course, the geopolitical risk. You had the Iran war. All of that front and center seems to have less of an impact, at least today. And you're seeing that show up, of course, when we model these kind of backward-looking correlations, but no real correlation at the moment with oil. And that was a very, very strong inverse correlation about a month ago. Same thing with gold, a little bit of an inverse correlation opening up here short term and a little bit more so on a 1-month basis with the dollar. So if we continue to see dollar weakness in this environment, we might expect Bitcoin and other areas of the market, equities as well, to perform, I suppose, to hold up. But yeah, aside from, very strong positive correlation, as strong as you can really get with equities here, not much else to go through. So just keep that in mind. Anything that's going to cause you volatility is probably going to see a little bit of these recent gains get cut down. Want to take a look at our last slide here before we jump anywhere else. And this is a similar approach to what you see with the crypto performance dashboard. This is just looking at other areas of markets and applying a similar analysis, just trying to understand what's price momentum across these asset classes. SPX, we are full-blown bullish, of course. NASDAQ, the Russell, pick your favorite flavor. Momentum is super bullish. We saw that flip. We were down a month and a half ago, down 10%, had a nice correction in there, and then that just absolutely ripped, as everybody knows. So continuing to put up eye-watering numbers, volatility, and we're looking at realized vol here, has come in a bit, but it's been just a one-way train. Gold looked like it was breaking down for a second in the face of some higher interest rates. I think you still could run that risk. We'll see what happens post some of the inflation data we're going to get this week. But gold looking a little bit better. Silver looking a lot better. That's completely flipped back to bullish from the neutral to bearish momentum that we were seeing. You can see up 11% in the last week. All of these, of course, outperforming Bitcoin. Bitcoin year to date is down 7%. So you've got decent double-digit gains on a relative basis when you look at equities and precious metals. Yields have come off of just the rip higher here in lockstep with what we've seen with the oil prices and inflation input. 2-year yield down 7 basis points in the last week. 10-year yield down 5 basis points, though pretty decent gain, 40 bips in the last 3 months. Again, let's see what the inflation data shows. I think, in my opinion, you want to be long yields, the yield itself. So short bonds here. I'm trading more so the 10-year. And then the VIX has come in a little bit, but hanging out around that 18, 19 level. Dollar weakness has been somewhat persistent. And you can see that price momentum in the dollar has been bearish across all time frames.
Yeah, the dollar's been tough. I've been trying to buy it to no avail and no profits either. Just getting along the TastyFX, small currencies, but that's the beauty of it is you can get as granular as you want in terms of risk size. So longer term trades for me there, but One question for you in terms of crypto. So we've got inflation everywhere. You've got crude oil prices near 100. You've got the E-minis and NASDAQ ripping higher. I think that could be it's obviously a catalyst of everything we were seeing in the tech space, but it could also be just the fact that like asset prices everywhere are going to rise. Prices everywhere are rising if inflation is going to persist. What do you think, I don't want to say breaks this market, but like what are the things that could create a scenario in this market that could push Bitcoin higher or get a rotation into Bitcoin? Is it rotation out of hardware into crypto? Is it something else? Like what are you looking for in terms of like what's the narrative for Bitcoin getting back to 100K, 120K? Or is it just this super strong correlation we've seen and maybe it's if we get to 8,000 in the E-minis, maybe you see crypto at 100K?
Yeah, for sure. I think you could see some rotation as long as the setup is still there. And what I mean by the setup is that you have an environment right now where you're seeing some signs of, increase in the rate of change of inflation year over year, growth. If you you ask a question, right? Is the economy strong? Answer is yes. What do earnings look like from companies? Significant acceleration in revenue growth and earnings growth year over year. So it's been pretty positive. I think that's an environment where crypto can trade higher on the margin. Crypto tends to really benefit from zero interest rates, money printing, open market purchases, bond buying, basically the central bank balance sheet expansion. Not necessarily seeing signs of that, but I think that the environment, the economy, the setup here is supportive of higher crypto prices. As long as that trend continues, then I think it's just largely, well, what prices do we take out, and does that all of a sudden, suck in more buyers? If it looks like we're going to run to 100 very quickly, and there's some velocity behind that move, then I think that you are going to run to 100 really quickly. It kind of almost is reflexive or self-reinforcing. I think the other thing to look at is like, well, what would derail this? I think what probably derails this and takes a little bit of wind out of the sails of the equity market is if you get a breakout in rates. If we're a bit more concerned with the inflation side of the equation, right? You have growth up, inflation up, it's a decent environment, asset prices, stocks, all-time highs, that continues. But if all of a sudden we become concerned that you're not going to get a cut out of the Fed anytime soon, maybe you're going to get a hike. We've got rampant inflation. We don't know what the war really looks like. It seems like, okay, that could end any day or maybe not. Regardless, it's less of a concern. But if you start to see the bond market price in significantly higher interest rates, and if on my other screen here, I've just pull up where I've got some of these things marked off in terms of what I think those levels kind of look like. Let's just use the 10-year and we'll round it here. If you get a 4.5% yield on the 10-year, you're about 440 right now, 439. So it doesn't seem like you're that far away, but that'd be a decent move. You get a breakout from there. I think that could throw some cold water on equities and certainly on Bitcoin. Same thing with gold here. So an environment in which you don't get a breakout in yields, but you have, some signs of inflation, at least rate of change year over year, and growth, economic growth, rate of change year over year. You can look at ISM services, ISM manufacturing. You stay above 50 on that index, then you've got, growing or expansionary kind of conditions. That's going to be positive, and I think that you could move higher. But if you get that breakout in rates and you get a reversal in the dollar weakness that we've been experiencing, then I think, you probably see some short-term volatility to the downside.
Yeah, I think there's so many things at play here. And to your point, we've been locked into this interest rate, and from a probability standpoint, all the way through September. But you also have this kind of, we'll call it a 50-50 probability of a cut versus a hike. The further out in time you go, it's pretty even. It's like 7.5% for a 25 basis point cut, similar for a hike for October. Then you go to December, you have more of a probability of a hike as it stands right now. But there's still probabilities in either direction. It'll be interesting to see how the interest rate market plays out over the next couple months. These probabilities change, ebb and flow every single day. So they're ultimately reacting to the movement in the yields and things like that. So love it. Well, thank you for the analysis. I'm in IBIT. I love IBIT just because it's such a digestible product, super liquid. almost 17 million shares traded today. All these options are basically penny wide. And you can do a lot of dynamic stuff in here. And even with such a low IV rank, 50% IV, 45% IV is still high enough if you're trying to sell premium in there.
Yeah, there's still premium when you look at implied versus realized volatility. If I just go back to my slides here for a second, you're looking at an ETH premium here of about 18%. Implied's 53, realized has been 45. Of course, that can change, and one is forward-looking, the other is backward-looking, meaning implied is future volatility versus what actually happened over the last 30 days. But same thing with Bitcoin. 15% premium there, and that's going to work until it doesn't, of course, and we see those things kind of flip around. But it has paid you in an environment where, yes, we're higher than we were a few months ago, but they haven't really been these explosive moves. We've been in this absolute grind, and Bitcoin has traded sideways for the last few months up until this kind of recent breakout above 75 and now 80. But throughout that period of time, if you're long IBIT or ETH, you can sell calls against it, generate a little bit of yield. I think if you're ultimately bullish long-term, you don't want to do that into perpetuity, of course. But when you're in those choppy environments, those products give you a lot more flexibility. And I think on the downside too, right? If we do get a correction back into the 60s, volatility is going to go up quite a bit. And if you want to enter into a position, you're going to now have a new opportunity to sell puts.
Yeah, and that's what we were doing, I want to say a couple months ago. Yeah, April, actually beginning of March, we got into these kind of longer term puts because IBIT was sitting down there, and we sold that 30 strike put. And this was I was super comfortable with this because I already had shares at 65. So if I ended up taking shares at 30, I would have drastically reduced my overall basis through dollar cost averaging, plus all this premium I collected through last year and this year too. But didn't end up happening, got half that value out of the put. But I would happily do that again if we go from 46 to 40 or back down where we were earlier here. But yeah, it's been a great vehicle. And like I was saying earlier, I initially had a 41 strike call against my shares, and then we got tested at 41, so I moved it from March to April up to the 43 for small credit. Same story, rolled this out from April to May and down one strike to pick up some more premium, and then went from May to July from the 42 up to the 45 for small credit. So I'm just like making these adjustments as the market moves, and I did end up paying a debit here going from July to December, but that was into this big rip up to 45. And I was like, I want to give myself as much room as I can to the upside. And this option is still trading for $370. So even though it's out in December, if IBIT goes from 46 to 40 or sub 40, this option is going to get cut in half, regardless of the time frame, just based on the delta. So just trying to be nimble, but keeping as much upside profit potential as I can on that position.
I like it.
It is quite fun, the old IBIT. All right, let's pop over to the YouTube chat now. See what the people have for us today. Oil and gas stocks. I'm perplexed why 0 oil and gas stocks are hitting new all-time highs today. Maybe they sold off too much last week, so it's taking more time. I think you get, you're going to get a little bit of a disconnect when it comes to crude price movement, especially when you consider that these are in backwardation as well. USO is going to be the biggest beneficiary for backwardation. And you can see this here. Like we were chopping around this 60 to 80 range for a long time. And then you got this massive backwardation in crude futures. And that's really what propelled this thing higher, because USO seeks to replicate a balance of different contracts in crude oil. So they're selling out of the near term at a more expensive print, buying longer term, and really just like the difference between this month and the next month is a huge difference in terms of value you get, or gamma you get, velocity you get from selling out of a higher price, buying a lower price with the same finite amount of capital. So you're seeing this here as a direct result of that crude backwardation. But if you're looking at like CVX or some of these other products, yes, they've come off the highs. BP probably looks similar. Yeah. And I think at the end of the day, these products are going to be moving and shaking as well. But are you trading any of these, or are you just sticking with just crude futures directly?
I don't have a position on right now. I think longer term, these are companies or stocks that I would look at from a more of an investment perspective, less of a short-term trade. But what can I be in that I think has some structural tailwinds, pays a decent dividend, and could present an opportunity into any sell-off? There are names that I'm tracking, I suppose, on my watch list. That's Williams, it's Occidental. I think Chevron, XOP. There's a lot of different ways that you can start to break this down. That said, as you mentioned, it is more of those majors that have pulled back here. Oil's been range bound. I mean, also, these have gone up almost every day, every week since the beginning of the year. I've got XOP up on my screen. It was 130 in January, and it went to 190 when oil prices topped out here short term into March. It's pulled back to 170 here, and it's been as low as 150. So, of course, you're going to have some volatility there. If oil moves higher, I would assume that they would be somewhat correlated. But for now, with oil being range-bound, most of the majors and post-earnings here have taken a bit of a breather. That said, if you look at OIH, I don't think you're seeing the same thing. Another one, though, was 280 at the beginning of the year. It's gone all the way up to almost 450, is not exhibiting the same move. OIH is up $9, 2.2% right now. XOP, which is going to be explorers and producers and some of the kind of smaller cap stuff there, that's up today, of course, but chart is a little bit weaker on a relative basis versus OIH. Then XLE, which is going to be heavily concentrated in a handful of majors, is looking a lot more like XOP. They're all up today as oil's up, and I would expect that if you got $120 oil price, as long as there's still demand for, in many cases, end products, because you do get to a point where the oil price goes too high and you get demand destruction, and ultimately, I think in the broader economy, at least it historically has, to some extent, there's research around, this does precede a recession, depending on what happens when you get an oil price shock. But assuming that you just have somewhat elevated prices, margins should be okay. But I don't think there's reason to believe that just because the price of oil is $90, that energy stocks are going to go up every single day. And there's more opportunities as well, in this environment outside of just kind of protecting on that inflation side.
Yeah, and I think if you're getting away from some of these products, or if you want to dive in and you like some of these products specifically, pairing it with short premium, I think makes a lot of sense. Like, it doesn't have to be undefined risk. I think that's the big call out here. Like, even in XOP, you can see that there is still plenty of near-term implied volatility relative to long-term. You have a 5-point implied move for this week and a 13-point implied move for 38 days. So it's like, it's not as aggressive as an earnings announcement where you have really high implied volatility in the weekly, but you're still seeing elevated implied volatility week to week relative to month. So you can get into calendar, crab trades, diagonals, keep the risk defined, and still take advantage of the near-term premium, which just helps your trade altogether.
Yeah, always try to reduce the basis there. And I think for myself personally, I want to have some quote-unquote dry powder in the event that you get a sell-off, because I think when you look at this, let's call it an oil shock that we've gone through here, it always highlights a number of things whenever you get any sort of kind of structural issues. And so one thing that you're seeing, and this is where there maybe is an investment opportunity, again, longer term, less of a short-term trade, but you think about what comes next, right? If this repositions the U.S. or further positions the U.S. as an exporter of gas liquids or just generally petroleum products, you're going to have more infrastructure that's needed even beyond what we've been building. So pipelines might be interesting. Companies that are involved in that could provide a potential opportunity. You look at the reality that Europe faces in terms of jet fuel shortages. Does that change how they think about storage in the future? Is there an infrastructure or storage build out investment there? What companies are involved? If you spend some time on that and you kind of do your own research, do your own due diligence sort of thing, I think that these sort of shocks, and whether the price continues to go higher or not, present some interesting opportunities. I personally would wait for a pullback.
Yeah, and you've had plenty of pullbacks even over the last month. Like this month's, we're 11 days into May, but you still had a big range every single day. And these intraday ranges give you a lot of opportunity. Like this today has been the lowest intraday range, and it's still, we're up 3% right now, and if we're chopping around here, this is still a 5-point range, but it's narrower than it was and has been. And if you're looking for your opportunity, there's likely going to be a time where you will get it. Like, I'd be shocked if crude just chopped around here and didn't move outside of this 5-point band. It just doesn't make sense that it would. Does it make sense to roll short puts of a strangle to a straddle when a stock keeps going up exponentially higher and then it reverses? You're in trouble. An example could be MU. Yeah, I mean, these stocks have been insane.
There's some things that are just out of your control.
Yeah. And, I've tried to avoid selling strangles and straddles in these products because you will run into a scenario, whether it's to the upside or downside, where you get these huge moves relative to implied. Like Micron right now is pricing in huge implied volatility, 101% implied volatility for June, and that's reflective of almost a 200-point range. You're seeing a 50-point range just today. So you're getting plenty of realized volatility. If you're rolling a strangle up to a straddle, it's an underhedge in the sense that, let's say you had the 800, 600 strangle, and now you're taking heat on your call here, $9,400. If you roll up your put from 600 to 700, you would pick up the difference, which is about $3,000. If you roll it up to a straddle, you're going to pick up $7,000 and you're going to end up with a neutral position. I think one thing you could consider too is like what I've been doing in IBIT and silver and specifically the micro minis. It's been crazy. It's been a weird feeling, but like I've never, even into these rallies, I just assume we're going to keep going even higher than we were. So what you could do is consider a plan or a trading mechanic where you don't take upside risk. Now, it's easier said than done in an equity because these equities move like crazy, where it's easier to manage in the E-minis. Like E-minis, you look at this chart, it looks like an equity. Like we've gone up substantially. We're up 1,000 points in 2 months, which is nuts in the micro minis. But you have your ability to manipulate the position here. I started with a 6,600, 7,100 strangle, manipulated it, and then here is where I started moving it up. So I went from a 6,700 straddle that was slightly in the money. I rolled it out a couple weeks and up to a 7,100 in the money put straddle. So I removed my short delta, switched it to positive delta. Then we get hit at the 7,100 strike. I do the same exact thing. I roll it from May to June, from 7,100 up to 7,400. So I'm basically just taking the straddle, and instead of under hedging, I'm just eliminating the short delta. And now we're sitting here, I have the 7,600 straddle in June, and it's 100 points from being in the money again. But it's like, these are the adjustments where you don't need to under hedge. You can fully hedge or flip your position. And in Micron, let's say you have the 700 to 800 strangle. If you bought this back for $14K, if you go to like the 800, 900, you would completely remove your short delta, flip it back to neutral to bullish, pick up more premium, and now you've got way more room for you to run up here. And then let's say you get hit at 900, you could do the same thing. And you're kind of just like shifting your delta up, you're maintaining your premium. Now the caveat is you have to be comfortable shifting your short put strike where you take on intrinsic value up from 600 to 700, up from 700 to 800. Like that's the caveat. But are you more comfortable with a stock that retreats a little bit and you have an in-the-money short put, which is a covered call strategy? Or are you more comfortable having a short in-the-money call that's just getting killed every single day? It's really tough to do. It's hard to manage these effectively because these equities, especially right now, are flying around like crazy. So it's not for the faint of heart, but it can be done. You can reduce delta. You just need the account size to do so. And that's really the importance of trading small enough to where if you had a strangle in Micron, you can completely manipulate anything you want to with that position. Like there's no rule that says Micron must come down. It could go from 800 to 1,000. And if you have a strangle on, you got to be able to manipulate the strikes so you're not caught with just in the money short calls at 99 delta.
Yeah, it is. I mean, it is tough to adjust, as you mentioned, into these parabolic moves because it's likely, depending on the time frame, I guess is the most important piece to this, it's very likely that you get chopped up in here because when you go parabolic, sometimes you come back down to earth.
Yeah.
A lot of times you come back down to earth.
Yeah.
Like for crypto, I've tried to build a model that helps me, at least with my trading, around staying in positions and then also just trying to take profits. Doesn't mean that you're going to sell out at the top. And so as you were talking, I've just been punching in the Micron numbers, and I'll explain what I look at. But point being, flashing red. Flashing red in that when you see these things, in my experience, you will often want to be taking some of the profits. It works really well in crypto because you do get these sort of exponential, parabolic sorts of moves at times. And so you want to be able to take some of those profits off, but you don't want to miss the larger move. So what I look at is if we go back to measuring price momentum and we use these 8, 11, and 21 period exponential moving averages, the slim ribbons that we've talked about, what I like to look at is as an indicator, and I couple this with RSI. So a lot of people look at a 70 as being overbought or above 70 overbought, below 30 oversold. I think you got to widen that out. You look at it as 80 overbought, 20 oversold. We'll start there. Micron's 86 in terms of the daily relative strength index, getting into some territory where it could correct a little bit, or at least like you've seen that before. But when you look at where we are versus those exponential moving averages, my rule of thumb is when you start to see a 30% differential in terms of the price of the stock and what that 8-day moving average is, that's a little bit of a red flag. So you've got a stock price of 790. You got an 8-day exponential moving average of 662. You're 28% above that there. Then you look at that as a, you're 16% above there. You look at it on the 21-day, which is 565. You're about 30%, 28% above there. But what really starts to scare me, I shouldn't say scare me, but like red flags everywhere. When I look at this on those weekly time horizons, the 8-week exponential moving average is 578. You're about 40% above that. As time progresses, given that these are averages that can converge, but that's the signal that I look for when you're 30%, I'll call it extended. And then also like how far are the averages on these shorter time frames away from one another as well? Right now, that weekly EMA differential is about 27%. So you're up there quite a bit. I mean, on a 21-week EMA, you're 74% above it. Anyways, there's a lot of red flags that I at least use in the way that I approach this with crypto that has worked in the past for me at least, that would signal you probably want to take a little profit if you have it. Yeah. But I'm sure a lot of people have been taking profit much earlier than this, just given the size of the move.
I mean, it's been nuts. Like this is a weekly chart, and 3 weeks ago, this stock was at 400, and now we're sitting at 800. Like last week alone, you go from 550 to 750, just absolutely nuts. Like this looks like a short squeeze on a weekly chart.
Yeah.
And that obviously permeates through the moving averages and RSI that we're looking at here. But I mean, it's just been nuts. And gaps higher. Like this is now a daily chart. We closed at 750 and gapped higher 40 points this morning. Just nuts. Absolutely nuts.
Which I'm not saying that it can't continue and you can't get to, let's just say $1,000 for Micron stock price. Just that when you move by this much this quickly, it tends to be a setup where you get a little bit of a reversal. At least I see that quite often in similar moves in crypto. And I wouldn't short this, but if I'm long, I would probably be taking some profits here in anticipation of a short-term correction that you might be able to add back into.
Yeah.
You could be back at 600 and then it could go to 800, 900 and it, would be pretty normal.
Intel's another one. Who'd have thought Intel would be back on the board here, up at 125. But yeah, I mean, these stocks are flying around, and I would imagine the fact that Intel's IV ranks over 100, like Intel's implied volatility must have been like in the 30s or 20s, like down here when it just chopped around.
Very,
40.
very low. Yeah.
Like there's no way that it had the same implied volatility that it has now.
Yeah, stock didn't move for years.
It was crazy. It's like the IBM effect. It was always just $150. That is probably not the case anymore. No, it's not. 225. But like this is low implied volatility for an equity in the 30s, high 20s. Like that's low implied volatility. So when you have these equities that are boasting 100% IV, this is Intel, people. Intel. It's It's crazy. Let's see. I keep asking, but in all seriousness, short of a surprise rate hike, what's keeping this from just grinding up to 8,000 in the SPX? Nothing.
Yeah, I mean, black swans, I suppose, are unknown in nature. But when you look at where we are, right, if you can ignore the clock is ticking in terms of the oil deficit turning into a supply shortage. Right now, it's simply a deficit. And of course, China has a lot of oil and they could become the marginal barrel. But we can't ignore what's going on in the Middle East. But if we do for a second, the setup is pretty bullish. Just ignore that one little thing.
Yeah.
You've had fantastic earnings. I get it. They're backward looking, but you've got massive capital expenditures into AI. The demand seems to be there. You have seemingly structural supply shortages in some cases. You have this bid from the kind of inflation side of things. On the commodity side of things, you have the rate of change of inflation and growth accelerating higher. That tends to be a good environment for risk assets. It doesn't last forever, but there doesn't seem to be anything on the immediate horizon that would be flashing red that we're going to enter into, a significant kind of reversal of that growth and inflation dynamic, at least not over the next month or 2 months, right? Eventually this exhausts itself. But I don't think that you're there necessarily today, even though, you look at this and it's gone up every day.
Yeah, it's been crazy, but I think there's obviously a lot of things in play here. The war lows, we were down at 23K, and we saw the signs, like we saw a couple days here and there, more than a couple days, where the narrative reversed, war's ending, ceasefires happening, and just immediately you saw the NASDAQ rip up like 3-4%. And we saw that multiple times. So the market was telling us that if and when this thing actually does come to fruition, like there's going to be some kind of rally that is paired to it. At least that was those historical moves had told us. And now, like, this has been insane, obviously. But for me, if you just drown out the noise and you look at volatility, where it's at, VIX is at in the teens. The VIX futures are still hovering around the high teens, mid 20s. But when you look at all of these contracts, they're all in contango. You've got 27, 21.7, 22, flattens out here. So we'll give you the benefit of the doubt there. But like 22, 23, 2240, 2280, these are all in contango all the way through the V contract. So if nothing changes and we stay in contango, I would be shocked if we didn't go higher, up to 75, 76, 7,700, because like that's just how the volatility dynamics have worked historically, and that's how they tend to move into the future. On the flip side, if you're expecting a move from 7,400 to 7,000 into the 6 handle again, you are going to have to see a flattening of this vol curve and probably going back into backwardation, because at the same time, like all of the historical sell-offs, whether it's the tariff situation of April in 2025, whether it was this war, whether it's COVID, all of those have backwardated vol markets. And if you're playing for a big downside move where you get 3, 4, 5% corrections, 10% corrections in the markets, it's got to be paired with a vol backwardation, I would imagine.
Yeah, so I think it becomes, okay, well, what are some of those things that might just cause some profit taking short term, might not change it structurally. But of course, if the ceasefire ends and we're back at war, or we're bombing again, we are still at war, that should be cause to take some profits, right? Anything that comes out of this Trump-Xi meeting that isn't positive could be a catalyst. I mean, there's so many catalysts, but the point being, you want to trade the ranges, right? If you model the one standard deviation move on a weekly basis, you look at the expected move, whatever, and you're long, which I think you want to have a long bias in this market, but you want to take some profits at the top of the range. You want to reload on a pullback. It can be confusing or frustrating at times because you haven't had much of a pullback, down 0.1%, 0.2%, whatever, immediately bid back up. But I think you need to be prudent in taking some profits at some of these levels, because there's, of course, a lot that very quickly could get everyone to rethink their existing positions that have been somewhat crowded, have been chasing momentum in some areas. there's a lot that's ripe for profit taking.
Yeah, and I think the velocity of this move to the upside, I don't think this can be understated enough. Overstated enough? Understated? We'll go with understated. All of these stocks are super concentrated. Like the moves in the Nasdaq that have propelled these the indice higher it's all like five to 10 names, we'll call it. So if you get a reversal of those 5 to 10 names, you are likely going to see a violent sell-off in the Nasdaq. Profit taking adds to that, the fuel to the fire, especially if the retail space starts selling out of their products, just adds selling pressure. And if it's in a handful of names, the concentration of those names becomes a problem to the downside, just like it's creating such euphoria to the upside. So I think there's something to be said about that as well. A couple minutes left here. Let's see. Any adjustments to the Iron Condor? Nope. This is an SPX Iron Condor I have. 37 days out. It's just barely in the money. Again, I think this is one that I want to have on and just take some slight bearish delta here, because if we get any kind of sell-off, this 3-day Iron Condor is going to be expiring fully in the money, most likely. But I have this super aggressive downside butterfly. It started as 100 points wide. I moved that far out of the money put up a couple times. So now I have this 100-point wide put debit spread financed by this much more narrow 25-point credit spread. So if this thing goes completely in the money, this will be like a $8,000 winner if it just expires in the money, and it will offset any and all of these other positions. So just kind of layering on to more aggressive bearish delta in SPX. This one I've been doing more actively, and these Iron Condors are much more passive, where I'm just going to leave them in the money. And if you get that washout, they'll move out of the money, and it'll become a downside hedge ultimately.
I like that you've got some Snap in the portfolio there. What are you doing with Snap?
Just watching it.
Okay.
Every single day. This was really just a result of a short put gone wrong.
Yeah. The stock's what, $5 now? $6?
Yeah.
I haven't looked at this one in a while, but I've just noticed it popped up on your screen.
Oh yeah. I've got a handful of stocks. I've got Snap. Right. I've got SMR. This one just destroyed me.
Yeah, I've got some SMR, my friend. Yeah. At a lot higher prices.
Do you have any Under Armour?
No, I have. The only wounds that I'm licking are SMR, which I have let me give you my basis in here. It's probably comical. Yeah, I own a couple hundred shares at 25, so I've been cut in half there. And I've got some Oklo, 95 a share. We're at 77, but it traded a lot lower than that.
That's true. Catching a bid.
Yeah, earnings this week, I believe, for Oklo. I mean, I don't know what they're going to report. I don't know if there's any money to talk about. But.
Yeah, it looks like tomorrow. $8 implied, almost a $9 implied move on a $77 product. So that is well over 10% of notional, which is on the upper echelon of those earnings reports. But yeah, you win some, you lose some. But I mean, that's, again, the importance of trading small. Like, I would have never thought SMR would be trading at 13 when it was trading at 50 after the big rip.
And as quickly as it went there.
Oh, yeah. Absolutely. But yeah, we'll be holding on to these for quite some time, I would imagine. But hey, you never know. I've been bailed out of shares before, so maybe it'll happen again. That's it. We're out of time. Thanks for tuning in. If you got any further questions, you can find us on Twitter. I'm at Trader Mikey B. Ryan is at Ryan Fred Grace. Give Tasty Crypto a follow as well. And I've got the Substack linked in the YouTube chat, so sign up for that. Get your updates every single week. But yeah, great session. Thanks for joining me.
Thanks for having me.
Absolutely. And stay tuned, everyone. We got plenty more content coming your way on the YouTube channel as well as tastylive.com. So stay tuned. We'll be back same time, same place, 11 a.m. Central tomorrow. Peace.
Investopedia says we're the best for options trading, period. Investors Business Daily raves about us. With stockbrokers.com, we're #1 for options trading and best in class for futures too. The Motley Fool really likes us, and so does Broker Chooser. So what else can we say? Other than boom! Trade like a trader. Tasty Trade. Make your move.
Tasty Trade's active trader interface makes futures markets your arena. Built for the bold, not the bored. Trade CME futures with a single click. From micro contracts to major ideas. And go even further with futures options. Tasty Trade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. Tasty Trade, pro-level tools, intuitive design, total control.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
What is going on, everybody, and welcome back to Risk and Reward. Happy Monday. It is a new week, and it brings new all-time highs with it. Clean through 7,400 on SPX. Why not 10,000? I'm joined as always by my wonderful co-host, Errol Coleman. Errol, how you feeling? What's going on?
I think I'm feeling the same as last week for the most part. We're 500 points away from 30,000 on NASDAQ, which you kind of alluded to. So very weird, odd. I don't even know how to feel about today, but kind of same day, different, or a different day, same story. What about yourself? How are we doing today?
Yeah, doing good. I think you kind of hit the nail on the head there. It's just this has become the new normal. It's just new all-time highs every single day. It feels all of a sudden like if we don't make a new all-time high, it's a slow day for some reason. The thesis that it's much easier to make new all-time highs following an all-time high the previous day continues to hold up here. Really not a great day in the portfolio for me today. I am slowly repositioning into some neutrality, getting some more short delta on. So there are more things to burn me as we turn a little bit higher, but I stand by the responsibility of that decision. We got movers all over the place, especially space stocks again today, logging some much higher highs across some of those.
A little more volatility in those.
Planet Labs is what I have pulled up here. Rocket Lab is really leading the charge after a good earnings report. I don't know if that was today before the open or Friday after the close, but had another 11% here, and the momentum seems to be sustaining. Friday had this giant green candle on Friday, and usually after get something like that, especially coming off all-time highs, you expect at least a little bit of pullback before the higher highs, but it's just looking to match that momentum today, looking like a couple of SanDisk candles going on here.
Yeah, no, kind of wild. I mean, last Friday it put in an all-time high, closed at its highs, and then taken off to the upside again and trading at its highs right now too. So, I mean, insane market. It feels like there's so many different assets or different underlyings that are sitting near all-time highs right now.
Yeah, absolutely. The SpaceX excitement really injecting a lot of enthusiasm into this sector as of late.
Has people always been interested in that space, or is it just something that doesn't come around so often, garnering a lot of attention, or what?
I think so. I mean, these have been, some of these companies have been trendy for a few years now. It is more of a recent development, but it does feel like over the last few years, there's always been a little bit of excitement for these companies. ASTS has been getting a lot of attention for some years now. It's logging an 11% day to day itself. Obviously not coming off all-time highs the way that Rocket Labs was, but yeah, Rocket Labs drove the whole market up on Friday, and that just continues into today. And I'm sure that the SpaceX IPO is only going to drive all these a little bit higher on sentiment moves.
It's valid,
even though it may take some market share in the longer term. I alluded to the memory stocks. We are continuing to the insanity only continues. Micron up another 7.5 today, over 800. SanDisk similar, but not quite as parabolic. It opened higher, has moved a little bit lower, is currently still hanging at all-time highs, at least as it pertains to the daily chart. We are firmly over 1,500 on SanDisk now, which is incredible. I remember at the just a few weeks ago, we're at the 800 level, and I was saying that felt a little bit crazy, and we've just about doubled that now, testing 1,600. So
yeah.
This is just the craziest thing, because this is one where you could be so late to the party and still just be correct.
That's what makes it so painful.
Yes, I
you know what I mean?
I agree.
And it almost feels like, on whether it's Micron, SNDK, whether it's the indices, it feels like the time I buy the dip, it's going to keep dipping.
Yes.
You know what I mean? And then it makes a new high. So it's like one of the most difficult trades to be in right now. Yeah.
I mean, we're talking about September. I mean, that's just 6-7 months ago now. This is a $50 stock. And then you have this giant run to 800 in just early April, a month ago. We're at 800. And you're like, okay, well, this thing is up 1,600% in 6 months. Surely this isn't the end. And had you bought at that time, you would be up another 100% right now. So it's incredible.
Wait,
it's
there's
incredible.
more.
Yeah, move that we've been seeing in these memory stocks, and it may not be over. I mean, as I've said a number of times, it's like it feels like mania, but in reality, there is substantiated reasons for these giant moves that we're seeing in these memory companies. So it's just such a crazy spot. What's going on, everybody in the chat? Ranch, Jared, Andrew, nice boy. Good to see all of you. Oh, glad to hear it about your Lunar. Nice boy. I'll pull that up in just a sec here. Grumpy Mike, Viggy. Happy to see all of you here. Lunar, another one in the space sector.
These are all great names for the ticker symbol.
They are.
So whoever chose them, hats off to you. Those are pretty spot on.
Lunar logging another 10% day today. Pretty much identical chart to Rocket Labs here, actually. Didn't quite make all-time highs on Friday, but very, very similar look going on. My little lotto in Joby has been paying me quicker than I expected it to. Logged a few good days in a row here, although it is trading down just a little bit today.
There we go.
I'm just about unched on the day on that position, but already up.
Well, so far, yeah.
Yeah, it was like a $200 entry, so up.
Yeah, you gotta love it. Can't beat that.
North of 25% at this time. I was saying on Friday, and that sentiment extends into today as well, that I wish I had two of these, so I could just go ahead and get one off and lock in some profits. But we will hold for the giant move that was the thesis as I put the trade on.
Yeah. Sold MU puts today. Felt foolish, but I'll take medicine if it falls. I mean, hats off to you, nice boy. It's, again, difficult for me to pull the trigger on some of these dips, and then you see it rip to another all-time high. So I'm glad you got to capitalize on that. But it's a tough trigger for me to pull, at least. It's a tough one.
Yeah, no,
I thought about it. It's a tough one.
I agree, but it's just like, I mean, I don't hate that. I don't really hate that. I don't mean to call it a FOMO trade, nice boy, but I don't hate the FOMO sort of mindset towards these either, because they just keep going. I mean, it's like I was saying.
Yeah, I mean,
you could have made a FOMO trade a month ago and you'd be up another 100% right now. So it's like, where does it end? You know, it's a tough thing to predict, but I don't hate the idea of selling puts here, just because these have shown such a propensity to hold these gains through gaps and everything. It's incredible.
Yeah, and it just cracks me up, because I know there was a point last week. I think it was like last Tuesday, last Wednesday, last Thursday. I thought about getting on some long delta, thought about buying the dip, and I'm like, there's just no way. We put in 58 new all-time highs within the last 2 days. There's no way this one's going to rip again all the way back to an all-time high. And that's like the feeling that you have in the moment when you're about to pull the trigger. And then we pop to another all-time high. And I'm like, what is going on?
Yeah, and it's like not even close.
Yeah,
It's just,
yeah.
It goes 10%
It's
to the
tough.
upside. It's
Yeah, and then we come back around this Monday, and we're in the same kind of mental position. So it's one of those that very difficult to pull the trigger, but I think if you have the sizing correctly, it can be easier to do that. But no, hats off to you. I hope it keeps ripping on your end at least. I'll be patient for the pullback, but take it to the moon. Might as well. Yeah. Might as well.
Agree with you. What's going on, Ace Ventura? Good to see you. I'm hearing burnout. LOL. Agree. I agree. It's incredible what we're seeing out of all these companies, and the market very well could be nearing burnout itself. I mean, how long can you sustain this momentum? I mean, memory stocks aside, but just in the broader market, it's it's incredible. We've gone weeks now without any meaningful pullback. We've only had 2 straight red days 2 times in like the last month, so it's pretty incredible the upside that we've been seeing.
Yeah. Nice Boy said Micron just released a new very large disk with incredible bandwidth. They have room. I mean, it seemed to be that way too. And I think, stubborn shorts are definitely adding a little bit of fuel to this fire. I mean, I'm short right now on Micron. Even on QQQ, I've been out of the money call spread too. So it does seem like, they have room. And then also those shorts getting stuck and having to just surrender their position and maybe causing it to fly even higher. But the burnout comment, I completely feel that. I personally feel a little bit mentally burned out. And sometimes I'll look at the portfolio, I'm like, I didn't even do anything today. And I feel mentally burned out. So I'm sure others might feel very similar. So I hear you on that end, big deal.
Sure.
Yeah.
I haven't done anything of substantial today. Nothing new has been added. I am going to go ahead and get out of this Starbucks position. I've had this on a long time, 329 days. Approaching a year now. Was putting it on about a year out at the time. I've gotten the move. We're hanging at 105 now, which is so far above this 80 level. There's maybe, I don't know, another $15, $20 to be had here. I guess $20 is more accurate because it is a 2x1. But with 38 DTE and trading this far above my levels, I'm content to just go ahead and take this one off. Lots of buying power used for this one as well because it's disproportionate to the buy side or the sell side rather. So would like to get this $1,200 of buying power recouped. So we'll go ahead and exit that for a substantial gain.
There you go, clean exit.
My best trade of the last year. Rein some of that buying power back in to fire on some new opportunities, continue to mitigate the upside risk a little bit as well.
Shout out to Starbucks. Shout out to the caffeine.
Yeah, no kidding.
April Fool's Day really got me. It got me too, big deal. If you're short, April Fool's Day, joke is on you. Because, 5,000 points are almost up since the end of March in the lows of April. Now we're trading at about mid-May now too. So I don't know. Again, I'm not a veteran. I haven't been in the market 20, 30, 40 years like, some individuals have that might be even watching this segment. But this might be the most irrational market I think I've ever seen. I've seen some really irrational moves overall, but to see something like the NASDAQ continue to make highs like this, it's like one thing if Micron is doing it. It's another thing if SanDisk is doing it. It's another thing if these space stocks are doing it. But to see an indice do that, 5,000 points, over 5,000 points in the last 30 to 45 days, I don't know. I don't know what you guys have seen, but it might be the most irrational market. But I guess markets can stay irrational longer than we can stay solvent. So we'll be patient for it and see what the market really wants to give us.
Yeah, it's definitely true. Always words to live by. And it just feels kind of, we're getting into where it starts to feel scary. It's we're seriously approaching bubble territory here. And I don't know that it needs to be I'm concerned about some giant crash, but it does feel like some downside is needed here for market health at some point in the near future. Thank you for the kind words, Sergio. If Gus left it on for over 365 days, it's a new tax bracket, isn't it? Yes, I believe so. I believe it moves into.
I believe so, because that almost went into a long-term hold almost.
Yeah. I'm not a tax professional.
You were edging it.
Yes, don't
quote us on that.
Getting close to it.
Great hold first of all, and that's a great position. Not easy to hold some of those trades as long as you did there too. So that's fire. You're able to take that one off, especially as the market's doing all this shenanigans right here. So
yeah, absolutely,
that's fire.
Is the market ever rational? Good question, Kobe Mike. I don't know. Thank you for the kind words. Big deal. Yeah, you gotta just hang in. It's all just about staying solvent and finding the new opportunities.
Oh yeah.
Did NQ bounce in both Aprils? Yes, it did. And this is perhaps something to keep in mind for the Trump admin at large. But April, last April was Liberation Day. We had the V-shaped recovery right at the beginning of April, and then this year we get the exact same thing, V-shaped recovery out of the lows right at the beginning of April. So perhaps next April we all need to be prepared, especially if March is a red month. I would assume if you just looked at like monthly performance over the last 2 years, it would be kind of comical with both Marches being crazy red and then both Aprils just being this insanity to the upside. SPX trying to pin at 7,400 prior to inflation data tomorrow a.m. Yes, we do have inflation data on the way.
Will that be the binary event that could, last straw on the camel's back or break the camel's back? I mean, I'm hoping so.
Perhaps. I was seeing headlines this morning about they're lowering gas taxes temporarily to try to bring prices down at the pump.
Okay. Curious to see the reaction.
Yeah, that hasn't really had any bearing on the oil market itself.
Yeah.
Which is continuing to move higher today. We are at 3.8% to the upside on crude right now. Momentum may be stalling out a little bit in the oil space, but we certainly haven't seen a substantial pullback of any sort. Really, I mean we are 10% below the highs. That don't want to undersell that, but we haven't seen any readjustment to previous levels.
I'm curious if the Iran conflict will be kind of the sell the news event and kind of unravel things like oil and the indices. Like I wonder if that's the thing kind of keeping things together per se.
Yeah, definitely could be.
As of now.
What do you guys think about Broadcom if there's a market correction? I love Broadcom. This is my objective assessment. If there is a market correction, I mean, I think it gets pulled down with everything else. I think Broadcom, and I mean, I've said a bunch of times, is like quietly the 8th Mag 7 stock, if you will. Just this giant company, top 10 company in the world, bigger than a lot of companies in the Mag 7, 2 or 3 of them at least. But I think that this has become a giant enough company and intimately tied to the broader market enough that if we do get a market correction, I think it would come down pretty aggressively because you have similar chart action to a lot of these memory stocks here, where it's just like gap after gap, and everybody always likes to say gaps always need to get filled. Sometimes that's true, sometimes it's not. But when you're talking about 1, 2, 3, 4 gaps that have not been filled at all, statistically speaking, I would presume it's highly likely for one of those to get filled at some point. So if the correction does come through, I think we would see some serious drawdown. And Broadcom is no stranger to volatility either. It will sell off hard at times. So I would think that, I would expect it to perform similarly to any other Mag 7 company in the event of a correction and have some pretty aggressive downside to it.
No, markets only go up forever, apparently. All kidding aside, though, most of the significant selling for earnings seasons has come after NVIDIA reports, good or bad. When was the last time NVIDIA reported? It wasn't reported.
No,
it wasn't
NVIDIA
too long ago, right?
Hasn't reported yet. They report pretty soon here in the middle of this month, May 20th.
Oh, there we go.
So
that's the end of this week, right?
So yeah, that's next Wednesday.
Oh, that is 9 days.
Yeah.
Yeah. I don't know why I thought today was the 16th.
Yeah, but right around the corner on NVIDIA earnings, and I do think that's a sharp line of logic, Jared, that perhaps the market could be holding out for NVIDIA earnings, and then any correction that we get will be forthcoming after that report is priced in. AVGO gets a rough ride. When you are short, you got to hold on. Is our oil supply going to get lower from hitting UAE? Probably, but I can't say that I'm entirely sure. But I would imagine so. I had crazy P&L swings in Broadcom, but usually always paid out. Yeah, I had a Broadcom position not too long ago. I don't still have it on. I don't think. Yeah, I got out of that. I had some long Broadcom. Yeah, actually, I exited that on air that I had grabbed. Right off the lows, and it was either this low or this low, and I had the exact same thing that you're describing, Nice Boy, where it's like, oh, I'm a genius, oh, I'm an idiot, oh, I'm a genius. It can be very volatile, the way that Broadcom likes to move. I mean, these are just like, what's this red candle? This is a 5% down day right there. This is an even bigger one. We've had some 5% up days in the mix as well. So yeah, Broadcom, it's volatile. It's more volatile than you might typically expect from a company of this size.
No doubt, it is crazy P&L swings in a lot of these names here. No, same story on just a lot of these different underlyings. Anyone that's kind of catching your eye out of the bunch outside of the indices per se and oil. I know we can take a look at silver and some of the metals here in a minute, but outside of the space stocks and I guess Broadcom, I don't know what else has been catching your attention.
Yeah, I wouldn't say anything has really jumped out at me. I mean, I know the chips are continuing to run a little bit as well.
Oh, right. Last Friday, they put in another leg to the highs.
Yeah, they did. Intel logging some new highs today, although it has been selling off all day. Mm-hmm. AMD managing to hold those gains a little bit better on this side of the equation, but there is a big scary gap here on AMD as well from that previous earnings report. So
yeah,
lots of this extension to the upside, and some of these are going to be good shorts sometime. I just don't know which or when, but I will start to take some shots, particularly as Nvidia earnings approach, because if we continue to get this just aggressive higher and higher and higher action, Nvidia is at all-time highs right now. Set a new all-time high today. Set another one on Friday. Just briefly, it did give that back on the wick, but as we continue to work higher, if we are in a world where Nvidia is suddenly at 250 come earnings, it's like you're getting into that sort of situation where they'd have to say some really, really good stuff to push that higher. And we've seen that happen 101 times throughout this earnings season. So it's certainly not out of the equation that they could do that. But I do think, as Jared alluded to, perhaps following Nvidia earnings is when I'll start to take some short gambles on some of these, because anytime you try to step in the face of the memory stocks are probably the best example. Anytime you try to step in front of this type of move, it's very scary. But that at some point these memory stocks are going to have to breathe a little bit, even if it has nothing to do with the strength of the companies. The demand could stay high, the prices could stay high, but there's no such thing as infinite growth, and there's especially no such thing as infinite growth for. I mean, how long have we been doing infinite growth now? 6-7 months. It's like, can you just really continue to do 40% a month for a year? I don't know. At some point, you have to have a red month and let things catch up at least a little bit. So I will be stepping in front of some of these freight trains. I just have to decide exactly how I want to try to attack that.
I'm not going to lie, the overall market kind of looks like that over the last 10, 20 years. It's kind of funny.
I'm thinking of something in Rivian post-earnings tomorrow. Yeah, Rivian, you should just do whatever the opposite of what it's doing is. Yeah, we're down. I would say long into earnings. It's and this one, it just does these bounces all the time. It's just chop, 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 and when it moves big, but it very seldom holds its gains or its losses. It's it's so strange, this one. But yeah, beaten down, testing this 14 level where it's found a lot of stability. I would think upside is the more attractive angle on Rivian. What about next multi-bagger stock in AI? I don't know what that means. Do you know what he's getting at? I'm not sure.
Wouldn't be too sure.
Multi-bagger. Not familiar with the word. If you give some more elaboration, I'd be happy to take a look at whatever. Maybe am I reaching UNC status? I don't understand this word. I don't know. But yeah, that's pretty much all the activity for me. What you been slinging over there?
Yeah, we can go ahead and jump to the Tasty platform over here. Really not been doing too much. But just eyeing this market, see how we're trading at all-time highs again. Got
these charts. It's ridiculous that this is a chart for an index and not an underlying. Let
me go ahead and just readjust that all-time high real quick. But no, I mean, we have a few positions on over here. We did a little bit in NASDAQ, really not too much. We're not even doing anything too aggressive or really having any conviction behind some of these trades. But I mean, we got a few McChickens from the Micron NASDAQ, which is always nice. So, we'll take it. And then Meta, sold an out-of-money put spread on that just a few days ago. That one's near break even. We're down about $40 on the position, but we really just need that one to marinate a little bit longer. $5 wide. We collected about we collected about $1.65 in credit, so just beneath a third of the width. And then Micron Technology, we sold an out-of-the-money call spread on that one. We sold the 430, guys. So Micron, we sold the 430s, and right now on Micron, we're trading at 600. That's Meta. On Micron, we're trading at 798. We're trading at 800. And once again, we sold the 430. So that just shows you, I mean, this stock quite literally doubled within the time frame that we had put this position on. So, I mean, just one of the most insane markets I've legitimately have ever seen. I'm glad this is a defined risk position and it wasn't something like a strangle and then I would try to roll it. I'm just glad it's a defined risk. But this one was unfortunately $10 wide. So although we collected about $352, we got about $650 worth of risk on that trade. So it would have been nice to take a max loss on a $5 wide, but this time it's going to be a $10 wide. We'll just eat that. It's whatever. It's not going to be every single day where you get a stock just double on you like that, especially a stock that doesn't have terrible fundamentals and that will still be there a year, 5 years from now too. So that caught me off guard a little bit there. And then QQQ, we sold the out-of-the-money call spread on QQQ, sold the 615s. And right now we're trading QQQ at 712. So just to show you how quickly the tables can turn, how quickly things can change. Not moves that we see every single year, but it's always interesting to look at. We got some defined risk on. Not much we can do in that position, but we'll stay patient. We got on some long delta in Meta. We'll still be active with the micro NASDAQ as well. But I think what's going to be most important is not letting these swing positions that are running against us to steal all the profits and hard work that we've done, especially with our micro NASDAQ contracts. So just doing some damage control until the market wants to pull back and show some type of normality from what we're used to. But I think another thing interesting, lastly, VIX is trading at 1812 right now. What's going on? We made another new all-time high. VIX is increasing. I don't think this is anything I've seen before in this market environment. So as of now, I'm going to stay like a sponge and just try to be as patient as possible, define the risk, and try to keep a pulse on this market. Because 18 VIX and the market's making another all-time high, pricing in risk to the upside. That's just insane to me. I don't even know what to make of that, but that's all we got going over here on my end, brother. That's all we got going on. Meta is just the star of the show for now, I guess you could say.
Not really. I don't know. I guess I'm not too super surprised by this up move in VIX. I've been saying this whole time, as we creep higher and higher, like at some point we have to start to price in some upside risk, or things just get so extended to the upside that we must start to price in some serious downside risk. So whichever side of the coin VIX is coming in on here, it's tough to be sure, but I did expect to see VIX climb a little bit. I was just talking about getting long on it late last week, just to sort of have that in the back pocket. Thank you for the explanation on multi-bagger, everybody in chat. I am familiar with that as a baseball term. I just wasn't drawing the connection there. First base 100%, second base 200%, etc. Translation: what's mooning next? Haha, not unk status. Too young. I see. These little speculative AI stocks aren't something that I take a shot on too often, but I do like C3 AI, which is just ticker AI. I think that AI, this one has a little bit of maybe a little bit of upside to be had if you're just looking for something that is beaten down but probably not going away. It's a really cheap underlying at 950. And it's been as high as it's tested the 45 level in the past. They're just one big contract, or Nvidia throwing them a bone away from taking a serious move to the upside here. Market cap is very small, and those can expand very, very quickly in this environment that we're in with the tech stocks. So yeah, coming off the lows, tested the $7.50 level on the very bottom. Then currently trading just under 10. So some recovery already in there, and you zoom out, you look back just to the beginning of 2025. January 2025, this is a $40 stock, so potentially some upside to be had. Nvidia just tosses $1 billion here and there like it's nothing. So maybe position yourself for some type of investment like that into C3, or if you want my serious tinfoil hat conspiracy, I think Anthropic or OpenAI will give them a bag to get this ticker from them. I think having the ticker AI in the current space, especially for a company this small, I wouldn't be surprised if one of these companies that's about to IPO at $1 trillion manages to carve out $1 billion for the AI ticker just for some clout, because as is well established, clout and vibes and aura, these things move the market. Your CEO and the vibe around him can seriously impact your share price. So even if it's just for some notoriety or to have a leg up on their biggest competitor, I'm not surprised if OpenAI or Anthropic wants to swoop in and get this ticker from them, and that would actually seriously move the needle for C3 in the market. So yeah, that's my thesis there.
Stan said, question, is the market just a large Ponzi scheme? We all just decided to partake in it. Your pops tells you to invest, you tell your future kids in markets. Stan, you're asking questions you should not be asking right now. All right, and you better hide yourself, not be too loud about that. No, I'm just kidding. I think that's obviously an interesting perspective. But when you think about growth being impossible to sustain forever, I guess you can make that. That argument on the American economy, I guess you could say. But at the end of the day, it seems like we're at a place where we're too big to fail, but that's typically whenever people get blindsided by something, and in this aspect, we're talking about an American economy. But yeah, we have to grow, and we've seen the overall market continue to make new highs, and it seems like it's always going to stay that way until proven otherwise.
Yeah, the Ponzi scheme analogy is a funny one, and yeah, I know we're pretty much at our time here, but I think it's a funny analogy. But the stock market is just a microcosm of the broader economy and the financial system that we've set up, right? So perhaps one could say the financial system as a whole is a Ponzi scheme, And perhaps it is, because I mean, through laws of money creation stuff, if everybody's seen the example in a textbook somewhere, I'm sure. If I deposit $100 into a bank at a 10% withholding requirement for the bank, then they get to take my other 90, that's my money, and loan it out to other people. So then somebody else has $90. If they put that in a bank, then that next bank has $81 to give out, and so it churns. So perhaps it's entirely possible that it is all a Ponzi scheme. But yeah, that's going to pretty much put us at our time for the day. You got anything else top of mind on your end?
No, nothing else top of mind. I think the only thing top of mind is if this market is going to make another all-time high. I know we've pulled back a little bit during midday. The longest difficult to pull the trigger on, but we'll be patient for lower lows. And if we get it, we'll get it this week. Tomorrow's CPI. Excited about that. Another binary event to inject some volatility into the market. That's going to be it on my end, though. Let us know, what you're looking at, what you're trading, and we'll recap tomorrow.
Yeah, absolutely, we will. Thanks so much, everybody, for watching. We really appreciate you taking the time. We never take it for granted. Errol and I will be right back here, same time, same place tomorrow, 12 o'clock noon Central Standard Time. Be sure to stay tuned for Futures Power Hour coming up next. We'll see you guys next time.
When you've got a futures contract that's in contango, what does that mean?
Futures, unlike stocks, have multiple prices appropriated to them. That's known as the forward curve. So when a futures forward curve is in contango, that means that the front month is trading cheaper than the corresponding futures back month. So you'd see that forward curve most likely looking like this in terms of prices.
And backwardation, what does that mean for futures contracts?
Backwardation is the opposite of contango. So where contango front month futures contracts are trading cheaper than the back months, backwardation is the opposite. So those front month futures contracts are trading richer than the corresponding back month contracts.
In the money. It seems pretty easy to understand. If I'm in the money, I must be profitable, right? Not quite. In the money is in reference to the option's strike price relative to the current price of the stock. An in the money option is an option which has intrinsic value. For a call option, that represents an option with a strike lower than the current stock price. For a put option, that represents an option with a strike higher than the current stock price. Being in the money is a good thing for long options. It's not so good for short options.
Pay for back testing? No. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial in the DTE, and stack the legs. See what survives. Check out Tasty Trade today.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
Step into the futures arena with Tasty Trade's active trader. Multiple ladders, hundreds of indicators, precision control. From micro gold to NASDAQ, all CME one click.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Sola rumba,
back. It's still Monday, May 11th, 2026. This is Futures Power Hour, sponsored by CME Group. I'm your host, Chris Vecchio. He's your co-host, Thomas Westwater. Thomas, it's a very interesting day in these markets where we're being rattled by Iran headlines and stocks just still don't care.
Yeah, it never stops. And yeah, we still don't care. So, I mean, it's more of the same pretty much, you know?
Kospi was up over 5% last night. Again, chip names are surging here.
Yeah,
Digital, Micron, name one. Thomas, they're all up, it feels like.
Yeah, strength begets strength. So, I mean, it's still going.
We're going to have to talk about a ceasefire that's on life support here on this Monday, if that's even true. I mean, what? I guess it's on life support. Maybe it's not. We're close to a deal. We're not close to a deal. The market just is kind of looking through it all, unless you're in oil, which is problematic. Although the market may get a reality check tomorrow, Thomas. We have a slow start to this week in terms of earnings and the macro calendar. Tomorrow, though, we get inflation. The April inflation report might start to raise some eyebrows. 3.9% is what's coming down the pipeline for May, not before a pit stop at 3.6% for last month, which would mean that the wage growth last month was completely negated for the U.S. consumer. Not a great sign. I'm looking at some of these rates of inflation, though, and looking at the core readings. Core CPI is still holding steady right around 0.21%. That's a little bit north of a 2% annualized core reading. So on one hand, not great numbers at the top line. On the other, still not filtering through to the area where the Fed would be worried that it would be filtering through just yet. So does the market ignore CPI tomorrow?
I mean, maybe not, but yeah, it's at a point where, you know, the Fed we've talked about this before, the Fed has a lot of time before they're going to make a move. So, I mean, the data, I think it'll be impactful if it's outside the trend. You know, we get a big down or up versus consensus. Then I see it rattling the market a little bit. Otherwise, you know, I think if it's inflation coming in, it's going to come in gradual. And I think it is going to go up, you know, over the next few months because higher oil is feeding into other things. There's other things in the Strait of Hormuz where we're going to see inflation pressures. I don't think we're going to get one big jolt to the monthly data. I think it's going to be gradual, push those rate cut bets back even more, bring in rate hikes. Overall, I mean, the market's not caring yet. So,
you know, it feels like it's an inverse scenario that we had with NFP on Friday. On Friday, my view going into it, Thomas, was that if you get good jobs data, the market's actually going to be okay with it, because it means it won't have to be worried about a Fed that is stuck between cuts and hikes, between a jobs market that needs cuts and an inflation picture that may require hikes. Now its attention can just focus on inflation. On the other hand here, Thomas, if you get a beat in inflation, a surprise higher, all of a sudden the Fed may be not able to sit on its hands for the foreseeable future to see if this is a temporary energy shock, which could drag forward the expectations for a hike at some point later this year. So if anything, better than expected jobs, slightly weaker than expected inflation. That's kind of the sweet spot right now. According to our Bloomberg consensus forecast, Thomas, for tomorrow, because that's not what the Cleveland Fed is using real-time inputs here. But the consensus forecast for tomorrow's jobs data is a little bit softer than what we're seeing here, 3.7%. Actually, now it got upgraded over the course of today. I stand corrected. 3.7% for tomorrow's CPI. The core inflation up 0.4% for the month of April. That is well above what the Cleveland Fed is tracking. The month over month is doing at 0.6%. Keep in mind, last month was 0.9% month over month. Now, oil prices have stabilized here, Thomas, relatively speaking, somewhere in the mid-90s. And so perhaps that month over month impact on the energy component will begin to subside. That's not to say anything about the year over year. But if that's kind of the bull scenario that you're rooting for, if you're a bull, I should say, you're rooting for the scenario where you get inflation just a little bit less warm than the market fears, following on with that good jobs data that we had on Friday. So for now, Thomas, stocks are still trying higher. It's largely predicated on what's happening in the tech sector, mainly what's happening with memory stocks right now. Semiconductors are running again up another 1.85% today. dragging forward the NASDAQ into another all-time high here, 29,466. I know people are trying to call the top in this market here. But Thomas, when does the bull trade end? Did you just keep riding it until the rails fall off at this point? It feels like it's been nonstop.
Yeah, I mean, I'm kind of in the wrong area of tech here, it seems like, because, a couple of weeks ago I put on short puts. I did it in things like Microsoft, Meta, some of the mags names. And, what we've been seeing is everyone knows is semiconductors, SMH really are the ones dragging this market higher. So, I got to start playing some other names here. But overall, I don't think this is where you try to call a top yet. I mean, you could have done that for weeks now and it would have turned against you.
It would have turned against you. Data centers, for example, just so far this month of May, DTCR, an ETF that we've been following here, Tom, is 7.7% higher. SMH is higher by 13.85% right now this month. It's an absolute tear. Technology, broadly speaking, is up 12% or 11.5% through something like XLK. And that is where the leadership sits today. It's presiding in the names that continue to run up in the space. AI infrastructure, hyperscalers, anything to do with compute build outs, you name it, Thomas, it remains on the bid. I think that we need to just keep in mind what the structure of this market looks like, because holding on long here as this thing runs and runs and runs, I know for a lot of folks it can be difficult, but this is where a useful technical filter comes into play. We've been watching the 1 week moving average insofar as that's been the key characteristic of this particular trend since the end of March when the S&P 500 and the NASDAQ closed above its 1 week average. Since March 31st, Thomas, we're sustaining the move through those levels. That trend line has been support on days where we have pulled back or paused or gapped open lower. This is very strong momentum right now. So if you're a bear, you are effectively calling a top, trying to catch a falling knife, but in reverse. And so that is not necessarily the way that you want to play a market where you have low vol, or at least suppressed vol, low volume, and positive technical drift. That's the float higher market.
Oh, yeah. Yeah. And it's like, high oil prices are not going to drag on data centers or tech companies, really. You're a farmer, you have higher input costs right away because diesel prices go up, fertilizer prices are going up. Data centers, their energy supply is more stable in the U.S. Natural gas prices, nuclear, things like that. So, it's not like, everyone that runs these data centers or invests in them is going to say, wait, hold on, oil's higher, let's stop investing. That's not what we're seeing. That's not what we're going to see. If it's anything that puts a stop to the data centers, it's going to take a long time because it needs to feed through into the whole economy. Mm-hmm. So I think it makes sense that we're seeing, the leaders being data centers not care about higher oil, not care about so much inflation. It's kind of siloed from those concerns, at least in the short term.
It has been in part because of all the money that's going around. This earnings season, a very good earnings season, the best earnings season that we've seen since Q4 21, which there's a base effect that it's working off of, Thomas, because of where we were in 2020 with COVID. Okay. Right. So that's why I say, like, in my life, this feels like the best quarter of earnings that we've had in my lifetime, professionally speaking, even though the earnings growth rate doesn't exceed what we saw in Q4 21. That felt more artifice than where we are right now. But 89% of companies in the S&P 500 have reported as of the end of last week. According to FactSet, 84% of those companies produced a positive EPS surprise, and 80% of them beat on revenues as well. Just for the sake of the conversation here, we're looking at 27.7% actual growth rate for the quarter. That is technically still the blended earnings growth rate because we haven't finished the quarter yet. But if that's where we end up, that is a far cry from the 12.2% that we started this quarter at. So much, 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 much better earnings, Thomas, than I think many people anticipated, which is why the market's responding the way that it's responding here. Do you keep playing the short term, long MES, just buying slightly out of the money calls here? I mean, it's 809,000 contracts traded. I know Ellie's going to tell us that's a problem, but low volatility, Memorial Day around the corner. This feels like summer tradings during a seasonally bullish time of year where you're supposed to buy through July.
Yeah, it's hard to get bull or bearish after earnings are so strong, right? It's I think this is more a time when you buy the pullback. If you're not in yet, yeah, maybe you buy the near the money long call spreads in MES, or maybe you wait for a pullback and then get long. Trying to call the top it's a lot harder to do.
I'm trying to find the chart here, and I wish I had it queued up before the start of the show. It's going to come to me. Looking at the contributions to the evolution of the market gains so far this year, and some of it is related to revenue, some of it's related to multiples expanding, other portions of it are related to changes in interest rates. The fact of the matter is right now we're looking at a market where PE ratios have come in. This is what I'm thinking of right here. I'm glad I found this in just the nick of time before I was running out of things to say here. This is from Goldman Sachs over the weekend. Price in the S&P 500 is up 8% year to date. The consensus forward 12-month EPS has grown by 13%. The PE ratio is down by 4. So valuations are actually lower. And this has been a tentpole of what I've been arguing about with Ilya and Nick about why this rally still has room to run in recent weeks. I got the bulk of the early move wrong. But now we're 1,100 points, almost 1,200 points off the low. So I've caught half of it. Feel pretty good about that. It's better than missing most of it still. But you have these fundamental moorings. And maybe this is my background as perhaps, having studied for the CFA charter over the years, not just coming at this from a trading perspective, Thomas. I'm a little bit more academic. But the fundamentals of this market right now continue to get strong. And that's not to say anything about that excellent data we had after the 7 days up 7 in a row, or the 10% over 10 days that Ryan Detrick over Carson Research published, where you're looking at market returns exceeding 14% over a 6-month window, or years where you have at least 1 7-day winning streak going back to 1990. 19 of the past 20 occurrences have produced a gain of 18.8% on average. So, Thomas, I think leaning long here, buying dips, you're right. Until we get the catalyst that tells us we have to change our tune. If it's not Iran, right, because the earnings are so good and the market's focused on its own game here right now, is NVIDIA the next thing that bulls really need to be worried about on May 20th?
I mean, that's the big one that's going to come up. A lot of things that have reported already. If you look at the tech stocks, so the chip stocks, I mean, is there a lot of concern that NVIDIA is going to come out and say something like demand is slowing down or something like that? I mean, it's doubtful. Possible, but, it doesn't look like that.
I don't think it looks like that either. Thomas, with respect to NVIDIA, we pointed out a few weeks back how when you have a head and shoulders pattern that fails to give you acceleration to the downside, right? You get this false breakout, you get a break to the neckline, you return above the neckline. You then take that point and you look for ultimately a measured move higher. And so that was looking for ultimately 245. I don't have any exposure up there. This is just a recollection of a previous charting analysis we did here on NVIDIA. But the market is behaving in that manner, where false breakdown has some thrust. Another 10% in NVIDIA to the upside seems feasible to me, just looking at it from a technician's perspective here. But today is a little bit more about the broadening out of the rally, because it's the Russell 2000 that leads here today, which at 2894 is just off of the yearly closing high at 2895.2, Thomas. So for all the hand-wringing about this only being a tech-driven rally, right now we have to respect the fact that you do have the small caps perking up, and them small caps putting in a high close for the year, even if they're not performing as well as the semis or tech as broad. We can't call that a problem.
No, I mean, RTY doing really good today. KRE is down, so the regional bank's down. Russell shaking it off, still moving higher. A lot of most other components, and they're doing very well. Yeah, I usually don't play RTY, but it's looking good technically.
Technicals are looking good for RTY in part because you got a lot of these names that are domestic focused today that are having strong performances. You do have the telecoms, the metals and mining, which are up. You have, broadly speaking, materials that are likewise trading higher. In terms of the losers on the sector, rotation basis here, we track 26 sector ETFs here on Futures Power Hour. I have 9 that are in the red right now for the session. Although let me just double check that because this number, that's 10 that are red here for the session. That's now coming through. The banks you pointed out are some of the weaker ones. You also see home construction down, home builders down today. We had a pretty disappointing existing home sales report this morning, Thomas. Even though mortgage rates fell over the course of the past month, at least in the month of April during the reporting period, the market was anticipating 4.05 million existing home sales and only came in at 4.02. And so, how do you explain mortgage rates came down and we're going into the spring buying season and the economy is growing at 3.7% and stocks are on all-time highs? Why are consumers not making the jump into new homes? Well, we see consumer confidence data at the lowest levels ever. Diesel prices are about to hit all-time highs, which will mean grocery prices are about to be going up over the next few months. Stock up now before that hits. I continue to buy lots of rice, Thomas, and put it in the basement. I'm starting my own commodity exchange, by the way, if anyone's interested. But to that point, you're seeing the diesel prices continue to go up. And there are, why would you want to jump in right now if you think that your cost of living over the next 6 months is going to shoot up when you get into a new home? Why not continue to stay in your current place where you may not have to take the burden on? So at the edges here, at the margins, if it's copper's move today or the existing home sales data, maybe we're seeing some further spillovers from the Iran war into actual economic activity and behavior.
Yeah, I mean, you're right. If a lot of the home seekers at the margins, you're maybe getting like, let's wait a minute, prices are going up right now. I think that's definitely probably a factor that comes in. Consumer sentiment hitting all-time lows again. Gas prices a lot to do with that. But the economy's still running. GDP target or estimates at 3.7. I mean, that's high growth.
Yeah. You said house prices are continuing to go up. I'm just thinking of a report from my town recently. Like the average age of a home buyer in my town was 58 years old. No knock on 58-year-olds, but they don't have kids that go into elementary school, which means classroom sizes are going to dwindle. So I'm looking at Zillow right now for his estimates in the area, and it's outrageous. So huge problems, Thomas. If you think that energy prices are going up and it's going to be an additional $200 or $300 a month out of your pocket for your gas bill for the foreseeable future, right, to fill up your car to get to work, then is that something it's got to come from somewhere? It might be coming out of your mortgage payment if you're going to go buy a new home, so you can't afford the same mortgage payment that you thought you could previously. Don't want to ignore those things, but as long as the AI revolution marches forward, Thomas, the pockets of this market exhibiting strength can continue in the very short term, at least. Maybe NVIDIA is what derails this thing. It marks the top. You get the good NVIDIA earnings. People take profit. You get a breather. But until then, I don't think there's anything that we need to change here, which we haven't been changing in recent weeks. 1 week moving average. It's holding up. That's the characteristic of this trend. We could talk in circles. But until that changes, I'm going to stay looking long deltas right now. It continues to reward.
Yeah, I mean, this is kind of like a moment where you're taking what the market gives you, right? Why fight against it? Why make it complicated for yourself? You can spin out any thesis you want for why the market should go down, but timing is everything. And if you get the time wrong, even a few days, it turns your trade over.
Thomas, I think we can keep an eye on the Russell for the rest of today's session. If it closes up at a new high, that would certainly be welcome for the small caps. Broadly speaking, in terms of this rally broadening out, small caps are getting it. QQEW, the equal weighted NASDAQ, is not, which is an interesting wrinkle to this whole rally that we're seeing today. You go over to RSP, the equal weighted S&P 500, not quite there yet. And if there was ever a place for us to really give us that oomph that we're in the clear, this would be it. You could do this horizontally or diagonally. And I know people take issue with diagonal trend lines because they're so subjective. Okay, but April and November 2025 lows last year, that trend line, we're trying to get back above and into that trend once more. Also, that's where the highs that we had in February here in April reside. And so getting to 205, 206, 207 here in RSP just as a point of reference from the technician's perspective, would mean that we're in breakout territory for a broader swath of the market than just the top line tech names. A rising tide kind of lifts all boats in the harbor situation. We can't discount that from occurring here in what is a very good time of the year for the stock market, which is why you hear me, in my rudest of terms, talk down about people who say sell in May and go away, because that's just not what history tells us to do.
No, yeah, it sounds nice, and you could go, do summer stuff and all that, but it doesn't add up.
Does not add up. Thomas, let's make our move over to oil here, which is once again the linchpin upon which the rest of the market pivots. We talked about oil prices today flirting with $100 again. Brent crude prices are back there. Crude touched ever so briefly $100.37 a barrel before coming back to 98.37 cents here, Thomas. Most of that is an artifact of the gap open higher that we had last night, although we did try to make a run there this morning when President Trump said that the Iran deal was on life support, as it were. The market is not so responsive today. It almost feels like it's a little bit of boy who cried wolf, both to the Iranian headlines and to the U.S. headlines. Are you seeing signs of a market that's getting perhaps a little tired?
Yeah, and I'm pretty sure we said this was going to happen, right? It's headline exhaustion. You get whipped back and forth every day. You just keep going. It's been weeks and weeks and weeks now. This is at the point where the market is not going to care so much what the news is. It's more caring about action. So words don't matter, actions matter more, so it's going to have to come down to that where, you're just tired of trading the headlines. They're getting less responsive. So this is, it looks like we're going back toward escalation. But I think if that was truly the case, and if and when we do get there, I think obviously you'll see crude prices respond most likely to the upside. But for now, it's for saying the deal is on life support, up 3%. Okay, we've seen 3% moves a lot without a headline like that. So, yeah, it's up. It's probably up a little bit because of that, but definitely some headline exhaustion here.
It really feels like oil has these elevator down, stair step up kind of price action right now, where when you get the big headline that the ceasefire is happening, or the blockade's beginning, or the blockade's turning off, or that's when oil is having its big day lower, but then that's the digestion, and that's it. And then scratch and claw up $1, up $2, up $3, and all of a sudden you look at the end of the week and you go, wait, we had that $5 down day on Monday, but we're now higher than we were on Monday? When did that happen? Happens pretty quickly. So today you get your gap open higher, and we're kind of staying up here, right? Friday, we got our close just right near 95 in the CLM6 contract. That was 95.42. So today we open up at 98.19, and we're basically holding there. As far as I'm concerned, one of the characteristics of this market for the duration of this year has been that 50-day moving average holding up as major support. So another drop down to 90. We'll see if the market treats that as another inflection point. And if you get down to 90, it may be an opportunity to look to sell puts. That's quite frankly how I see this year, not just in the M6 contract, but also thinking a little bit more constructively about some of the duration of disruptions that are happening right now, Thomas. I'm looking at CLZ6 here, which is having another fine session itself, a better looking candle than what you're seeing over the past few days relative to M6. But the other day we went out and we took a look at going out to the Z6 expiration to start thinking about building in a position before this market gets away from us, down at the 71.69 short put spread here, because that would mean that we're holding the 50-day, we're holding the lows that we had throughout March and April. Do you find that appealing right now while we still have oil volatility sticking around in a market where, prices may stay up, but if we get the war ending headlines, volatility probably comes off more so than oil price does itself? Would you be looking to sell puts on a longer term basis?
Yeah, I think that makes sense. I have a short put spread in CLN6. That's 36 days out. I've been looking. I was looking last week to start operating in the Q6 contract. I'll probably start to do that. Q6 is where's that trading? 91.22. So yeah, selling puts anywhere. Get down to 30 delta around 82. You go more for a 25 delta around 79. I might sell them as low as like 676.5 around there. But I definitely think short put spreads is still the way to play this market right now.
We could get the headline where the bombing begins again, but at the end of last week, we saw that the U.S. and Iran were having a tiff in the Strait of Hormuz, and over the duration of that, their oil's up, CLQ6 up $4 as those headlines play out over the past few days. But Trump continues to downplay them. He called them a love tap the other day, Thomas. I mean, if you're looking for a pretext to go back to war, you're not calling bombings love taps. So this has been one of our views, that Trump's looking for an off-ramp. It feels like the lay of the land from my view is that there are 4 distinct actors right now in this conflict. The US, Trump, and the Iranian government want the war to end somehow. The IRGC is trying to bait the US into resuming the war in the Strait of Hormuz. And then you look at the actions of what Israel's doing in Lebanon, and it feels like they're trying to bait the Iranian government to breaking the ceasefire. So every time the ceasefire gets close, you're seeing the IRGC do something in the Strait, or Israel do something in Lebanon. Those have been tells. And then Trump and the Iranian government's reactions downplaying any of these incursions or breaches of ceasefire, that's also another tell here. Whether or not we actually get any resolution this week, who knows? Trump says it's a week away. The ceasefire's on life support. Oil's up a bit. Until it meaningfully crosses 110, Thomas, I mean, looking at some of these charts, stocks probably continue to ignore it. If it's range bound between 85 and 95, 180, stocks are going to keep shrugging it off.
Yeah, 100% agree. Stocks are going to shrug this off unless we get above 110, because that's going to break us out of the range. It'll mean that something has changed. It doesn't necessarily have to be going back to war. We could get a few weeks out and inventories start running dangerously low. But I agree. I think range trading this, even if you want to do an iron condor, I don't hate that. Playing around 120 down to anywhere around 80 or under that. There's a defined range here to play. It looks like you're right. Trump is not trying to escalate that, and maybe that's why the market also isn't responding so much. Is he doesn't seem keen to go right back into military action here. Overall, though, there's not really that much traffic increase in the Strait of Hormuz. So, I mean, you're still getting these reduced oil flows. I'm not sure if it's 12 million barrels a day offline right now, but probably close to that. There's going to have to be a point at when something happens, because inventory is just running lower and lower. You got SPR barrels now going into the Atlantic Basin. So there's a buffer, but there's a time constraint on that as well.
Thomas, you mentioned some of the highs and lows we've seen. I'm looking at the continuous crude oil contract. 119.48 is the high that we have in March. The swing lows that we have here in mid-April are down to $78.97. So what would a short iron condor look like? Effectively $20 wide on either side, right? We're sitting at 100 plus 20, 120 minus 20, 80. In 66 days to expiration, 76.78 short put spread side, the 120, 122 short call spread side of a short iron condor trade yields just under 60%, 56% probability of profit, risking 3 to make 2, a little bit better than that at the margin here. Reasonable, like it, let's take it. I think that we're going to stay content with this range-bound choppy action, particularly this week as Trump goes to China to meet with Xi. How much of an incentive is that for there to be no escalation in the coming days, where we could see a lot of headline-driven chop, but no real progress directionally?
Yeah, Trump's going to be in China, a big state visit. I agree. You don't really want the war making a major escalation, because it's going to take the focus off of that state visit, where he undoubtedly, and also President Xi, wants to announce some good news. So it's, I agree. The risk for a escalation on the U.S. side through the period that he's in China, I think it's reasonable to say it's a bit lower than if he wasn't there.
So 66 days may not be the most optimal time frame to play such a view like that if we're expecting a lot of chop this week. But think about the doji that we have today, Thomas, and perhaps that's the takeaway here. A lot of headlines, but for the market after it opened, we had the weekend news and all the headlines that we've seen for the past, we'll call it almost 24 hours now. We're like 20 hours into the market being open from the Sunday open. It's a doji candle today in oil. So the U.S. incentive in the short term feels like not to cause too many waves. Trump having to respond to a major Iranian breach of the ceasefire while he's in China would not be great. And likewise, him announcing a major attack on Iran while he's in China would probably not be perceived well by the host country, given the fact that Iran's somewhat of a client state of theirs. So I'm going to just put the odds this week higher for resolution than not, even if oil is up, or at least, how should I say this? The odds that we see escalation this week, I think, are lower than we've seen in recent weeks, given Trump's trip to China coming up.
Yeah, that's going to be important to watch. Trade headlines coming out of there. There should be something about soybeans. I mean, it's a big one that the administration wants.
We keep hearing about them. We can move over to bonds quickly, Thomas, but they broke their streak on Friday. They had basically closed 22 sessions in a row, I believe it was, where we see the directional move in oil reflect the directional move in yield. So oil up, oil down, yields down. Today, we see that with oil having gapped open higher, we do have our notes, our bonds trading a little bit softer. They made their way back to the midpoint of a recent trading range, which has been carved out effectively to the middle of March, or since the middle of March, rather. And they're kind of just slacking off again as oil prices bump up here. Thomas, I'm going to ask you for what feels like the fifth week in a row. Are you trading bonds yet?
No, I don't really think I have much reason to trade bonds. It's kind of like almost an oil trade, essentially.
And it feels like tomorrow could be a rude awakening for bonds with the CPI report. If this thing comes in higher than expected.
Yeah, I mean, if you break the downside range, maybe my tune will change on that. I don't know. I see them going down. If I had to make a gut feeling call, especially higher inflation, you get the rate hike expectations coming in a bit. Yeah, it is a range trade, but not enough volatility for me to put on something like an iron condor.
Here's the thing about being an equity market bull right now. We don't really need to pay attention to cuts or hikes or the price of oil as long as we're getting that earnings growth. But let's just envision a scenario where, Thomas, in an absence of meaningful earnings data this week, because certainly we're not really waiting anything from the tech sector on the scale of anything Mag 7 related until we get to NVIDIA, and 89% of companies have reported already. What happens, just scenario analysis wise, if tomorrow's CPI data is hotter than expected? What's the outcome for markets here? Do we think that notes and bonds trade higher or lower? They probably would trade lower. And at 4 days to expiration, given the downside range here, if I'm an equity market bull, a hot CPI report kind of goes from, the Fed doesn't need to worry about the jobs market, it can focus on inflation, to it needs to stop thinking about inflation to acting on inflation. As long as cuts don't materialize, stocks are probably going to be fine. That could start a short-term pullback. I think it wouldn't ultimately matter if the economy is growing near 4% and we have the AI spending that we have, but it could derail things for a little while, Thomas, as the market adjusts to that new reality. So tomorrow, right, if we do get hot CPI data and notes and bonds are primed to sell off, the technical drift here is lower, back below the 1 week moving average, failing against the 1 month, can't get to the 50, all have a negative slope, rate of changes to the downside. I'm looking at the 4 days here. For $90, I could effectively buy protection that the market's not underpricing the risk of the Fed having to hike rates in the next few months, and that becoming a new catalyst to scare stocks. So equity bull, short-term incentive structure is to look to hedge your risk through maybe a long put or a long put spread in notes or bonds for tomorrow.
Yeah, I think that makes sense because if it is, material to the stock market. I think it'll be temporary. One print, is it going to throw the whole rally off? No. Is it going to cause a pause? Maybe a pullback? I think that's more likely.
Yeah, for the sake of this conversation, just because I am bullish in equities and I don't want to see those gains disappear, this 4 DTE, so if this doesn't work out tomorrow, let's say inflation undershoots, this is going to go down. It's a max loss of $62. There are 4 days to expiration, so if prices don't move at all, it's going to cost me $15 or so per day in decay here. I'm going to see if we can get this filled, Thomas. Given the fact that we have seen inflation running a little bit warmer than anticipated, I don't think that 3.6%, 3.7%, that could easily be hurdled. If the Cleveland Fed inflation tracker's right, it will be.
I like that trade because you're not really paying much for it.
Unfortunately, there's just not a lot of, I'd like to go further out. You could just buy the 110 and risk $90 and keep it open-ended, quite frankly, instead of capping your potential gains. You're increasing your risk loss by 50% rate from 62 to 93. But also your gain potential, if this thing drops to 109 tomorrow, you're not just looking at a $400 winner. You're looking at something a little bit more substantial than that. Either way, though, it's the big story this week for bonds is going to be CPI, of course. We also are, though, moving into the next week of May here, Thomas, and this week of May brings about some more auction activity. In fact, today we had 3-year notes, and that's not so much of our concern because 2s and 5s, we don't really pay attention to them here. We paid more attention to the notes and the bonds. Tomorrow, 10-year note auction. Wednesday, 30-year bond auction. So we're in the teeth of it right now. And in fact, for good measure, next Wednesday, we're going to get the 20-year bond auction as well. So the next few days, this is really when the bond market can see its own catalyst come to life between CPI and the auctions themselves.
Yeah, I'll be watching the auctions. I'm sure you'll be talking about them on FPH. You wrote that good piece I always reference. It's pretty, how to read a bond auction. I really like that one. Is this an auction where there's an auctioneer up there at the Treasury and they're, doing that fast speak?
Did you see this week on Saturday Night Live? Is that where you're getting this from?
No, I didn't even see that.
There was a skit this weekend with Matt Damon where him and his wife are both auctioneers in a troubled marriage, and so it was 2 auctioneers arguing. It was grating, to say the least. Gold prices here today, Thomas. We talk about our metals being impacted by this. Gold's up 0.07%, and it really does look like it's trying to base here and get a little bit of a breakout going. It's admirable that it's holding above the former swing level here, right? Doesn't it kind of look like the British pound on the daily chart or the euro on the daily chart right now?
Yeah.
Right, where you get this series of lower lows, you base above the former swing highs, and then you start to get your breakout. You saw this in the euro as well here, right? You break down, you get your former highs, then it becomes your base of support, and you start swinging up. I think about that analogy here for gold prices on that 4-hour time frame. Okay, there's your swing, breaking down, now pushing up again. Gold looks like it does one higher here. It's sitting at the level where if you get a jump through the recent high of 47.75, bulls are back. Now, whether or not this is the right metal to be long is a different story. Because you and I last week were talking about, and you've been on this for many weeks now, to your credit, and my wallet thanks you. You've been talking about how sulfur issues in the supply chain are going to lead to diminished supplies of copper and as a knock-on effect, potentially silver here. And some early data that we've seen over the weekend suggests that those supply chain concerns are starting to come to fruition. So silver prices are having a bang-up day, up 6.78%. Copper prices are up 2.7%, back to $6.46. And it's thanks to you that I'm sitting long both right now, having avoided silver for many months. I got him last week because of what you were telling me. So Thomas, what's going on here that's driving this move today? Because you're making me very happy.
Yeah, I was in this for a long time, and I finally, I was rolling up the short put spreads, and I this is the move I didn't catch. So I took mine off last week. I kept it off, kind of kicking myself for that, because this is probably the best move the period that I've been doing this, where you're just seeing copper pretty much break into a new range that it hasn't seen in a while. I think you're right about the sulfur. So if you have higher sulfur prices, less sulfur, it threatens your ability to refine it. You can get less copper supply. Overall, I don't know if that's everything that's driving this move, or if it's just a technical breakout. It sliced above its last range about 6.2, and then it just kept buying. It just looks good. The long term, the medium term copper outlook, price looks good. It's, a few weeks ago, I think the International Copper Study Group came out and they switched back to saying there was a surplus in the market, or there's going to be a surplus. The market didn't care about that, right? And they're like the one industry group that forecasts supply on copper. This is just doing its own thing. Yes, related to the Strait of Hormuz being closed. It's just, it's a beautiful technical move.
Yeah, I've argued in the past maybe that we should ignore the price action at the end of January because it was all around that metals craze that was happening in platinum, palladium, gold, silver. Copper was really not part of that. And yet it got sucked in when we had that big liquidity event, January 29th, 30th, Thomas. So let's pretend that I've erased those candlesticks on this chart. What would that chart look like here to us? This is clearly a breakout, and it has some legs. So 6.2 becomes a neckline of sorts, 6.2, 6.25, maybe 6.3. If we get a dip back into that area, first blush, we have to use it as an opportunity to get more long. And that's what I'll be doing. And the way that I'll be playing this is if we can get a pullback here, and the way that these markets have been running, maybe it never transpires and I miss in adding more. I haven't been able to get out of the 15, but looking at like 78 days, dare I say, looking out at like 710, I mean, I know that seems ridiculous, but when we think about the measured move down here, if this head in an inverse head and shoulder pattern is 530, and we're talking about a neckline at 6.2, that's 90 cents. 90 cents on top of 6.2 is going to get you to 710. So maybe if this is one of those trades where times we go, you know what, we're not going to time this the right way because of all the headlines, but we get ourselves enough duration with the right strikes here, and we can kind of sit back and let the market do the heavy lifting over the next few months. And if we're wrong and this thing turns against us quickly, at least we have so much duration in it that we may be able to abandon it for a small loss. But if this is an inverse head and shoulders bottoming pattern, right, which I think that we need to take some creative liberty here with ignoring the craziness at the end of January. This is a fantastic looking chart right now with an awesome fundamental story still.
Yeah, I have to find a way to get back into this trade. So the next good dip, I'm going to probably be selling those short put spreads again.
We've likewise talked about silver here, and this wasn't a trade that we took during the breakout, Thomas, in SI itself, because quite frankly, it was a very large trade, and the amount of buying power that it was going to take up would have been prohibitive for what we're trying to accomplish around here. We did go out into SLV, however, and maybe it's just because of July 17th is right near my birthday, we did get into the 77, 79 long call spreads, which as of today now are starting to go into the money. So this was an out-of-money trade looking for a bit of a bump here. There's a lot of time left. This has not fully realized its potential whatsoever, but this is the kind of price action that would validate this perspective that we're looking at a market that's now having bottomed and has turned a corner for whatever rhyme or reason. And I find the decoupling today, silver and copper, the more industrial constrained ones that would be closer to the AI story, closer to some of the supply chain issues that we're talking about, those are the ones that are doing well, even with oil prices now back up. Gold is still suffering because it's being plundered for liquidity. So, gold may look good, but copper and silver have the better setups. And that's where I've been trading them, Thomas. I know that's where you've been mostly looking at as well, but I think we now have some clearer confidence with today's action.
Yeah, I'm actually short gold. I have a long put spread in it. It's taking a little bit of pain, but I have 45 days left on it, so I'm going to keep it. And in the meantime, I'll try to get back into the long copper trade. I'm not sure if I'm going to buy right here. I will wait for a pullback. But it's been a great trade.
And all credit to you. If silver does have a pullback here, I'm looking at the 8-hour chart. I kind of just like dividing the day into Asia, Europe, North America, very simply, if that's too simple. But in that case, you have like $83.20 or so, maybe a little bit more, maybe a little bit less, depending upon where you're looking. But since March 16th, that had been a line in the sand here for this market, Thomas. So we'll just put you up on the screen here. And you can see how if we do get a little bit of a pullback here down towards 83 or so, 83.5, if I would be interested in adding more out of the money exposure because this thing is breaking out. And so in SLV, that might be looking at like 82, 84. It might be an SI depending upon what the strikes are and the liquidity conditions are like. But the market appears to have turned a corner in both copper, silver, and we should embrace it. I can't believe we're doing this for the first time in months. We can trade them long with confidence again, it feels like.
Yeah, absolutely. Silver, I haven't traded it, but this is looking good too.
Like what I see. I almost wish I was filled in the SI contract because this move today would have been a little bit healthier for the P&L. But you can't win them all. Thomas, I'm just grateful that I'm back in the driver's seat again. March was not fun. Dollar bounces with oil. That is the story of the US dollar turnaround today, Thomas. The dollar was up earlier because oil prices were up, and as oil has subsided, the dollar has pulled back some. But those charts we talked about earlier for the euro, for the pound, the allegory, the analogy that they provide for gold on that 4-hour time frame, I think they speak for themselves. It looks like the market's turning a corner here. If we're not seeing the dollar take off in an environment where oil prices are holding up, it almost goes to show that the liquidity concern phase of this particular crisis is in the background. It could come back. But if you're operating on that basis, you're missing out on what's the prevailing trend. And even in the pound here today, Thomas, we were looking at a 4-hour chart, a triangle after breaking a downtrend in a relative up move on a shorter term time frame. I mean, this looks like continuation. We're starting to get it. So dollar has higher yields today, and yet it's not doing well. So where does that leave it? I don't think in a good place.
Yeah, no, I'm not impressed by the dollar, its reaction to higher oil. I remain long the British pound and the Australian dollar.
I'm with you. The Aussie continues to run up here, 72.49. The US may not be cutting rates anytime soon, Thomas, or raising rates anytime soon, but the RBA has been, and they plan on doing so more. While we have you here today, I know that you mentioned something about soybeans at the start of the show, which I think is worth discussing a little bit more, and kind of why I'm speed running the FX session here. We do have, Thomas, our China-US summit coming up in a few days' time, okay? I'm keeping an eye on what's happening with some of these charts, and I got to make sure I see these all on halted stuff here. I want to double check that. Thomas, what's the big deal right now with these soft ag prices? We've seen some volatility come and go. We've seen prices ebb and flow around some of the WASDE reports, some of the crop yield numbers. We've certainly heard the stories about fertilizer not being plentiful enough as we're at the start or now making our way through the middle of crop sowing season. Are these understated, misunderstood futures products? I see ZS has a 68 IVR. That is incredibly high. Why shouldn't people be trading it more, especially around a week that is rife with macro headlines thanks to this US-China summit?
Yeah, no, I think you should be trading it. I'm long soybeans. I'm long corn. Wheat's the only one of the three that I'm not playing to the upside. Soybeans, it's doing good on higher oil today. There's a diesel component to it. For corn, there's an ethanol component. So higher oil prices incentivizes more biodiesel, more ethanol production. But yeah, the China story is the big one to watch. I think we're looking for, the commitment of 25 million metric tons over the next 3 years. Trump mentioned something about 8 MMTs on top of that as well. So, any headline can come out of this, and Trump will probably tweet this when it does happen. So watching Truth Social is one of the things to do if you're trading these. The thing is, the South American crop right now, for corn, soybeans, it's cheaper than the prices in America. So naturally, if you're a buyer like China, you're buying from Brazil, you're buying from other places essentially. So the U.S. is looking to lock in a deal where they're going to take U.S. product, even if it's not cheaper, right? And that's going to reduce supply because the exports are going to rise a lot. And how much optimism is being priced in currently? I mean, some of this run up probably on the heels on right before this China summit. It's probably reflecting some of it, but there's still a lot of uncertainty what the actual number is going to be, and it could be anything. I mean, it all depends on how the negotiations go, but I think the upside risk is greater than selling off right now, especially if oil stays elevated.
The one chart that we don't have on the platform here, but if you have TradingView, you can type in AMAF1 ! That will bring up the East Asian ammonia futures contract, which is interesting insofar as it is up 53% year to date so far. And if I'm thinking about what's happening, Thomas, there's a law of one price in global markets. And so if we see that Asian fertilizer prices are going to continue to pull up, it's going to incentivize countries like China to come to the table and try to buy American soybeans, which arguably, or any American ag product, which arguably have the lower cost input embedded into the current price. So, if those ammonia prices, if the urea is I think urea is down like 2.4% today. But if we see, broadly speaking, this basket of fertilizer prices continue to go up and up and up, it feeds through. It feeds through into these, and we can't ignore that as one of the consequences here of this war. So I remain long wheat, still long 650 wheat here, hoping for another push to the upside. And today is certainly adding on to it. What's next for the calendar, Thomas? Tomorrow, May 12th, CPI in the morning, 8:30 Eastern, 7:30 Central Time. The numbers don't look great. 0.6% is down from 0.9 on the estimate, but that's still far too hot. 3.7 expected on the headline there and 2.7 on the core. So moving in the wrong direction. As long as it's not too hot, Thomas, the market will keep believing. It wants to believe AI over everything. That's disinflationary. Plus, we've seen these things before. It's all transitory, right? What's to be worried about?
Yeah.
We'll be back later on. I'm closing out the day on Last Call today with Errol, 3:30 Eastern, 2:30 Central Time. So be sure to join us there. And then, of course, overtime with Ilya, 4 Eastern, 3 Central. So for Thomas Westwater, I've been Chris Vecchio. Get some water, get some food. Come back, though, because in 5 minutes, Dr. Jim is here, Dr. Jim Schultz. You're watching Tasty Live.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
When the market moves, traders need to move faster. Tasty Trade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, Tasty Trade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on Tasty Trade.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
First thing about Tasty Trade is how easy it is. It's a very quick, light platform. It's all on one page.
And with 1 or 2 clicks, you can be anywhere on the platform.
Being able to see graphically where your profit and loss zones are.
Whether it's a pool, a puddle, or a sea, you can navigate your way out of it with the Tasty platform. So I love that.
Look who's back testing. tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at tastytrade.
Think you know where vol's gonna go? Test your theories with backtesting. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial the DTE, stack the legs, see what survives. Trade what you want, when you want with Tasty Trade.
And this is From Theory to Practice. Welcome to the show today. Welcome to the broadcast, man. Welcome to the Monday, the post-stomach bug edition of what it is that we were trying to do. It finally got me, man. Like, I thought we could fight against it. I thought I could make it through, but oh, I certainly could not. It took down the kids. It took down my wife. And then it finally called my number last week. And so I just bounced, man. It was like Goodwill Hunting. There was no goodbyes. There was no emotional send-offs. I was just gone for 48 hours, but now we are back and you guys are here. So thank you guys so much for being a part of what it is that we are doing. If you're watching over on the Tasty Live Network, then I would actually bounce on over to YouTube because you can join the conversation and join the discussion, and you can communicate with your brethren who are also watching the show. Man, you can celebrate if you are a bull for the 119th consecutive day, or you can commiserate if you are a bear for the 411th consecutive day. But I can assure you, either way, it will be a good time had by most. So hop into the chat, ask me whatever questions that you might have, communicate with your brethren, make some friends in the chat, and most importantly, you guys have one job: pump the algo, man. Questions, comments, stories, and jokes. I want to hear them. The algo's dying to hear them. So put them all in the chat. And of course, I'll try to get to as many questions as I can right around the second part of the show, right around the halfway mark, or give or take a couple of minutes. And so drop it in the chat box. I'll try to get to as many as I can. We'll see where the wind blows us there. So Ryan, blow us into the market here, man. What are we doing in this little old thing called the stock market, man? It's crazy. It is crazy, crazy stuff out there. Even the S&P is up 30. Risk-free instrument, also known as the NASDAQ futures, extremely high-risk product in theory, at least. But in practice, these last couple of days, couple of weeks, couple of months, I don't know, man. It's pretty darn risk-free. NASDAQ up 132. Got the boomers up 112. You got the Russell 2000 futures index. Or I'm sorry, the Russell 3000 futures index up 23 on the day. You got bonds down 15. You got notes down 9.5. You got oil up $2.50. Nothing like a little oil ripper, market ripper combo. Like, you guys thought it was oatmeal and peanut butter. Like, you guys thought it was buys and tries. Of course, you guys thought it was tuna and applesauce. No, man. It's market ripper, oil ripper. That's what everybody wants. Got UB40 down 17. Got the shifties. Yeah, they're kind of taking it slow today. Only up a couple of bucks, but not the Hunt Brothers, man. Where are my Hunt Brothers at? Aren't they ripping it today? Oh, yeah. Oh, yeah. Silver up 574. Just a quiet little 7% rally in silver, which is really surprising to have silver like be absolutely like rip your face off, like suck your soul right out of your body. But then gold's not really doing anything. Gold's pretty much unched on the day. They typically follow each other to the upside and the downside, but not today, man. Silver up a ton and gold practically unched on the day. You got the British pound is up a little bit. Got the euro is unched, and then volatility actually up on a day like today. Got volatility futures up 18 cents. You got spot volatility. The old VIX up 97 cents today. So you don't see this very often. Market up, vol up, like that's a pretty unusual occurrence. Typically, you're going to see the inverse relationship take hold. I mean, this is one of the most reliable metrics in the marketplace. I mean, reliable metrics in the marketplace. You've got US T-bills, risk-free rate. You got that. Fade Dr. Jim's earning strategies. You got that. And then you've got market prices and market volatility. They're going to essentially be reliably inversely related, maybe 90 to 95% of the time. But not today, man. You got volatility up pretty significantly on a day when the market's up. I mean, it's up 30 points, 28 points on the S&P 500. That's not like a bid-ask bounce. That's not like we're just kind of hovering around unch. Like, that's a significant move to the upside, and yet the VIX is over 18 now. And so what does that mean? Man, I have no idea. No idea whatsoever. But hey, we're all better off for having invested those 3 minutes that we will never get back. So, all right, we're going to go into the portfolio. We're going to take a look at a couple of things that might be going on. And then, of course, I will see where you guys are at. I don't know that we're going to do any new trades today because I do want to kind of bring ourselves up to speed with, where we were at from last week and being out Thursday, Friday. And we'll just kind of see where the wind blows us here on this beautiful, beautiful Monday afternoon. It's about 97 degrees outside. And so, yeah, summer has arrived down here in St. Petersburg, Florida. And I know y'all are still in like the low 40s in Chicago, so you guys got it on easy street, man. Absolute easy street. And so, all right, let's go ahead. Let's go through the portfolio kind of one by one. I see you guys in the chat too, by the way. Man, you guys are doing some work. Man, look at Sam L. Griffin Jones, Brian Dowdy's here, Jerry Kramer's here. Man, Ron Bashar is here, and Point B. Man, Point B even showed up. That's crazy stuff. Luminous Bit is here. Superstar is here. Man, look at Viggy Zags is here. Man, BBB Fine is here. Clean Tigers in the house talking about some soul suckers. I mean, I don't know, man. Like, if you Google, like, what is a soul sucker move? It's going to bring you back to a live feed of the silver move today. Like, it's just going to show you a silver chart on like Yahoo Finance. Like, that is a soul sucker. Now, it's not quite the move we had early in the year in silver, but this one kind of came out of nowhere. Like that one, when you finally got the real big moves, like, the $10 days and $20 days and the $40 day at the end or $50 day, whatever it was, like that was kind of like you knew what you were walking into, right? Like it had been doing that for a while and then it just kind of, picked up steam and then it was absolute bonkers craziness. Like, don't get me wrong. But this one today really kind of came out of nowhere. Like, let me bring up a chart of silver here really quick. I mean, we're going to be back to 90. We're going to be back to 100. I mean, that is some really, really wild stuff. If I look at a daily chart of silver, let me see here. Where are we at? I just want to see, I just want to get a look at some daily ranges, right? Like if I go back like the last few days, I mean, you see these are some fairly quiet days. I mean, there's $5. I mean, I guess that's not that quiet. There's, $5. Yeah, this isn't that quiet at all. But if it's crazy when data actually runs into your opinions and commentary. It doesn't always work out too well. But if you look at some of the silver days, hey, there's $1.82. That's what I'm talking about. Right, there's $3.54. That's what I'm talking about. Look at that little candle right there. It's so small you can't even see it. Look at $1.92. That's what I'm talking about. You got $1.95. Like, we had a lot of days like that. We obviously had some big ones, some big ones mixed in there too. But today is pretty wild, man. You've got silver up, just under $6 on a $7.25 range. And the day is not over. I mean, the day is now over and we're pretty close to the highs. And so we could push that range up even more if silver keeps pushing higher and, we get to 87, 87 and a half, whatever. And so, pretty wild stuff indeed. But all right, let's go through a couple things happening in the portfolio. So number one, let's just go top down. We'll go as long as we can go, man. Let's go as far as we can go. And I think that's good. So let's go ahead. Let's see here. If I do if I look at the euro, this was a strangle that we put on. If I'm not mistaken, this was an ash fin specialty. And so I haven't traded the euro in quite some time, especially euro options. A little outright euro exposure. Maybe I might dabble from time to time here and there. But euro strangles, haven't done that in a while. Well, this is one of the few winners that we actually have on in the portfolio. You can see right there, we sold the strangle for 45 pips. And now it's marking at 18 pips. And so this I'm kind of channeling my inner Ilya Spivak. Like I'm kind of channeling like my inner, even a Chris Vecchio dipping into some euro options and, coming out with a winner. Like, that's pretty nice indeed. So I don't really think we need to talk about this too much longer. I don't think we need to belabor this point any further. I mean, we're just beyond 50% of max profit. That's a really nice trade because I think in the euro, well, hang on, we can kind of figure this out, right? I mean, theoretically, we could figure this out. I think every pip should be what, $12.50? I want to say. I'm going to say it's $12.50. I'm actually not sure. I should be able to figure this out, but I'm only at about 75 to 80% still. And so, I mean, 75 to 80% of a Dr. Jim, that's going to be about 50% of your average person. And so we're right there with the conversion where we need to be. But when I think about that as well, we're up 27 pips. Yeah, I think it's $12.50. It's got to be $12.50. And so if we're at $12.50 a tick, that's a pretty solid trade. I mean, it's got the economic significance, right? I mean, you've got obviously the profitability on the trade. Everything worked. I don't think, did we even get tested on this trade? I don't think we ever got tested. Maybe we will actually belabor this point a little bit. Let's see here. If I go into my chains here really quick, we did this trade on April 28th. It's currently May 11th, so we had the trade on for about 2 weeks. And the strikes are 115.5 and 120. And so right now it's at 118. We're nowhere near being tested right now. I just want to go back and check the tapes. Let's just see. I want to see if we even got close to being tested at any point. I don't know that we did. And so let's see. If I go to the chart, April 28th, where are we at here? April 28th. That's going to be like right here. Oh man, this is beautiful. Like if you look at this, like basically it's going to be all these prices right here. This is the time that we held the trade. So we held it for about 2 weeks. 2 weeks and we're basically out the door, which is going to happen here today. My strikes are up here and down here. Right? So if you are brand new to the show, hey, welcome aboard. If you're brand new to trading options, welcome aboard. You have a very exhilarating journey ahead of you. And by exhilarating, I mean it's going to be pretty frightening a lot of the time. But nevertheless, you have quite an adventure that awaits you. 120 on the top, 115.5 on the bottom. And you can see right there, just look at, we got to get some different color. What am I doing? We got to get some different colors here, man. We can't use the same color. There's no reason to. Happy Magenta Monday to you guys. Let's get a magenta circle there. So if you look in the magenta circle, see now we can do things more scientifically, more precisely. And so this is obviously much better. If you look in the magenta circle, that is the price action that we've had to absorb over the life of this trade. Now, absorb may be a bit grandiose of a term because I kind of forgot about this position. Like I kind of didn't even know I had it on, to be perfectly frank with you all. But if I look at my strikes up top and on the bottom there, you look at the glacier freeze lines now. My strike up here is way up there. My strike down there is way down there. This is very, very scientific stuff. And so you can see that we got nowhere near either one of those strikes. And so we never had to adjust. We never had to do anything. And so I don't know their ass. This Euro strangle business, we may have to dip our grubby little mitts back in the cookie jar here pretty soon. But right now, it looks like a nice trade, nice winner. Let's go ahead and take it off before we get to the bad news. That is MES and MNQ. Man, we are getting absolutely destroyed. And I mean destroyed on both MES and MNQ. And so let's go ahead. Let's close out the Euro. 18 pips. That should be good. And they might make us give up an extra pip just to get out of the trade. That's fine. Let's go in here and let's do 19 just to get us out. There you go. And we are out. So a nice winner on the Euro Strangle. Thank you again there, Ash. I appreciate you. I haven't been doing a good job of keeping receipts, but I did happen to jot that one down. So I did remember. Thank you there, Ash. All right. So let's go to MNQ or MES and MNQ. All right. So this is just absolutely brutal. So you can clearly see, I mean, the P&L Open Bros, I mean, they've got some fodder for the cannon. Like they've got some ammunition ready to go, but we can fight back with a little Starbucks. Look at Starbucks down there, man. Like, was there ever a doubt? Like, did you ever doubt the B- coffee? I certainly didn't. Did you ever doubt the C+ moldy stuff that they're just slanging out from every storefront? I absolutely did not. I've been all in from the very beginning. You can check the tapes. But if we go to MES here, not so good, man. Not so good at all. So MES, man, that's brutal. And look at MNQ. We'll just look at them together because they're both kind of equally as brutal. Not in terms of the P&L. The P&L and MES is obviously worse because we've had that position for longer. But in terms of the emotional damage it's doing to me currently, I would actually say that they're both about the same. Because the MNQ trade, I feel like we put this guy on like Wednesday of last week. Like right before I had to kind of duck out and, you know, go throw up in the toilet. I feel like that's when we put on the MNQ trade. And so I hope you're not having lunch out there. But if you are having like tuna and applesauce, that's going to fit right in with what you're doing right now anyway. And so you're welcome. But if I go to MES and MNQ, then not so good. So let's go to MES. So when did we do this MES trade? Hang on a second. Let's go back. Let's go all the way back into the Wayback Machine. Let's kind of hop in the old hot tub time machine. That movie wasn't that great, if I remember. Was that movie any good? I think I saw it. I mean, that's like, somebody give me a date on the hot tub time machine. I don't know. I can't remember. But put it in the chat because the algo is dying to know. I'm going to say, hold on a second. I think that was a 2018. Was that a 2018 deal? So I'm thinking 8 years ago was hot tub time machine, I think. And I don't even know who was in there. It wasn't, what's that one guy's name? Oh, man. I can't think of it. I can't think of his name. He was in Superbad. I can't think of his name. Put it in the chat. Somebody bail me out. I'm trying to think of like the lead guy in Hot Tub Time Machine, and I can't do it. But you guys got to help me out. And so anyway, I'll let you guys help me out with that. But if I go to MES here, we did the trade. So this has been a bunch of things happening, right? It was strangles and other things. The trade that we have on now, this guy right here, I think that was this guy right here. Like that was this trade that we did on March 19th. Was it not? Like this is the same trade. Now it's rolled and taken on different iterations and what have you, but this is the trade, right? The trade that we did on March 19th. So on March 19th at 247, let me look and see where EMI S&Ps were. Wow, that feels like that was really, really long ago. Is this really the trade that we have on right now? I mean, I think it is because because we got out of this triangle, we get legged out, all that kind of stuff. And so, okay, you guys are helping me out. Tom Sosnoff. No. John Cusack? No, I'm thinking of a different guy. Bill Murray was in Hot Tub Time Machine? No. Seth Rogen. That's who I was thinking of. He was in that movie. Thank you, Jackie. He was in Hot Tub Time Machine, was he not? John Cusack wasn't in Hot Tub Time Machine. Like, what are we doing here, man? Come on. You guys are killing me. Anyway, let's go back to March 19th at 247. John Cusack. Let's see here. If I go into... if I go to MES and I go to, now I got James telling me Seth Rogen was not in Hot Tub Time Machine. Y'all are wrong, man. I don't know if you guys are you guys on the dark web? Are you guys using Bing? Like, get off of Bing, man. I need Google authorized results only. I don't want to hear the Bing stuff. I don't be asking Jeeves. Like, I need legitimate search results because I know Seth Rogen was obviously in Hot Tub Time Machine. But if I go back to March, when was it now? You guys got me all discombobulated. Got Laura's trolling me in the chat. And so March, we did this on March 19th, I think. I don't know what to believe anymore because you guys are you got me kind of unraveled today. March 19th. Okay, so we did this trade. You can see EMI S&Ps were around 6,700, give or take, right? So just a quiet little 700 points in 7 weeks, right? Just a quiet little 12% zipper right to the upside. So I don't know now. Like if, for you guys that are still on Bing, you're still asking Jeeves, what have you, right? If you pop in there, Soul Sucker, it may bring you back to an MES chart. It's probably going to take you to a silver chart, but it may take you to an MES chart because this is absolutely in the Soul Sucker category in terms of what you've had to endure. If you're on the wrong side of it, if you're obviously on the right side of it, I mean, it's all the things that you've ever wanted, of course. You're bonefish every night of the week, probably doing it for lunch, doing a little double feature for you and your family. And so that obviously is going to be an amazing thing. But yeah, MES has been brutal. And then MNQ, it's the same thing, right? I mean, it's kind of different in a lot of ways, but in terms of how I feel, it is kind of similar. So yeah, we did the trade on May 6th. May 6th, let me think. Was that Wednesday? That was Wednesday. Yeah, I had it right. Okay. So I had it right. Not unlike Seth Rogen being not only is he in the movie, he's the lead guy. He's the main guy in the movie. And maybe John Cusack was like an extra or like somebody like randomly off to the side that doesn't have any like lines or anything. But you guys are killing me, man. So May 6th, we did this for 440. And now when you go to, I think for this one, I can actually just do the market state snapshots. They wouldn't let me do it for the other one. Maybe it was too far back, but you can see that I did the trade on May 6th at 3 o'clock. And if you just look at the price, I got my little yellow diamond here in the middle that is telling me when I put the trade on 28,646. Guys, this was 5 days ago, right? This feels like it was 8 minutes ago, right? The NASDAQ was 800 points lower. 800 points lower than where it is right now. That's pretty nutty, man. That's pretty crazy stuff. And so obviously, our short call in the NASDAQ, not doing so well, like not doing too amazingly well in its current form. But what am I going to do? I'm not going to do anything. I'm going to sit tight for a couple of reasons. Number one, for MES, I'm like, hey, we've got pretty much static short delta now. This will help in the event of a crash. Now, I understand. I'm on the internet too. Like, I got it. It's never going back down. This time is different. It's just the beginning of the beginning. I understand. I got it. 100% got it. But just in the event that Johnny Pools 47 is wrong and Johnny Pools 48 is wrong, I know that they've been batting 1,000 for the last, 6 to 12 to 18 months or what have you. And by 1,000, I mean they're batting about 180. If they are wrong on this, I kind of want to be ready. I kind of want to be ready to capture a little something to the downside. But for MNQ, I want to leave this on because, one of the things that I've talked about before is how short calls in the indexes are easier to manage than short calls in the individual stocks. And this will be another example of that. Now, the MES position it's a similar position because it's the same type of strategy, of course, but it's a little bit different now because MES is so deep in the money. You just kind of have to make the decision. Like, do you want to hold the static short delta or do you not? Like, you can do things around the edges. You can add puts. You can roll out in time. I mean, there's a couple things you can do to kind of change a little bit about your position around the edges, but you're not getting away from the fact that what you have on is what you have on. Like, you're not going to get away from the fact that you're pretty much static short delta. Is that what you want? If the answer is yes, then leave it on. If the answer is no, then take it off. It's pretty good. It gets pretty binary when you get to a certain point of holding a deep in the money option. For MNQ right now, we are now at the money. And so we are in a situation where there's a lot of things that we could do. We could hold it. We could add short puts. Right now, I'm going to sit tight because this is such an extreme rally that I got it. I understand that this time is different, but just in case it's not, I'm just going to sit tight and not do anything. And so MNQ, MES, there you go. Pour out a little banana natty if you happen to have any on you right now, which it is a Monday afternoon. So I'm going to say it's about a 60 to 70 delta that you have one within arm's length. But if I go down to Alcoa, so this guy is getting close. So a nice little rally in Alcoa. So thankfully, I mean, the market's up huge. At least Alcoa is, up huge. At least Starbucks is up. QQQ is up, obviously. Johnson & Johnson is down. IBM's getting smashed. And so unfortunately, some of the stocks that we need to go higher are not going higher. And some of the stocks that we need to go lower are also going higher. And so that's not super amazing. But Alcoa, we're getting really close to being back to out of the money on the put. And, when you have a short put, that's obviously the polar opposite scenario than a short call. And while it's difficult to hold short calls indefinitely into the future for all the reasons that kind of being short the market can be difficult, not impossible necessarily, but difficult over the longer term. When you're on the other side of the fence with a short put or something like that and it goes in the money, you can kind of sit tight if you want to, if you have an overall bullish bias on the market and you're like, hey, I'm just going to hold Alcoa and I'm just going to become a long-term shareholder in Alcoa. Sure, I'll go to the meetings. Like, sure, I'll kind of, wrangle up whatever aluminum I happen to have on me just to kind of, pitch in and see if I can help the cause. Like, these are the types of things that you can do to obviously propel your position higher. So for Alcoa here, we're going to sit tight and we're not going to do anything and just kind of sit tight and see what happens. So that's Alcoa. And then GDX, let's see. Wow, are we halfway done with the show? That's crazy, man. That is crazy. And I see you guys are in that chat, man. You guys are doing some work. You guys are doing some unbelievable work. Nice job in that chat because everybody wants to know, when did Hot Tub Time Machine come out? I see you guys are really on the John Cusack thing, but you just got to let it go, man. You just got to 100% let it go and just let the truth, just let it kind of wash over you, right? Just accept it and just kind of internalize it and just move on, right? Get off of Bing, get off of Yahoo search, right? Y'all be using like some Grok or something crazy for your AI engine. And so let's get on some real stuff, man. Although Grok might be the best. I don't even know. I'm kind of a Claude guy myself. And so they're all pretty craptacular in their own right. But I would say Claude is maybe the least craptacular. I don't know. I also want to know, and the algo definitely wants to know, because now we're kind of talking about the algo. What is your AI engine of choice? Right now, I don't want to hear anything like off the beaten path. Like some people are like making their own, and like they're off of like the internet, and they've got like these like machines that they built. Like I'm not talking about that. I'm talking about for the peasants and the plebes like myself. What is your AI engine of choice? I'm a Claude guy myself. I will do a little chat GPT from time to time, but I want to know what you guys are using because I'm curious what I might be missing. But okay, so that's pretty good today. We got through 3 positions, right? That's not bad. Well, actually 4 positions because we did the Euro too. So we'll pick up with more tomorrow. And I want to get to you guys though, man. Look at you guys. You guys are here. You guys are here, man. Look at you guys. I see you guys at the end. Hold on. So hold on. Hot Tub Time Machine was 2010, or Daniel says 2010. No, 2010? 16 years ago? Man, that's crazy stuff. And so was it really 16 years ago? Wow. James, can you look that up for me? I don't know if I trust that. I'm not sure if I trust James either, but can you chat me? Can you Teams me? Was it really 2010? I mean, you guys are really, really doing yourself a disservice on the Cusack stuff, but can I get an actual time? 2010 would be crazy, man. That would be so wild. And so let's see though. Let me let's see. Let me try to surprise and delight somebody with a trading question, actually. I mean, a lot of our stuff is not even trading related, of course. But let's see, where are we at? I'm trying to find somebody. Oh, well, wait a minute. Well, Too Much Dave says, I need a date for MU's return to sanity. Counting on you, Dr. J, man. Let's do it. What is Micron doing today? I've avoided that somehow. Up 64, man. That's wild stuff. Up another 8%. So this is what makes the individual stocks really hard, right? Because these types of moves are more common. They're not common to begin with, so let's make sure that's clear. But these are more common in the individual names relative to the indexes, right? Like, I mean, obviously, we're all crying in the corner. Not if you're long, of course. If you're long, you're celebrating. And if you're long, you're celebrating. You are at Bonefish right now. Like, this is not a thought. This is not a theory. This is not some future idea. Like, you're there right now. Like, you've got the Bang Bang Shrimp is on the way to your table. So congratulations, sir or madam. Nicely done. But for the rest of us peasants and plebes, right? When you are trading individual stocks, this is a move that can happen to you. But when you're in the indexes, 1% or 2% to the upside feels like, man, this is not good. I do feel like it's sucking the soul out of my body a little bit. And yeah, I mean, that's kind of the way that it goes with the indexes. But for the individual names, these big moves, the 7%ers, 8%ers, 10%ers, et cetera, on a daily basis, they certainly can happen. And they are happening in Micron. So if I go to Micron, ooh, man, a couple of gap and goes, man. Yikes. You got a gap and go right there. You got a gap and go right there. You got a gap and go right there. Yikes. Got a gap and go right there. Right? I mean, look at that, man. That's four gap and goes. 4 gap and goes. I mean, the shorts, man. Y'all are just in desperate need of a gap and crap. Like, you guys need a gap and crap in a really, really big way. And so, I mean, I'm going to be pulling for you guys, man. I'm hoping you get it because I don't have a dog in the race. And I just know that extreme moves like this oftentimes are met with extreme moves on the opposite side. That's a very, very common thing. I mean, I know it was crazy. I know it was absolute crazy town, but that's ultimately what happened to GME in 2021. Now, of course, could you have held on for that long? Of course not most people, but still, it is crazy to look at those types of moves. And when you look at it, you zoom out and you see, all right, it actually did come back down to earth. That is, I'm not sure that that's helpful in any way, shape, or form, because if you're short Micron right now and you're short and you're naked short, then that's a tough trade to hold. It absolutely is. And I don't have the answer necessarily, other than the fact that you have to understand what you've signed up for. Like, the answer always traces back to that in some way, shape, or form. Do you know what you've signed up for? Right. And when you're short individual stocks, or even an index for that matter, but specifically individual stocks, for all the reasons I brought up a second ago, when you're short an individual stock with premium or outright stock, or, well, you wouldn't be short an individual stock with futures, at least not yet. I think this summer that's going to be coming out. And so, whatever, if you're short directionally with stock, then that's one thing. If you're short with premium, that's another thing. But either way, if you're short naked on an individual stock, which, I mean, I do it all the time too, so I'm not saying don't do it, but I'm just saying you have to know what you're getting yourself into. And so you have to be aware that, especially with these tech heavy stocks, I mean, they can go up 30, 40, 50% in a week and just do some absolutely crazy stuff. And so, yeah, if you're short Micron right now with like a call or something, adding short puts might make some sense in this case. I would be very, very, very hesitant to layer in additional tranches. So let's say you're short like one call in Micron. It can be very tempting to say, hey, let me layer on a second call, because if I do get some relief to the downside, I'm not going to need that much, and I'm going to be able to clean up and potentially, get a lot of the losses back. That's all true. But man, you got to be really careful with that. Again, I'm not saying don't do it. I'm just saying be very careful with that and make sure you understand very clearly what you are indeed doing. Make sure your position sizing is in check. You don't want to be, tempting the reaper in that type of situation, because Micron could be 1,200 by the end of the week. I mean, that absolutely could happen, especially if it hasn't even gotten into like squeeze territory yet. And I haven't really been following it that closely to know if it has, in terms of like floats and like shares outstanding, and even really watching the price action that closely. But it's obviously in play right now. And so if I had to bet, and this is not going to help you there too much, Dave, you probably don't want to hear this, but if I had to bet, Micron's at 800. If I had to bet, then I would say that Micron's going to see 600 before it sees 1,000. That would be my bet, just being a short-term contrarian. So RIP too much, Dave, because if you are short, that's probably not good for you, man, because I'm just not very good at this. Yeah, when it comes to directional plays in the short term, I am just not very good at this at all. And so hopefully that helps you a little bit. But let's go back to the beginning, man. We're almost done with the show, man. That's crazy stuff. Wow, that's really crazy stuff. Let me go to the beginning, but I see you guys in this chat. 2010 for a hot tub time machine? Nah, there's no way. I'm not buying that either. You guys are really letting me down today. And so, all right, let's see here. I gotta look up this John Cusack thing, though. I don't believe you guys, not for a second. Let's go to the beginning. All right, so Point B is in the house. What's going on there, Point B? Oh, excuse me. I appreciate you. It says, Dr. Jim ghosted us on Thursday and Friday. It was not my intention. Even my losing trade showed up more than you did, Doc. You got me there, my friend. 100%, you got me there. I got to own it. I got to absorb it and just internalize it and just kind of move on. Look at this little sell-off, though. Even the S&P is only up 13. You got silver. Is silver coming down, too? Probably not, but no, silver's still high. Micron's still high. Nasdaq's still hanging on to some glimmers of hope. But, okay, very interesting stuff. I don't know what came out, but maybe nothing indeed. I mean, it just could be markets moving and things changing, which is a pretty normal thing. Wolf is in the house. What's going on there, Wolf? Doc, welcome back. I'm 49 and married almost 25 years. Man, look at you. That is an inspiration to us all for sure. The lettuce has surpassed the shirt collar, my man. Thank you for the financial and marital advice, man. You are welcome, my friend. You are welcome. And so nicely done, my friend. I finally had to get mine trimmed up just a little bit a couple of weeks ago. And so we're going to make a push back to the collar ourselves, but nicely done, my friend. I mean, you took the heat, right? See, this is it, man. We can all learn from you there, Wolf. You took the heat, but what did you do? You didn't buckle, right? You stuck with the plan. You didn't panic, right? You just followed the process, right? You trusted the probabilities. Like, you knew what you were getting yourself into. You knew what you were signing up for. You went into it eyes wide open. You took the heat. The position got tested and you were starting to feel some pain. You felt your soul kind of getting sucked out of your body a little bit, but you were like, nope, I'm going to follow the process. I'm going to trust the mechanics. And you stuck with it. And now you've got some lettuce flowing down to the shirt collar, even below the shirt collar. That's some nice job. That's a nice job, my friend. And so point B, thoughts on doing ASTS earnings trade today? ASTS earnings today, man, what do they do again? No idea. So let's see. They've got it. Okay, so it's today after the bell. $84 stock with a move like this. Okay, so here's what we're gonna do. This is what we're gonna do. So this one looks pretty easy to me. I don't know what they do. It doesn't matter what they do. So they're up $9 today, right? So if you have been following my earnings trades for any length of time, so thank you, Point B, for bringing this to my attention. If you have been following my earnings trade for any length of time, then you know that I am not very good at this. Like you, and I mean that seriously. Like that's just look at the data. Just look at the data. You look at the follow page. You can see for yourself. It's all out there. Just go in there and reconcile. You're going to see it's very, very, very bad. So here's what we're going to do. It is time. If you can't beat them, you join them. If you can't beat them, which we can't do, you got to join them, which we're going to do, right? We got to keep this very, very simple. We're getting back to our ABCs. We're getting back to the 1, 2, 3s. If you can't beat them, you join them. So here's what we do. We go into ASTS. We go to the front week. And we're just going to buy an at-the-money vertical spread. On the call side, of course. Why would I fade this move? Right? Can't stop, won't stop. This time is different. If you can't beat them, you join them. And so let's go in here. 82.86 call spread. Look at that, $1.72. I mean, they're just giving these things away, man. Just giving them away. It's about to go BOGO. If you wait another 20 minutes, you're probably going to get a little buy one, get one. At least a buy one, get one 50% off. And so 82.86 long call spread in ASTS, $1.75. I like it, Point B. Let's do it. If you can't beat them, you join them. Just don't overthink it, man. We've got improved to $1.74. All right, so it's already gone BOGO. So get out there, get your ASTS spreads on, and I would still probably fade me if I were you. That's a much, much safer play. And so SC Golfer, hello, Dr. Jim. In for the algo, what is going on, and for the subpar humor. And when I say subpar, I mean totally above par. That's funny. Oh, that's funny. Nicely. I see what you did there. By above par, of course, you mean not very good. And so nicely done there, SC Golfer. Nicely done. Indeed, my friend there, Shane. So you may not have meant the troll inside the Complex Alt troll combo, but that's what it came off as, and that is nicely done. And so point B, yes, as long as B minus to B plus, yes, we're kind of in that range, kind of a C plus to B minus. Joe Kramer is here. The good doc is in here for the B minus humor, the banana natties, and of course the algo. Man, I appreciate you so much, my friend. Daniel, hello, Dr. Jim. I'm glad you're feeling better. Thank you, my friend. I got back to you, so check your email. I'm pretty much cleaned up now, I think. Do you believe it's a good practice to lower the strike of a naked put to comply with the 3 to 7% rule? Hope the family is feeling well too. Yeah, they're all fine. They're all recovered. I was the last one to drop. And so, yes, I do. That's the thing about strike selection with every strategy, but specifically with undefined risk. Like as you move the strike around, especially if you're going further out of the money, that's less risk on the overall position, less risk to you, less risk to the brokerage firm. Because if for some reason you can't, quote unquote, pay your bill, then the brokerage firm has to step in, and then the clearing firm comes in, and like all those kinds of things. So if you go further out of the money, there's a lower likelihood that position is going to go in the money, and so it's less risk by definition. So because it's less risk by definition, then you're going to be able to get away with a lower buying power on those positions. And so, yeah, I absolutely would do that, and I've done it many, many times myself. Griffin Jones is in for the algo. Man, look at that. Sam L is here. Doc, imagine my date asked to eat at McDonald's and somehow ended up with a Happy Meal. What are we even doing here? Man, I don't know, but you're doing it right. I'll tell you that. Like if your date wants McDonald's, like you are like, are we having one Big Mac or two? Like that's the only question you've got. It's not where else are we going? It's not what else are we doing? It's, man, let me get that Big Mac special sauce because we all know it's delicious. We don't know what's in there, but we don't want to know. We know that it is delicious. And so nicely done there, Sam L. Sam L goes on to say the algo is running relationship simulations. All paths somehow lead to a Happy Meal. Apparently they did. But again, you made a good call, my friend. So nicely done. Superstar is here. What's up there, Superstar? Dr. Jim, what earnings trades are you making this week? Well, I already gave you the first one. I want to do the opposite and buy another Lambo. See, that's what I'm saying, right? We're not talking about a single Lambo. We're talking about a fleet. We're talking about an arsenal of Lambos, right? You stick with me, Superstar, and everybody else for that matter, and I will take you right to the top. I will take you right to the top. No stairs. Like no uphill climbs. You're hopping on the elevator straight to the penthouse. And so nice job there, superstar. I gave it to you, man. ASTS. I would just load up any downside trade should work pretty well for you. And so Brian Dowdy is here. What's up there, Brian Dowdy? Hello, Dr. Jim. The market only seems to go up. I know, man. Apparently, this time is different according to the internet. I mean, I see a lot, though. I see this time is different. I see this is, the 2000 bubble all over again. It's probably going to be C, like, none of the above. It's just going to like chop around 7,400 for, 7 months or 17 months or whatever. And that would probably be the biggest surprise, I think. Ron Bashar is here. Welcome back, Dr. Jim. Hope that the short MNQ call didn't make you sick. It's not helping, I'll tell you that. I mean, MES is obviously worse, but like I said, MNQ almost does more emotional damage because of the quickness, because of the swiftness of the actual trade. It probably feels a little bit worse. But let's see. Samuel, Doc, since you were absent, Snap missed earnings. Was there ever really a doubt? Never a doubt in my mind. Snapchat down 36 cents. That makes sense. But thankfully, we're only down a couple bucks on the position, so that's not too bad. Joe Kramer, also, I have my bunker ready for the CPI print that will undoubtedly end us all tomorrow morning. That's tomorrow morning? I've been totally off my game, not checking the economic calendars. I don't have any bunker materials. Like, I mean, it's over. Like, I don't have any batteries. I don't have any flashlights. Like, I don't have any Bluetooth hotspots. Like, obviously, that's priority number one. Like, where's my hotspot? Like, let me get a little Bluetooth connectivity. I got nothing. I think I have like some, extra boxes, Amazon boxes in the garage. We could maybe fashion up a little bit of a bunker, but that's all we're going to be able to do. And so good luck to you all out there. Tomorrow morning is CPI. I don't know, man. I don't know what to tell you guys because I haven't even looked at it, but all I know is this. This is not good. That's all I know. This is not good. And so Beckett Kirk in the house. What's going on there? Beckett Kirk. What's up there, Beckett Kirk? I don't recall you having been in the chat before. You might be a new person. Welcome aboard. I hope you stuck around. Probably clicked off by now, but if you happen to be here, then thank you so much for being here. For every gimme, there's a gotcha. Let's go, my man. That is it. Like, I mean, when you think back to everything that everybody has brought you, right? You think back to let's go all the way back. You got the Tony Batista trade hacks. Do you guys remember the Tony Batista trade hacks? Amazing stuff. You got the Tony Batista trade hacks. What else do you got? You got the Mike and Nick, the Broken Heart Butterflies. You got the Liz and Jenny. They have speaking of a fleet, they have an arsenal of strategies. They give you the Jade Lizard. They give you the Spike Lizard. They give you the Zebra. Like, take your pick. Basically, you cover for the whole market, any market condition environment that you might find yourself in. What have I given you? I've given you one thing. And it doesn't even really make a whole lot of sense. But for every gimme, there's a gotcha. Right? For every gimme, there's a gotcha. Maybe it does make a little bit of sense, but is it going to make you a better trader? I don't think so. And so, but thank you there, Beckett Kirk. I appreciate you. E-Media is here. Dr. Jim, glad you're back, man. I appreciate you, my friend. Point B, you should have kept that Pepsi. Did I get rid of it? Oh, do you mean the Pepsi position? What's Pepsi doing? Oh, they got to be ripping. Down $5. What? For Pepsi? That's crazy. What's Dell doing, though? Hold on a second. They got to be just down 13. Wait, but it's at $240. Where was Dell at when we had it? Yeah, okay. So we would have absolutely gotten our faces melted off on this position because I think we got out. Didn't we get out like around here somewhere? Or maybe it was here. I can't remember. I mean, don't get me wrong. We took a tremendous amount of pain in this position, but I feel like it was a lot lower than where it is now. And so it may have even been like the 100s or something. I don't know. That's crazy stuff though, man. That is some really, really crazy stuff. And so Ranch is here. What's going on there, Ranch? Sebastian is here. What is up, my friend? Jared Kramer. Wait, did the stomach bug come from the bonefish? No, it did not. It came from my family. And so, and that came from my family, which came from other families. And it was one of those type of deals. RML, welcome back, Dr. J. What's going on there, RML? BBB Fine is here. Dr. Jim, glad to have you back, man. It feels good to be back. It feels very good to be back. Sam L, the doc is absent. The AI doc is taking over now. Soon the algo won't even know who's giving the trades anymore. That's absolutely true. I mean, you can't stop it, man. I mean, the singularity is coming. Like it is 100% coming. And by coming, I mean, it's about a 2 delta that it gets anywhere near that. But we all need to be ready. We all need to be prepared for the convergence. Like y'all are focused on like MACD convergences. Nah, man, we need to be focused on singularity convergences. Like forget about your RSI divergences and your stochastics. You need to be thinking about, when does Claude merge with Bing? Like that's going to be some powerful stuff. And so, Are we done with the show? That's crazy. We are like done with the show. But I see RZX is here with the obligatory algo pump message. RML is here. Point B is here. Man, look at you guys, man. N1C KG Trades is here. KG Trades says, "Hey Jim, I missed your favorite earnings trade segment. Is there a way to watch it, or what are they?" Go to YouTube. It's on YouTube. Go in the search bar and actually search Dr. Jim Calculated Risk, and it'll give you the whole list. Or actually, no, there's a better way. Go to the Tasty Live YouTube channel. There's a playlist with all my calculated risk. Look at the titles. You should be able to figure out. I think I did it maybe 2 weeks ago or a week and a half ago. And so it is out there, KG. So check it out on the YouTube channel. That's the place to go. But I have to go. I'm out of time. I can't believe it. But I appreciate you guys, man. I appreciate you guys so much. Thank you for being a part of the show and being here with me. I really, really, really appreciate you guys. We could not do it without you guys. So if I could ever help you guys in any way, please shoot me an email. I am jschultz@tastylive.com, or we can connect on Twitter. I'm at jschultzf3. I would love to hear from you guys on there as well. But stay tuned. We do have Tim Knight coming up next with trading the charts. In the meantime, guys, trade them small, trade them heavy, and stay generous. We'll see you guys tomorrow.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
First thing about Tasty Trade is how easy it is. It's a very quick, light platform. It's all on one page.
And with 1 or 2 clicks, you can be anywhere on the platform.
Being able to see graphically where your profit and loss zones are.
Whether it's a pool, a puddle, or a sea, you can navigate your way out of it with the Tasty platform. So I love that.
Investopedia says we're the best for options trading. Stockbrokers.com says we're #1, and Broker Chooser raves about us too. So what else can we say other than boom? Trade like a trader. Tasty Trade.
Hello, everybody. Well, I am back. I was off for a few days, but glad to be back with my normal setup. And what's going on? Well, a couple of things. First, the driver of the bull market continues to be the usual suspects. AI, semiconductors, hyperscalers, MU, AMD, SDNK, on and on and on. It's the usual gang. And the other thing is that, as far as Iran goes, there seems to be kind of a one-way relationship news from Iran has with the market, which is up. If the news is good, even if it's speculative, it's very good for the market. If the news is bad, like we had Sunday, it's bad for a minute, and then people are like, oh wait, Micron, and then it turns all green again. As of now, every single equity future is bright green. Most of the items are lifetime highs, even with yesterday's totally unacceptable tweet that went out and no resolution of what's going on there. Put it this way, if this were February 25th, none of this had happened, And we suddenly leaped into the present condition we're in right now. The market would be vastly lower on the 26th of February than the 25th, with, oil doubling and geopolitical uncertainty and so forth. But the market's gotten very accustomed to the circumstance. Like, we can live with this, we can deal with it, and there's no news that's going to come out that's going to be bad news. Even if it's interpreted that way for a minute or two, the market will shake it right off. And so it's 1999 again. It's 2007 again. And what's really weird for me is that my entirely short portfolio still keeps going up. Not massively, don't get me wrong. People buying Micron, people buying AMD, they're making way more than I am. But I'm still going up a little every day. And weird as it sounds, I would rather go up 1% fighting the tide than go up 5% hoping that nothing happens and that hoping the music doesn't stop playing, because it will stop playing. And the higher this thing goes, the more calamitous it's going to be when it stops. So I'm definitely taxing myself by not taking my shoes off and jump right into the swimming pool of the hyperscalers. But I don't want to swim in that. I'm going to choose my lovingly selected shorts, because the cold fact of the matter is anything that can go down in this market has got serious trouble. Because when the market in general does turn south, the stuff that has survived today from the bearish perspective will really get hammered. So this is a very Darwinian approach. I do my best to select the choices, put them out there. Some don't make it. Take them out. Done. Others do. And it's a winnowing process. So as I glance over at my 27 positions now, 3 of them were up today. Up being bad, because they're all shorts. And all the rest are down. Darwinian. These guys stink, even with the market doing what it's doing. That's what I'm after. So let's go look at some odds and ends. And we're going to have a real focus today on the mayhem that's going on with a super strong hyper bullish winds. And we're going to start with this beast right here, SDNK. To my knowledge, no profits at all. There's no PE ratio because there's no P. Okay, so it's N/A, Excel spreadsheet error if you try to figure that out. So they don't make money, but they do go up a lot. The stock is up about 5,300% in the past year. From a charting perspective, it's a gorgeous chart, just like one cool little consolidation zone after the other, smooth sailing all the way up. When will it end? I don't know. Nobody does. It could go to 10,000 a share. It could go to $5 million a share, as far as I know. There's no telling. But at some point, it's going to stop. And at some point, the selling won't be 1 day or 2 days. It will be persistent. But this is also something I do not go near. I look at it every day because I'm a curious little chap. But I don't go near this stuff. It's just interesting. Just like I looked at CAR a few weeks back. It was kind of interesting to watch it go up 5,000, just blast higher every day until it completely collapsed. Kind of interesting, like a fireworks show. Fun from a distance. NVIDIA is an important reason that tech stocks are strong today, because it has truly broken out of its base. It's been confined to this thing for about 10 months. It tried to get out here, it flopped, but it's had better success the past 4 trading days. It is at a lifetime high, and the energy, the pent-up energy from that incarceration is being released. It's kind of catching up with its peers, because all the other semiconductor stocks have been setting the world on fire, whereas NVIDIA's just been kind of languishing. So we have like AMD, another lifetime high here. We have AXTI, which is up thousands of percent, I think. Just eyeballing it, many thousands of percent. And you could put a classic elementary school ruler on the screen and cover the whole thing up. It's just a beautiful channel. Just all the way up, nearly no downtick in sight. Intel, which I'll be the first to admit I thought was a dead duck. Thought it was about as relevant as Digital Equipment Corporation, or Sun Microsystems, kind of something from a bygone era. But for whatever reason, part of one is the government's largesse in investing in them and supporting them. They've had an explosive move higher, a couple of 100% in just a couple of months. And so they are sky high right now. But I would also look for little cracks here and there. We are up today, but you see the red bar there. It's kind of digesting those gains right now. And whereas NVIDIA is just big old green bar, very, very strong. Start to look for the little signs of weakness here and there. I wouldn't say they're particularly actionable, but the amalgamation of those I think would be worth noting. Here's another good example, Qualcomm, QCOM, another lifetime high, up almost $18, up over 8%, well off of the day's highs. Wouldn't quite call it a shooting star, but looking kind of tired at those levels. But there's no denying it. Semiconductors have been a monster. Here's SOXL, the leverage bullish ETF on semiconductors. It's gone from 40 to about 200. So a fivefold increase. That is a 400%. 400% in the span of 6 weeks about. And so it was within this channel for a while, and its last wisp of weakness was around March 30, and then it has been just almost nothing but green ever since. Interestingly, it burst above the channel. It's one little bit of selling here that lasted more than a minute. It had a couple of days of weakness. It found support at the channel, but outside the channel this time, because what had been resistance has morphed into support. So it's just extraordinarily strong. And it affects even countries, because take something like South Korea, EWI, their country fund, lifetime highs. Today, up about 1.7%. Following this price gap, just off to the races, because they have a lock on a lot of semiconductor and memory chip technology. Small as they are, I believe I read that they have now passed Canada in terms of their collective market cap of their exchange. So I think that makes them the 7th largest market cap for all the companies in the country on the planet. And even stuff that doesn't necessarily do memory chips or semiconductors, but say servers, has been thriving as well, like Dell, for example. Another incredible fake out on this. Not really, I'm gonna take that back. There have been some real fake outs. Like this wasn't really a fake out, because Dell was kind of teasing us here. It was forming this top and kind of just tempting to break down, but it did not break down. It found a lot of consolidation for a few weeks here, and then finally made up its mind which direction it was going. And from this point on, it went zipping higher. So it's up about, just eyeballing this, about 140% in a very short amount of time. And it's all very circular, as some of you have read. I own a one-person company, Slope of Hope. And my wife owns a one-person company. She has a psychology practice. We could set up all kinds of announcements about deals we're doing together. The Slope of Hope is providing $20 million in charting services to her. And then she in turn could do an announcement about providing $30 million in therapy services, which I probably need at this point, in exchange for access to charting, whatever. It's self-dealing, and that would be amazing. If my little one-person outfit was a public company, that would do great things for the valuation, all these exciting announcements about enormous deals relative to the size of the organization. And she would benefit too. It's not that different. What's going on with OpenAI and NVIDIA and CoreWeave and Amazon and Microsoft, Micron, on and on and on. It's just handing huge bags of money back and forth, back and forth, back and forth, back and forth, and creating this washing machine of excitement, of financial thrills as everything goes up in value together. So one person company is really not that different. It's very circular. It's just cloaked in the sort of Baroque financial arcane terminology that makes it seem a lot cooler than it really is. GLW, Corning, same idea. Lifetime high, up over 10% again. Just blasting higher and higher and higher. Hyperscaling. AI is the same story every day. WDC, Western Digital Storage Company. Look at this channel. Whoosh, like so. Right near the tippity top of the channel. So, could be getting kind of tired here. But it's extraordinary. It went from 30 to 500 in about a year. So you get the idea. I think you get the idea. And so, it all boils down to this. Here's SMH again. If and when this looniness ever stops and sells off for more than 2 days, if it sells off for more than 2 days, people are going to panic. Then I think you'll see some real interesting movements. But I'm not banking on it. It's not like I short SMH every day hoping, well, this might be the day. No, not at all. I'm doing other things. Okay, so I was looking at, I got these shorts that are going down. That's just lovely. Well, what are some of them here? Here's a few. These have been particularly profitable. These were so far my bigger winners. So there's APA Corporation, energy related. There's Infosys, INFY. This is down over 4% today. There's our old friend ADMA, ADMA, which is ADMA Biologics, down again today, almost 4%. You can see how nicely that's going. There's DoorDash, which itself is down about 3.25%. LUMN, Lumen Technology. This is a failed bullish breakout. We're down about 1.25% on this one. They are out there. Turn enough rocks over. They are out there. His Pinterest down about 3%, which I think has a pretty poor prospect as a social media outfit. And just kind of rough out real quickly, you can see what a staggering reversal pattern that has been. And as far as options go, my biggest winner so far on that, and I intend to keep holding, is Meta. These options are up about 70%. Meta's down today another $10 plus. I have big dreams how low that could go because these are September options. So those are all going well. Another sector besides all the semi stuff, of course, is anything to do with rockets, anything that smells anything like SpaceX. Intuitive Machines up 13.2% today. That's LUNR. Rocket Lab is up about 14% also. And so with all this going on, even VCX, which as I understand it is kind of a way to play into those IPOs before they come public. It's a participation in those big, your Anthropics and your OpenAIs and so forth. This had just been a dog until a couple of weeks back. Now it's starting to strengthen again. People want any opportunity to try to get into those IPOs. So net of this whole thing is that we got lifetime highs just about every day. But my anchor position, my core position over in options land is my diamond shorts because they are not at record highs. They seem to be, the Dow seems to be lagging badly from all the others, and everything's green now, including the Dow. But these are at a minimum September puts, so I've got lots of time on this. Anyway, it's good to be home again. It's good to be back with you, and I will see you here tomorrow. And I hope you're doing all right in this crazy market of ours. So see you tomorrow. Bye-bye.
First thing about Tasty Trade is how easy it is. It's a very quick, light platform. It's all on one page.
And with 1 or 2 clicks, you can be anywhere on the platform.
Being able to see graphically where your profit and loss zones are.
Whether it's a pool, a puddle, or a sea, you can navigate your way out of it with the Tasty platform. So I love that. You guys have the most unbelievable customer service in the business.
Email support, call support, get through right away.
They actively listen to the customers to make changes to the platform to make it better.
In fact, I've never seen anything like it. in any corporation in the United States.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
So what are some things that we know? We know that time will pass. We know that the hourglass will empty. We know that the calendar will march forward. So what do? We sell premium. We generate positive theta. We take the short side of the options contract. Before you ever think about generating returns, you need to control that risk. The returns will come. You need to make sure your risk is mitigated in the most efficient way possible. Now, the fun stuff. Let's talk about managing those winners, right? You have a long put spread on and the stock goes down. That's going to work out pretty well. You have a long call spread on and the stock goes up. That's also going to work out pretty well. You set your profit target at 50% of max profit. When it gets there, you take it off, you move on, you find another opportunity.
Pay for back testing? No. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial in the DTE, and stack the legs. See what survives. Check out Tasty Trade today.
Ring the alarm, hey, ring the alarm, boys. Turn up the charm. Listen up, y'all. Get out the damn stall. It's the last call. Hey, the last call. The last call. The last call.
Errol, we are back. It's the end of the trading day here. Final 30 minutes of this Monday, May 11th session. You're watching Last Call. Not the usual suspects here today.
No.
I'm your host, Chris Vecchio. Errol Coleman, good to see you, buddy.
Brother Chris, thanks for having me, especially on another all-time high. The younger generation, like I was telling you before, we had some questions for you. So it's good to see you. How are you feeling? And what's been new?
How I'm feeling? Good so far. So at the end of last week, got some silver in my pocket, which is having a really nice day today. Copper as well. Obviously, wish I owned more memory stocks. Can't seem to own enough of them. But that is the defining characteristic of today's market. You mentioned all-time highs here, Errol. We have a NASDAQ that did indeed push to a new all-time high over the course of today's session, although it's not there quite right now, 29,480 as we turn to the charts. The S&P 500, likewise, up 0.2% still, off the highs, but 74.32. The high was 74.54 or so. The Russell is the leader, though. Small caps getting a little bit of a bunk higher. We see here 0.4% to the upside. That's the good news. Otherwise, it's oil for traders today with another 2.8% gain here as President Trump continues to warn that the ceasefire is on life support. We'll see what happens next. But in the meantime, the supply chain concerns continue. It's helping give us a little bit of a squeeze here in copper, a little bit of a squeeze here in silver, perhaps up 7% now, $86.50 here. Other than that, Errol, we're still focusing on the mega tech names. The Mag 7 names have been on fire recently. Mag 7 ETF taking a breather today as folks continue to focus on those semiconductors up another 1.2. I guess that's the story of where to start. When does this thing end, Errol? You have some questions for us old folks as I sit here on approach to my 37th birthday. Tell me, what can I teach you, young man?
No, I mean, for one, we're curious about oil markets relative to the indices, right? I mean, we haven't seen this many all-time highs in a long time. I mean, a lot of us have been trading for maybe 4, 5, 6, 7 years. And we've seen irrational markets, but I don't think we've ever seen this level of an irrational market, however you want to put it. And then to throw in the mix, we have things like oil as well. So we kind of wanted to know your take on oil relative to the indices. Like, how do you manage these? Do you let things cool off? Do you pull the trigger on buying the dip, which is such a difficult trade to pull? Do you flip the cards here? Do you stay true to your bias? It's a lot of things, Chris. But I mean, how do you look at things like oil in the overall market? Do you just wait for things to cool down? How are you approaching it?
Oil has been a really interesting trade recently where if you've been patient and try to take a stab when it makes its way north of 100 and sell some calls, or if it dips below 90 and you sell some puts, you've been rewarded on both ends over the course of the past month. And really since the war started, you've been able to place those trades. And for me, that's really the best way to operate around this. There's no reason to be too bulled up or too beared up, even though oil probably has a floor underneath it for the foreseeable future.
Right.
I hear so many of these market commentators talking about what happened in the 2000s when oil approached $141 a barrel. And oh gosh, we're getting close to that again right now. But inflation is a thing that has happened over time. And wage growth has happened over time, which means to get to $141 a barrel today, at least in the equivalent $2006, oil would need to go north of 220 here. So it's a different pain threshold right now. The economy can digest and sustain itself at 95, 100. It's uncomfortable because no one likes paying more at the pump. I feel like I'm hedging myself away here because I'm downplaying the cost of higher gas prices. I'm really not. But, for the American consumer in 2026, an extra $50 or $100 a month matters a lot less than it did in 2006 because of how incomes have grown and inflation has changed over time.
Right.
So I think it's a much less of a threat right now. And then you look at the earnings growth, Errol, 27%. Earnings growth right now in the quarter for the S&P 500.
Yeah.
That subsumes whatever 2% erosion in margins you get from no Fed cut and higher oil prices.
It's a difficult market to trade. I know you kind of even mentioned some of the names like Micron. I know we got SNDK as well. INTC, AMD. I mean, all those other tickers trading at their highs as well. Again, it's like how long can these things kind of last? Manage our positions the best that we can, but also, what do you kind of see going on in some of these tech names over here, specifically like AMD and Micron?
Chips historically have behaved like commodities. There's usually a super cycle attached to them insofar as when there's a lot of demand in the market, prices shoot up. These companies, they tend to build out their supply, and then you get the come down in equity prices on the other side of it, which is why a lot of these companies historically have operated with very low forward PE ratios. There's always the boom bust aspect of their particular industry. But the demand for compute, at least in the short term, is exceeding any available supply and likely exceeding any available supply for the foreseeable future. So if you're considering memory chips less of a commodity and more of a good that's in low supply, then all of this makes a good deal of sense because the forward P on Micron has gone from like 5 to 7 during the course of the rally, which is to say that it still isn't even an outrageous bull market bubble territory just yet. And I've been saying that for the better part of the past 2 weeks. I wish I had been making more money on this thing beyond my indirect exposure because it's up 30% when I started touting that line. So, I mean, Errol, for me, this is where being a technician is so helpful right now. I missed a good chunk of the early move in the NASDAQ and the S&P, which I've probably complained about far too much here on air, especially now that considering where we are relative to where the lows were, I've caught more than half the move to the upside now. And part of that's because this market has been, it has a particular characteristic to it. The 1 week moving average, we've closed above every session since March 31st between the S&P 500 and the NASDAQ. And as long as we continue to close above it, this is a strong momentum trade right now. So who am I to call the top when this thing is not changing the character of its behavior over the past 5 or 6 weeks?
Right. And I think something that has really stood out, I think the most over this last couple of days, or let's say 30 to 45 days, is the fact that we're making a new all-time high, but we see volatility creeping up. I think in my experience, it's not very often whenever I see an uptick in the indices and then also an uptick in vol. It's usually almost always an inverse correlation there too. So that's something that's been catching my eye. That's something that's interesting as well. Starting to price in some of the risks to the upside, trading at around 18 now, I think on the VIX last time I checked. But that's a little bit unusual. That's not something we see every day.
No, there's been a ton of upside call buying in this market. I was reading some notes over the weekend from various options aficionados out here in the industry. And they were saying, as the market continues to rally and volatility bottoms out, there's a chance that because we've reached the pre-Iran war vol levels, that all this aggressive upside call buying could trigger a bump higher in vol in the short term, which I think to your credit, Errol, volatility tends to expand at tops and bottoms. So maybe it's not today, maybe it's not this week. I'm looking at the calendar here. Do you see anything on the earnings side that could really throw a bone and derail this?
Let me see what we have over here. I'll take a quick look, see if anything stands out.
I mean, today we got Chegg, I guess.
I know we
CEG.
have, I believe NVIDIA is May 20th. I believe that might be after the bell. I know that's
probably, that's 10 days away.
Yeah, it's about 10 days away. Maybe that could be the straw that breaks the camel's back. I mean, I don't know what your thoughts are around the NVIDIA earnings.
They're probably going to be good, given what we've seen. How much of that isn't already priced in at this point?
Right.
It's trading. It's going to close at an all-time high today on the back of one of the best earnings seasons in my lifetime.
Yeah.
So, I mean, I think you got to say it's by and large priced in right now. But Errol, you're more of a scalper than I am in this market, and I have to admit I've been wading into those waters recently, where I've been buying like the 30 Delta 0 DTE call, selling the 10 Delta, just a quick little small call spread that's out of the money, and it's been working in recent sessions.
Yeah.
Do you find yourself, you mentioned how do you trade a market that's continuing to press high and high and high in seemingly an irrational way? As a scalper, does that matter to you, how far we've come in such a short period of time?
I mean, I would say so. I think it's more so a psychological battle that we really run into at all-time highs, especially with the fact that we already understand that at all-time highs, we lean bullish, statistically speaking. But the windows are so short-lived. It's like whenever we do get any opportunity for whatever that you might be looking for, the window closes very quickly. And it's almost like right now, making a decision is what is rewarded. Not even necessarily making the right decision, but making a quick decision is rewarded in this market. Because if you hesitate, the opportunity and the window of opportunity closes. So I'd have to say, even from a scalper's perspective, yes, we lean bullish at all-time highs. Yes, if you're looking to take shorts, you're going to be more likely to get chopped up. But whenever you're waiting for those long window opportunities to try and at least get the risk to reward to be favorable, because we hardly get any pullbacks, again, that window of opportunity is so small. So it can be a little bit of frustration. It can be a little bit of staying on your toes, being patient, waiting for your spots. And I think one thing we always want to avoid as a trader is our frustration, and going on tilt and those kind of things. So just that window of opportunity. The opportunities are very slim. And it can be tough just to be patient, because right now it does seem that bad habits can be rewarded in this market. It's always nice to get lucky, but at the same time, it's like, man, if you do want to chase things right now, you do want to FOMO into positions, even from a scalper's perspective, a lot of that's being rewarded right now. So it's really a double-edged sword, even from the scalper's mind right now.
I'm very much with you. I'm not a scalper. So the fact that I find myself moving into scalping territory to take advantage of the market tells me that maybe I'm chasing a little bit because I'm getting out of my own comfort zone.
But you're aware, though. I think that's what matters, is the fact that you're aware whenever you're trading outside of your process. So I think you're kind of taking advantage of the opportunities that the market's giving you right now, and you're not really mushing that in with your overall core trading process. So I think the awareness is really what matters, and I mean, you clearly have that.
I'm trying to have it, right? And so how it meshes with my short term or rather longer term process, as long as the momentum's there, I'm going to follow the trend.
Yeah.
If we get a break below the 1 week moving average, maybe it means we get a bit of a setback here. But then again, you have your 1 month, which has now cleared the all-time highs that we had at the start of the year. So the structure has clearly changed, has evolved. It's getting more bullish. The most remarkable part about this whole thing is that the market coming into today is up about 8% this year. The PE ratio has compressed what would be about a 4% albatross around the market's neck.
Okay.
The earnings themselves are about 12%. So net 12% on the earnings, minus 4% on the PE ratio. You get an 8% gain year to date so far. So valuations have come in throughout this entirety. And I know I'm a broken record talking about this here on air, but isn't it wild that over the course of the past few weeks, the earnings have been so good that as the market's moved up, 13% from its March 31st low, its overall forward PE ratio has come down.
Right.
I mean, that to me shows that this isn't bubble territory yet, Errol. And are you much of a seasonality person? Because we're in that really nice period of the year for seasonality.
Yeah, I mean, not too much, but I mean, whenever I look at the calendar and I see that, today's May 11th, I mean, I think one of the things that I heard growing up was sell in May and go away. And I don't think anybody has sold in May at all. So with that being said, no, I'm not too much of a seasonality person, but I find, the type of directional momentum that we're getting right now is interesting, considering that, we're sitting in about mid-May right now.
It's mid-May. May tends to be a good period. May, June, July tend to be very good periods, the 3-month stretch of the market here. July itself 11 for 11 in stocks the past 11 years. So I guess if you wanted to go a little bit longer, we could say 11 of the past 12 years, but that would be disingenuous. It's just been that good. So if we have low volume, we just crossed 1 million contracts traded today, and we have positive technical drift, and you have volatility is up a little bit here with oil prices, but if vol's not above 20, I mean, if the VIX bounces between 17 and 19, Errol, do you see a stock market that's going to wring its hands too much here, even at all-time highs?
No, maybe not too much. But once again, I still got to say I'm pretty shocked given where vol is sitting at, considering that I thought that volatility was fairly low over the last 10 months. And to see vol barely creep up now as we see more volatility into the market at the highs, again, it's an awkward position.
You know, looking at the high options volume tab on the platform today, where we can see where the duration, or at least the concentration of trading activity is occurring, you're getting a lot of the broad market index exposure still. You have SPYs, you have Qs, you have SPX there near the top. But you're also seeing some of these other names advance into the top of the rankings, like your Intels and your Microns and your AMDs, which, those are high-flying names, no doubt, and they're certainly popular at the tip of traders' tongues right now.
Right.
But they're not the trillion-dollar companies. They're not the Mag 7 companies that usually define the top of these leaderboards. So it feels like we're seeing this shift in trader behavior a little bit, where instead of just being blind, aggressive dip buyers, it's dip buying and continuing to pile into high beta thematic exposure right now. Leadership in this market is increasingly concentrated in the segments that are most directly tied to AI capex, as it were. But we're seeing that here on a day-to-day basis too, when you have your names like Palantir and your AMD and your Microns and your Intels showing greater attention than your names like your Apple or your Microsoft. Does that ring any bells to you? Have you been in a market where you see traders just say, you know what, there's no reason to trade the Coca-Colas and the Pepsis of the world. All I have to do is find something that has chip in it, and I'll be good to go.
I mean, I would argue that's about 80% of my generation and younger. And I got to say, I keep saying my generation, but I'm the grandpa of like Gen Z. Like, I am at the tail end to where they're starting to call me Unc now. So with that being said, I think I'm a pretty good spokesperson for Gen Z because I can have a top down.
Make me throw up.
No, I don't even find that, those names like Coca-Cola, IBM, those old faithful, stocks, those don't really get thrown around in the community too much. And I'd have to argue that they're not thrown around too much even within things like Wall Street bets. Not that I live in that area, but even for that crowd of traders and investors, I don't think that these names are fairly popular. I think anything that has to do with AI, space, I know Tesla was pretty popular, but I think the indices, the volatility from the indices have surprisingly captured a lot of the young folks' attention, but I don't think the indices was usually the product that people went to for volatility. So I think anything that has an increased amount of volatility over the last 5 years, the younger crowd has probably gravitated towards that, and you can probably find them over there.
So a lot of these shares, and you mentioned the names that the younger crowd's been trading because it's all AI, crypto linked, right? And
it's all they know.
Computers. Yeah. To me, do with computers. I sound like an old man. Errol. You buying share prices. When Micron a few years ago was trading below 100, if you had $1,000, you could buy 10 shares. Now you can barely buy one.
Right.
And so if you're going to be trading in these products, it feels like you have to increasingly take on a more sophisticated view, which is what we do around here through the options perspective. But if you're someone who's younger, who has less capital available to them, and you're more constrained, which is not a knock on anyone, that's just a function of where you are in your life cycle. How do you approach trading these big thematic high beta names right now that have gone from $400 to $800 a share or $500 to $1,000 a share? Do you really double down on your options trading, or do you look to the ETFs like SMH?
I mean, you want me to be honest? You want like my answer?
Yeah, what's Errol Coleman doing? He's going home tonight. He's celebrating that the Knicks swept the Sixers. What's he up to?
The Knicks did sweep the Sixers. A little bit still butthurt that the Nuggets didn't take it very far. I got a lot of comments about that, but we'll be back.
You should be watching the Knicks because Cat looks a lot like Jokic right now.
Does he really? I don't have a bone to pick with the Knicks.
He's the offensive facility. He looks like Jokic. It's crazy.
Hey, look,
that's why they're winning so much.
With the Lakers potentially getting swept soon, I'm going to need a team to ride for the next month until the championship. So maybe the Knicks might be the new home for now. No, but with that being said, remind me again, what was the last question, Chris? I apologize.
Oh yeah, so we're talking about how are we
$1,000, right?
like like how's Errol allocating this? Are you trading single stocks? Are you going options? Like do you just go to the semiconductors?
I mean, I don't know what low capital we're referring to is, but if I have $1,000, if I have $2,000, I'm buying the options. I'm either buying the options, doing something higher risk, but smaller buying power, or I'm putting some of that capital aside and I'm saving up a little bit more money. So if I'm being completely honest, if I have a couple $1,000s and I'm a younger student, or I'm a younger guy right into the workforce, I'm probably going to look to see which options are a little bit more volatile. Which of these options have the pot odds? Which one is worth taking the risk? Because if I come in here and I see something like Micron trading at $800 right now, and we were trading at $400 3 hours ago, I might find that risk to reward to be a little bit attractive. And if I need to get lucky on this downside move to make a little bit more money, and I have such a small amount of money, I'm willing to take that risk. So I think it's going to be about the younger mind, just figuring out what type of risk am I okay with taking. I think the younger generation is completely fine with putting on risk. I think we've seen this younger generation put on more risk than I think most generations have, which is pretty funny because
for sure
Gen Z is known as, the soft generation, this generation, when granted there's many more variables to take into account, but this is a generation that's putting on a lot more risk than prior generations. So I think there's really a give and take when it comes down to that. But if I have a smaller amount of capital to work with, I'm going to look for the options that are a little bit cheaper that could expand a lot in volatility. Something like Micron would be absolutely attractive.
Errol, before we take this into the close, let's take a quick recap of, guess what we have here? Refer a friend. That's interesting.
There we go.
It's true. It's one of our great offers that we have here on Tasty. When you refer a friend, Errol, did you know both the refer and the referee each get a $100 bonus? Coupled with our lower minimum funding requirements, this is a great opportunity for folks to get into the market. Are you watching what's happening in stocks and wondering how can you take advantage of it? Are you trading around the Iran war?
I absolutely
am. Come over to
am.
Tasty Trade.
Yeah.
I am. It's my night. I'm not watching the Mets.
No, absolutely. And to piggyback off of that real quick, Chris, I want to ask you, because I know we have the PDT rule potentially going away, I believe June 4th. With somebody like you, right, you were first getting into the market, was the PDT rule something that kind of held you back a little bit? What was your perspective of the PDT rule, and how did you personally feel about it, let's say 5 to 10 years ago?
So when I first started trading, my scalping activity was largely confined to spot effects.
Okay.
So that's not covered by PDT.
Right.
And I learned over time that I'm not a very good scalper. And I learned more importantly over time that my trades that have lifespans of 30 weeks and under typically don't work out well for me.
Okay.
So one of my efforts on the path to becoming a better trader was cutting out bad habits. And bad habits are things that don't make you money. So by the time I got over into aggressive equity trading and more aggressive equity options trading, I'm not really going in and out of the market on multiple times a day. Some days I don't trade at all. Some days I'm sitting on my hands and watching the market do the lifting. Other days I'm taking one or two things off. But I can't think of a serious occasion where I've had to abandon ship and the PDT rule is going to get me.
Yeah.
So for me, in my trading style, it's not necessarily going to be impactful one way or the other. However, for traders who are obviously a little bit shorter term duration, particularly those that are zero DTE folks, having these real-time margins now as opposed to fixed costs or limitations on trade activity, that does make a significant difference. And we know from OCC data, 30% of all volume in the market right now are zero DTE SPYs.
Yeah.
So this is going to have a huge impact on, millions of accounts nationwide or more than a million, I should say, not millions, more than a million accounts nationwide. And ultimately for folks who are trying to operate on a short-term basis, this gives them a little bit more flexibility in my view.
Yeah, no, I completely agree. I think the last thing I want to say off of that is the fact that you were able to find your trading style, which I think is so important. Which also I think could add to the PDT, because I think, the thing about scalping too is the fact that you get so many more reps in. So you get so much more feedback. You get a lot of feedback very quickly. So a lot of the times you can quickly realize, your strengths, your weaknesses. And it's just that feedback loop is a lot quicker, which can be nice to figure out some of those strengths and weaknesses. But I really love that you pointed out, that was an opportunity where you figured out what kind of style trader you were. And I think that we have to lean on those strengths. So I appreciate you allowing me to pick your brain today, Chris. We're going to have a lot more questions for you, especially from a macro context. So be sure to keep an ear out for that.
I mean, if you're Unk, what does that make me? I mean, I'm
Gramp. I'm not Unk, and I'm not letting the younger generation put that on me. I was 21 yesterday. They're not putting that on me, so.
Yeah, why are the goalposts moving right now for dunking on older people? Gee, is this what ageism feels like?
We're not
a fan. 74.35 here in the S&P 500, Errol. We're still holding on to these gains into the close. Oil prices have been jumpy here. They're moving back up $98.50. It's a 3.2% gain. Today, I found more reason to look to sell some volatility here, even though the headlines are telling you otherwise, Errol. The continuous contract here, CL, we're sitting right near 100. The cycle highs during the Iran war are 119.48 that we had in early March. The lows that we have starting April 17th come in just shy of $79 here. That would be in the CLM6 contract. So keeping that in mind, going out to where this market is traded, I really like the 76.78 and then the 120.122 short iron condor trade right now. Given the time on the board here, if we were to try to put it on right now, actually on the show, I don't need to put on a second leg, but if I were to do so, it's still giving just under a 60% probability of profit with a risking 3 to make 2, slightly better than that risk to reward ratio. Assuming we're on the current glide path that we're on, this thing can stay choppy and range bound. And like, what is the most frustrating trade for people in the market right now? Oil goes nowhere fast. It just chops around and stocks continue to surge because no one has enough equity exposure.
I completely agree there. Well put.
What's your favorite trade on the board right now going into tomorrow? You and I have different time frames, but I'm curious. How are you thinking about this market?
Favorite trade on the board? Actually, I would say no favorite trade on the board right now, honestly. And I really wanted to pick something out, but there is no favorite trade on the board. I think what we're really looking forward to, especially with CPI tomorrow, is just some type of binary event, something that could shake up the market a little bit and just have a little bit of a change of character in the overall market. So I think it's a little bit of a waiting game, but sitting on the sidelines can be a bit painful. And that's how we've kind of been feeling lately. But just being patient, best as possible, Chris.
I think metals are becoming my favorite charts right now. I've done this little, maybe it's an intellectually disingenuous activity to cancel out the price action we had at the end of January here by censoring it on the chart. Don't tell anyone. But Topper got caught up in the whole gold, silver, platinum, palladium meltdown, surge and then meltdown over that 2-day window at the end of January when it really wasn't a participant over the past few months or the months preceding that time.
Yeah.
So let's just pretend that never happened for the sake of this conversation. This copper chart looks like it just broke out in a fairly meaningful way and maybe heading north of 7. So for me, I'm looking for a pullback here.
Okay.
So I can get long the 7.25 call spread at 78 days. I'm going to start with 7.71, but I really like getting long the 7.25 as well.
Yeah.
It's a little bit of a bigger trade, but it pays 4 to 1, almost 5 to 1. That's perhaps what I'm looking at. Otherwise, just stay in on stocks. We hold that weekly average, Errol. You'll get a market that maybe moves up for another day because it's another day with an all-time record high, 74.39 here in ES. The NASDAQ, 29,427. With that, we can close the chapter on last call. I have more on my mind, and I have the perfect person to argue with about it. It's Ilya. He's coming up for overtime. We're next. Stick around. See you in 90 seconds, folks. Thanks, Errol.
First thing about Tasty Trade is how easy it is.
It's a very quick, light platform. It's all on one page.
And with 1 or 2 clicks, you can be anywhere on the platform.
Being able to see graphically where your profit and loss zones are.
Whether it's a pool, a puddle, or a sea, you can navigate your way out of it with the Tasty platform. So I love that. You guys have the most unbelievable customer service in the business.
Email support, call support, get through right away.
They actively listen to the customers to make changes to the platform to make it better.
In fact, I've never seen anything like it in any corporation in the United States.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
So what are some things that we know? We know that time will pass. We know that the hourglass will empty. We know that the calendar will march forward. So what do? We sell premium. We generate positive theta. We take the short side of the options contract. Before you ever think about generating returns, you need to control that risk. The returns will come. You need to make sure your risk is mitigated in the most efficient way possible. Now, the fun stuff. Let's talk about managing those winners, right? You have a long put spread on and the stock goes down. That's going to work out pretty well. You have a long call spread on and the stock goes up. That's also going to work out pretty well. You set your profit target at 50% of max profit. When it gets there, you take it off, you move on, you find another opportunity.
Pay for backtesting? No. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial in the DTE, and stack the legs. See what survives. Check out Tasty Trade today.
Stocks keep going up, or will they? No, they will. It's May 11th, Monday, 2026. We're here on Overtime. I'm your host, Chris Vecchio, New York. He's Ilya Spivak in San Francisco. We're here to take you through the next 25 and a half minutes as we wind down this trading session. Another session defined by a market that was rattled by Iran war headlines over the weekend. The ceasefire is falling apart. Oil prices jumped 3%, and stocks, naturally, they ignore it. Because we have South Korean memory chips continuing to go crazy. We had Kospi up another 5% overnight. Brian, we can go right to the charts here. We do see that the S&P 500, the NASDAQ have more mellow sessions, as it were. The S&P is only up by 0.24. The NASDAQ's up by 0.26% here. But they are all-time closing highs for a market that has been just riding the momentum wave here. Another day where we're bouncing away from our one-week moving average and gliding ever so higher, climbing the wall of worry around Iran and supply chain problems. Oil prices, Ilya, they get their bounce ahead of tomorrow's CPI report, which could be a wake-up call for folks because the inflation data is expected to come in pretty hot. Beyond there, though, maybe these supply chain shortages against the backdrop of electrify everything for AI finally making its way into other commodities. Copper prices are up 3% today, 648 close here. Maybe on approach for another big swing higher. Do we have another 60 or 70 cents in the rearview mirror? Or rather,
it's across the board for them too. It's zinc, it's nickel, name a base metal.
Name a base metal, it's up. Even silver's up 7% today, and maybe that breakout's finally gathering legs, Ilya. We'll talk a little bit less about the Mag 7 here and some more about the Fed on Friday, or rather the NFP report on Friday and inflation tomorrow. But let's just go broad market here right now. When does the memory rally end? Micron is up at 795 now. It's rocking a very unhealthy 8.4 forward PE ratio now, up from the 7 and 6 that I've been setting in recent days. AMD, you're always minting dollars, Ilya, as you call it, up to 0.82%. ARM, NVIDIA, just find something. It's probably having a little bit of a bounce today if it's attached to semis. When does this end?
Well, just look at the volumes today. I mean, we barely get over 1 million shares. We're looking at some of the weakest volumes this is like holiday trade type of volumes. So you look at, and of course, I'm talking about the broader indexes here. So ES, ETFs. This is the least loved melt up ever. Don't hold me to that precisely. But you look at this and you say, okay, the story makes sense. It's not like it doesn't. We've been over this a million times here, right? The story is not wrong in terms of its fundamental underpinnings. It is, in fact, the case that at the end of last year, a bunch of these hyperscalers, why are they called that? For this reason, they came out and said, we got to spend a lot more on AI infrastructure. We don't have enough compute to meet demand. We're going to need to build a ton of data centers. Okay. We come back to the first quarter GDP numbers, and there they are. There is a 10.4% growth rate on non-residential investment. That's those data centers. Okay. Now we just have 2-3 weeks of earnings reports where those same hyperscalers go, you thought that was crazy. Listen, we got almost 750 billion in the queue just between 4 of the larger firms here immediately this year. That's almost double the total for CAPEX for those same top 4 firms last year. So, okay, it makes sense. It makes sense that these are the things that are rallying. And you barely have any gains for the equal weighted NASDAQ. You barely have gains for the MAG 7. And so you get the sense that there is a kind of rotation here. But the lack of volume in the broader indexes really belies the point. This is not some sort of convincing next phase that everybody is buying into. Not yet, anyway. What this is a small amount of money chasing a story that's reasonable, but uninspiring to the vast pool of money that normally participates in these markets, because we've been watching these volumes come down and down and down, going on a month and a half now. So, yes, the story makes sense. The question, I think, is not that. The question is, does anybody think some of this is not priced in already? And how far can you extrapolate the building out of endless data centers with other people's money when interest rates won't go down?
What does it say about the market that it's acting as if interest rates don't matter anymore? You know, we have castles in the sky, this brand new AI future, lots of folks comparing it to the dot-com bubble. Although if you look at some of the names that were the top performers in 1999 going into the bubble, there are a few names that are on the leadership board here today.
That's right.
Which is interesting. But 4.4%.
Circuitous path here, though.
But took a long time to get back to the top. 4.41% on the 10-year yield. That's where we were July last year, June last year, May last year.
Mm-hmm.
This has been a pretty stable rate environment, all things considered, sideways to lower. If the money that's being made is so substantial, why would you concern yourself whether or not the Fed is cutting rates or not cutting rates this year?
Well, I think what you're concerned with more than anything is what we talked about last year. It's not that these companies can't source capital. Of course they can. I think the question is much more so, can markets afford to enter a higher risk environment where the risk of making a mistake is greater with interest rates that aren't going up, or not going down, but going up in a lot of economies? And so that's really it. I mean, when the proposition is, hey, how about you take more risk and we take more guardrails off so that if you get this wrong, you face plant for real, for real. That's, I think, the issue. This is why last year the markets were demanding rate cuts, even though the inflation environment and the labor market really didn't demand it like that. But they wanted it, and they wanted more of it than the Fed was willing to give, ultimately. Why? Because they wanted insurance. If you look at what's happened since last year's kind of settling after the tariff situation in April, all of the subsequent rally after we recovered the initial taco, as it were, was about building Fed rate cut expectations. You could see it clearly. Because the markets ostensibly were saying, right, if things are going to be this volatile, if we're going to have to spend weeks at a time agonizing about what policy is going to be, and things are going to be this violent, and we have to wait to taco or not to taco with very, very high stakes, you're going to have to give us some cheaper money. Because if we drop a plate here or there, we need to be able to reload and go again. Otherwise, goodbye. We're not taking this risk. The risk has only increased. And you can see that numerically. The World Economic Policy Risk Index is something that a group of Fed economists put together, mainly reading the headlines and analyzing price action in their context. And it's dramatically higher. It's not as high as it was early last year, going into the tariff situation, at least at the averages, but the spikes are 10-year highs.
You're describing a wall of worry.
Well, yes. But we've been climbing it now for how long?
We can keep climbing it.
Maybe. Right. But the volumes don't suggest it.
Wouldn't the stock market at all-time highs with the risk index at all-time lows be like, well, this thing is like, you know, if something bad happens, everyone's going to be off sides. No one's expecting.
Well, the risk index is not at all the time lows. The credit risk index is for now not perking up, but the policy risk index is hitting the highest levels in 10 years.
And we know that. You know, that's not baked into the price right now. Like this is what the S&P 500 is worth, given full information about all the risks that are in the economy right now.
I think if that were true, there would be two things occurring, and I'm not so sure that that would be a bullish thing, because there is some evidence that, in fact, people think it's priced correctly, and yet it keeps rallying. If it's priced correctly, then it shouldn't be rallying. If it's priced incorrectly, well, then perhaps people would question the rallying, and lo and behold, these volumes are minuscule across instruments. So maybe it is priced correctly. Maybe it's been priced correctly for 3-4 weeks, maybe 5. Maybe the first week of April, which is the bounce, the ceasefire bounce in the bonds, the pull up in gold, maybe that was where it was priced correctly. But since then, interest rates have come back up because the risk has increased. Gold has come back down. The dollar has steadied. All of those moves that were, okay, ceasefire is better than no ceasefire moves, they all stopped. But stocks kept going. Maybe all that extra going, maybe that's incorrect.
I share with you one of my favored headlines about the AI build-out so far. It's reshaping the war in Russia-Ukraine.
Oh, yes. That's a great headline.
So if you haven't paid attention to the war in some time, you should check out and look up video of what the Eastern Front looks like in Ukraine. Because in order to get away from jamming signals for Wi-Fi and GPS, drone operators have been using these small FPV drones that are attached to spools of fiber optic cable. So you now have like Eastern Ukraine looks like a forest covered in silky spider webs from up top because of all the drones that have been flying back and forth. But in recent weeks, those number of attacks have slowed down, in part because of the demand for fiber optic cables globally right now. According to this drone supplier, this drone purchaser, they've seen that the Chinese-made fiber rose from $2.33 to $5.83 in January 26. Since then, they've got up to, well, even higher prices. So before it was 50-kilometer spool of bare fiber was running $1,750. Now it's $2,500. And it's meaning at the margin that neither Russia or Ukraine can afford to purchase the fiber optic cable necessary to continue to conduct the drone warfare that they've been doing. So the market's provided an interesting solution to ending drone warfare in Eastern Europe, insofar as, but it's reshaping the battlefield.
And President
right now.
Putin said at the Victory Day parade this weekend in Moscow, uncharacteristically tame Victory Day parade, said, "I think this thing's almost over."
Almost over. He's asking Zelensky not to attack the parade.
Ukrainian media made a tremendous amount of hay out of Ukraine allowing Russia to hold their parade. I was like, no, it's okay. We're not gonna hit the parade with drones. You go ahead.
It's very generous of them.
Very generous of them, yes.
So, Ilya, one of the charts that I think looks best here, I've complained before about those candles that we had at the end of January here in copper. Copper was a victim of what was going on in gold and silver. It didn't deserve to have that run up and then break down the next day. That wasn't what was going on in the chart. So I've decided to censor it. I don't want to look at it, because if I don't look at it, then this looks like a very different type of chart. And okay, it's not the most honest way of doing charting. But if we're considering that to be a liquidity event, right? Well, that's basically just like a long wick over the course of 2 days in the price action. It's not really a considerable break. It feels like copper's finally getting its legs back underneath it, which we've been talking about this recently, Westwater and I brought it up with you. You can't liberate copper ore or copper from its ore unless you have sulfuric acid. Sulfuric acid is in short supply right now because of what's going on in the Middle East. So China's limited its outbound exports. And so the supply estimates for what's going on with copper at a time when demand's rising are becoming a little bit more lopsided, as it were. This is an inverse head and shoulders pattern, which I'm going to take the liberty of arguing it is, because I want to take that liberty here, Ilya. We're going to get rid of the January 30th candles. That's a low near 530, a high near 620. That points to a 710 target over the next few months. So personally, for me, my favorite trade right now, given what's happening in copper and silver, we can continue to play the AI names, and I'm going to continue to run up long stocks and trade it out as I can. But the way that copper and silver move today, I think warrants a deeper look, because they are finally perhaps turning a corner of sorts that they really have not been able to turn in many, many weeks now.
It could be. I think this is one of those ideas that kind of speaks to both of our hobby horse arguments here. This is both supply chain disruption, commodities shortage, and AI boom, and inflation, and all of those things. And so it's compelling. I'm thinking about what vehicle I want to use to take advantage of it, but it is compelling. In fact, even on the tech side of things, this sort of idea that if you are going to get the great build out and you don't want to chase this, you might say, okay, well, where are their value ideas in the AI build out situation? This, I think, is one of them. IGV, I think, might be another.
Down today, but potentially holding a
very
breakout
similar,
here.
if you notice, range break here.
Yeah, my favorite, speaking of that, we got a range break here. You know what gold looks like right now? This feels really similar looking. I'm going to go to a 4-hour time frame. So we have a downtrend here. We have a break into new lows. You get this dip into a new low. You have this broadening out of a wedge, as it were, right? Okay, so you get your little wedge down here. You break out, you retest former highs.
Yeah.
Look at the euro and the pound daily charts down here. Downtrend, wedge, breakout, base over the former high, pound, downtrend, breakout over the former high, consolidate, start to break out and move higher.
It's a very interesting setup. This is either the dollar getting ready to rally a whole lot or to sell off a whole lot.
It looks like it's about to get hosed from my view.
I don't necessarily think so. And I think where you see something different and very interesting in this context is the yen. Take a look at what the yen does today. And look at it on a daily chart because you can really see it there. You get this move, and if you look at it in spot, it's frankly even more dramatic. But you get this move today that starts to look like you're coming off a bottom and you're basing for a move higher. One of the biggest problems for the dollar recently has been these attempts by the BOJ to intervene. And the market seems to be trying to say, okay, no, you've hit the level at which you cannot go further.
Yeah,
155 and you're done.
Not with oil this high and yield differentials continuing to move the way that they're moving.
Exactly. And so if you take the BOJ out of the equation here and say, okay, stop messing with the dollar's reaction function to oil and to rates, which have extended, the dollar hasn't followed. It's not falling apart, but it's struggling. But you take Japan out of the equation here, and maybe the script flips for the dollar and for gold by extension.
Yen's in a tough spot. I mean, if we get another move to 160 during the war, volatility is super low in 6J right now. It's a negative IVR, in fact. I'd be remiss to not try to put on a yen intervention trade this time. I mean, obviously hindsight's 2020. When the dollar yen's near 160, it's been a line in the sand.
Yeah.
And if the BOJ and Ministry of Finance let it go past 160, when they try to kick it back down below it, it's going to be more and more difficult over time. So, we get a move to like 62.75 in 6J futures, then you probably look at a, long, you just get a bump in volatility and a movement in price and flip the options for something of a quick gain here. So that's something I'll be looking at, Ilya. I find it really fascinating that the market is treating like 63.5 as the key level. We bottomed out there in early January, since breaking down. There was resistance throughout March and April. And then on the pivot back post-intervention, that's where the market caught itself. And now you have the 1 month and the 50-day rising there. We have our battle lines drawn.
Yeah.
The yen to me is just in a lot more susceptible scenario and difficulty in having any significant recovery so long as we have oil prices this high. But, definitely a wrong call of mine. I'm glad not pushing all the chips in on this one. I would have thought that emerging markets, if there would be a place for stress, no matter how good the AI story is, emerging markets would be facing a little bit more of a difficulty than their U.S. counterparts.
Those Korean and Taiwanese markets are doing incredibly heavy lifting.
Is that just the whole story here until we get a break in? I mean, if semis break, then EEM is going to give way. It's going to crack.
Yeah, I think that's really where this comes down to. And it's constantly circling back to the same thing for me.
I mean, for what it's worth, EEM is like 25% TSM, Samsung, and SK Hynix. So,
right. Okay.
It's a semi ETF.
Yeah, right EMs now are up. What are you trading? MU again, and so SMH again, SOX again.
37% of the EEM ETF are tech stocks. Right. So it's a tech ETF right now, tethered to Asia.
Yes.
So you can't we have this emerging market view where high oil prices and them being energy importers is going to be bad for their stocks, but that may be true for like the Indonesian stock market broadly speaking, but for the emerging markets ETF, when you're 37% tech and 25% three of the semiconductor names that are driving this thing higher, this is not the appropriate vehicle to express that view is the point I'm reaching to.
Yes. if you're going to express a view here, you have to be a little bit more choosy, unless what you want to do is express the same view as the money that's chasing SMH up is expressing. But again, I mean, I think the thing to be cautious about there is this ridiculously low level of participation for how jovial everybody is about the story. Go, oh, of course, it makes perfect sense. We've just said it. And I don't think we're wrong. This makes perfect sense. We need all this money to spend on all these data centers. This is already outpacing consumption in GDP. It's going so fast. Oh my God. And you go, well, yeah. Consumption is still 68% of the economy. It's been slowing for 2 quarters. How much longer and how much faster can a piece that's 14% of the economy continue to continue to contribute and make up for deteriorating consumers? And then you go, well, maybe not that much longer, because nobody seems to believe it in size. Because if markets were extrapolating this narrative at face value, the volumes would be there. But they're not.
I have a very precise number for you how much longer this can go on.
Yes,
176 days. Do you know how I arrived at that
elaborate?
Number? Because if data center build out at 14% of the economy, if business investment at 14% of the economy is carrying the economy so that it doesn't fall into recession, then you need 176 days of that before you get to midterms. So you're not going to have an administration that's going to try to step in the way of an AI infrastructure build up as long as it's painting the tape in GDP. So you think that this thing slows down? Maybe in early 27, we can get the headlines that are like companies slow the pace of their spending to see what,
Oh, I don't think they're going to necessarily slow the pace of their spending. I think you're just going to get to a point where the markets stop having enough people to toss around the hot potato.
Well, maybe that's tomorrow, but it's not today because overtime's out of time.
It's not today.
It's Monday, May 11th. We'll be back tomorrow, same time, same place, 4 Eastern, 3 Central, right after last call. So for Ilya Spivak, I'm Chris Vecchio. Good luck trading. Stick around, though. Ilya's sticking around for Macro Money. Next on Tasty Live.
See you there, everybody.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
When you've got a futures contract that's in contango, what does that mean?
Futures, unlike stocks, have multiple prices appropriated to them. That's known as the forward curve. So when a futures forward curve is in contango, that means that the front month is trading cheaper than the corresponding futures back month. So you'd see that forward curve most likely looking like this in terms of prices.
And backwardation, what does that mean for futures contracts?
Backwardation is the opposite of contango. So where contango front month futures contracts are trading cheaper than the back months, backwardation is the opposite. So those front month futures contracts are trading richer than the corresponding back month contracts.
First thing about Tasty Trade is how easy it is.
It's a very quick, light platform.
Whether it's a pool, a puddle, or a sea, you can navigate your way out of it with the Tasty platform. So I love that.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Pay for backtesting? No. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial in the DTE, and stack the legs. See what survives. Check out Tasty Trade today.
The melt up in stock markets continues even as the situation in the US-Iran war seems to look worse than it did last week. What does all of this mean, and what influence will U.S. economic data have as it finally starts to get a little bit more room to spread its influence with the earnings calendar thinning out? That's what we're going to try to figure out here on Macro Money. I'm Ilya Spivak, head of Global Macro here at Tasty Live. And this week, we are very focused on the macro side of things because it is a very slow calendar for earnings. Of course, I'm going to get into NVIDIA next week, and that'll be a big kind of crescendo for the earnings season, almost certainly. But in the meantime, things are very thin this week. And so rather than look there, the markets may well find a catalyst in the macro side. Of course, we started off with last Friday's jobs report that ended up being a little bit better than expected. But as we'll see momentarily reviewing the price action, it didn't really move anybody off their square looking at the major assets. All of the key benchmarks seem to be still about where they've been. And that raises the question, of course, whether the CPI report, a more kind of pointed reflection perhaps of what the US-Iran war is doing to economic conditions and how the markets are responding to that, whether that data can give us a little bit more here in terms of guidance. So here's where we are on crude oil. And you can see we're basically in the middle of this range that has held since the war began. We've been a little bit higher, we've been a little bit lower, but we're basically pinned right there near the middle of it for all of the headlines, for all of the back and forth about will we hold a ceasefire? Will there be a deal? Will we go back to Islamabad and negotiate? The price is seemingly holding right near the midpoint of this wartime range. And at one point, it was as much as a 68% jump from the start of the war from here. It's been as low as about 23%. But almost any way you slice it, we're looking at much more expensive energy than we did before the conflict started, and no easy way to bring that energy cost down. We can see that here, even with now seemingly an open-ended ceasefire in place. The situation is not unclenching, and not surprisingly then, its influence on interest rates continues to be acute. Take a look here. Of course, this is the start of the war. This is where crude oil starts to run up, and so bonds come in, interest rates come higher. We're basically at those wartime highs here, or at least testing them, where we have the current rate on the 10-year implied by this move down. And of course, we can see while energy has sort of consolidated in a range, having shot higher with the war, what happened here with interest rates is they shot up. We got the ceasefire here, late March going into April, and we corrected maybe about a third of the way. And since then, the absence of progress and the stickiness of oil prices have pushed bonds back down toward their wartime lows and, of course, created the parallel rise in interest rates. Gold is a similar story. Here was its wartime move. Higher interest rates, of course, not good news for an asset that yields nothing. And so gold sold off when the war began, and it's pulled back maybe about halfway of that move and is now once again on the defensive. It's anchoring here a little bit around recent levels, but so we can see there's not a whole lot that's changing here. So just as the bonds are not unclenching their wartime move, neither is gold. It's a similar story for the dollar. It, of course, rallied as the war began, and not surprising, higher interest rates are, of course, also supportive for the dollar because unlike gold, it does yield something. It is a yield-bearing instrument. And so because of that, we have a situation here where the dollar, again, with that ceasefire news, pulls back, but doesn't actually unravel and is now essentially anchoring at about the 50% mark. So it's erased about half of its move. It's pointedly holding this idea that we're setting higher highs and higher lows still since the beginning of the conflict. And so we're waiting, it would seem, for the markets to make up their mind, but very pointedly here, because crude oil, it seems, has not unclenched, neither have any of these markets. Now, Bitcoin is still a bit of a creature unto itself. It's been creeping higher and now is coming up on the underside of its former range. So maybe there's something here that runs into some resistance nearer term. But for now, it seems to have been disconnected from the entire narrative. Obviously, unlike stocks, it had a big sell-off toward the end of last year. It started to crawl its way higher, but to connect this with the optimism in stocks just because they happen to be pointing higher on a similar timeline since the beginning of April seems like a bit of a stretch. But first of all, the low is earlier, all the way back in February. And secondly, we're clearly seeing something that's structured fundamentally differently, just looking at the price action, than what we see in stocks. So this appears to be still a rare pocket of independence in these markets. Now, of course, the most glaring thing that stands apart from all of those lingering reflections of the war, be that yields or the dollar or gold or, of course, crude oil itself, the stock market is still surging, and the volumes behind that surge are still fading. And that's perhaps the most interesting part of where we are and kind of the most interesting misalignment in the markets from a broader narrative. So we had, of course, the same ceasefire low here, late March, early April, and we corrected higher, much as stocks declined with the war. When bonds bounced and gold bounced, they bounced also. But whereas bonds and gold and the dollar stopped, having retraced anywhere from 30 to 50% or so of their wartime move, stocks not only kept going to erase all of it, but are actually setting higher highs and doing so with seemingly diminishing participation. In fact, if we take a look at the equal weighted S&P 500 here, we can see that it is not doing anything like what the headline index is doing. And that seems to be mainly a function of just how concentrated and just how small the trade is here in just really one story. And of course, we don't have to go far to figure that out. We can see here, as we've said before, this is the contribution of different sectors to S&P 500 performance. And the tech sector here in the black, we had to put on its own scale. You can see all of them are on the left scale here, all these various sectors. One of them is on the right scale. And you can tell the difference immediately. The left scale, where everything is, runs from 0 to 0.4% outperformance relative to the benchmark index for these various sectors: utilities, real estate, materials, etc. For tech, the outperformance is on a whole different magnitude, from 0.6 to 0.9%. So this thing oscillates in a whole different realm. And of course, since the beginning of April, we've seen that outperformance has increased. Now, it's not just that it's tech, it's a very narrow subset of tech. We can see, for example, the software ETF here, IGV, is actually down since the beginning of the year because that's where markets fear the most disruption from AI will be. The penetration of AI in that sector, certainly the heaviest amongst the big kind of groupings. Finance is probably next up. Accommodation and recreation, probably the least penetrated by AI at this point. And so software here is down. The equal weighted NASDAQ is up a pittance, about 2.2% for the year. The so-called hyperscalers, the Mag 7, they're up only about 6.3%. The overall NASDAQ up 15%, but chip-making stocks, this Semiconductors ETF, the stand-in for them, up over 50%. So clearly this is one story about one subset of the AI narrative, the building of more infrastructure, the expanding of compute resources. And there is nothing to say that this is not a story with real fundamental backing. Of course, as we've discussed before, we saw in the first quarter GDP data that fixed investment of the non-residential variety contributed 1.39 percentage points to an overall 2% GDP number. And that's staggering because that part of GDP, this pink part, accounts for only about 14% of the total. You can see this non-residential investment is all the way down here, below 20%. Whereas consumption contributed about 1.08 percentage points, so less, but its share of GDP is about 68% of the total. So this build out of data centers to fuel this demand for compute that we now see reflected in the chip stocks, it has moved so quickly that a 14% share of GDP was growing so fast as to contribute more than a 68% piece of GDP. And this comes for two reasons. Number one, that business investment is moving at 10.4% annualized rate. Number two, the consumption piece has actually been slowing. And in the first quarter was only growing at about 1.6% annualized rate, slower than GDP itself. And the optimism that we see now is that much more of the same is on the menu because we are going to have double almost the spending on capital expenditure to build more of this infrastructure this year versus last. Demand is certainly there in earnest. We can see the traffic to these AI tools is growing aggressively. And so the makings of the narrative are there, but one does have to question how much of it makes sense to keep pricing into the market. And indeed, these fading volumes suggest that we're running out of people to price in the story, perhaps. Perhaps everybody that was wanting to have this exposure and hold it is having it. And so we continue to push to these record highs, but on diminishing volume, we start to get into the kind of space where thin liquidity makes markets easier to push around. And so we're extending, but it doesn't seem like there is very strong conviction behind the effort. And this is where, of course, the spotlight goes to U.S. inflation data. We're expecting to rise to 3.7% at the headline number. That would be, of course, a dramatic adjustment. We'd be looking all the way back to 2023 or so for analogs. And so the question will become, well, we just saw that this concern around crude oil is manifesting itself as higher interest rates. What happens when that starts to appear in the baseline economic data with gusto? We saw, of course, already that energy was starting to become an increasing factor in March. We can see 0.8 percentage points of the headline 3.3 rise in inflation was coming from energy, and we can see that we actually had a pickup in core services, a pickup in core goods. Food inflation got a little bit cooler, but this seemed to be the most meaningful swing. And indeed, if we look at the change in annualized contributions, we can see the biggest change came from energy. A little bit more inflation at the core, both services and goods, a little bit less inflation for food, but not really big swings from February into March for how much the contribution was from each side, other than here. Clearly, this was the biggest story. And what's interesting about this is, of course, going into the inflation shock from the war, core inflation was already on the rise. Indeed, we see this for March right here, but we can see this is part of a trend. On the goods side, core inflation has been rising for several months and is hitting some of the highest levels since before this disinflation that we saw in the fourth quarter of last year. It's the same thing for services. They're growing at some of the fastest monthly gains that we'd seen since the middle of last year. It's the same for housing, where we have a 4-month high for the latest numbers. And again, this is core. This is excluding the impact of energy entirely. Now, the impact of energy, as we've seen it already in these numbers that we just saw with the outsized energy contribution, that's this right here. And we can see there's about a month's lag between where these crude oil moves appear in CPI, which we've lagged back a month here, and we can see the major highs and lows start to line up. And so we see here the rise in crude oil from January and February is here, but the big surge in March when the war actually starts, that's not there yet. But perhaps this week is when we see it. And maybe 3.7% at the headline doesn't do justice to what we're about to see. Now, the bond markets are certainly on this time already. They're looking at a situation here where they're saying, okay, well, clearly, whatever this is looking like here for crude oil, as long as it remains elevated, we are going to have an issue. Because what you see here is both the 5-year break even, the 10-year break even. This is the bond market's inflation expectations gauge, implied by taking the difference between nominal and real rates. You can see there that clearly, not only do you have a rise in inflation expectations, but whereas at the beginning of the year, the spread between the 5 and 10-year break even was virtually non-existent, now it's opened up considerably. And so what you see is not only is the market now seeing the crude oil rise give us more inflation, it is also implying that that inflation is going to be spread out and be persistent for a longer period of time. That, of course, is what makes this CPI data so very impactful. If it ends up showing us more inflation than perhaps people have bargained for, well, then the implications for rates will be higher. The implication for the cost of energy will be higher. And the very same things that are ostensibly punishing consumers, which is why they're already fading in their contribution to GDP, all of that then faces the builders of data centers in exactly the same way. And we can see here that for all the conversation around maybe a ceasefire, maybe the end of the war, the president saying a week ago that the military part of it is over. Now it's basically a maritime enforcement action. But the cost of shipping, that continues to be dramatically higher than it was before this conflict, and it doesn't seem to be unclenching. And so the basic sort of premise that the current environment offers investors is there will be more risk. We can see here this economic policy uncertainty index is spiking to the highest levels in at least a decade. And the average here, this is the 30-day moving average, is clearly holding now at an elevated level, much more elevated than anything we'd seen basically for 6 years, and back to levels we saw around the onset of COVID. And that the management of this extra risk is going to have to happen with higher interest rates, because all of the knock-on effect from oil and what it has meant for the cost of things and then the inflationary impetus, as we've just seen, has driven a dramatically hawkish readjustment for virtually every central bank, barring perhaps the Bank of Japan. So a sharp adjustment for the Fed, for the Bank of England, for the ECB. The ECB is now seen raising rates 3 times this year. The Bank of England at least twice. The Reserve Bank of Australia 4 times, of which 3 it's already done. The Fed now at standstill versus expectations of 50 basis points in cuts. The Bank of Canada, the most kind of muted of the bunch, that's gone from nowhere to at least 1 hike favor. And so the question becomes, if you get a CPI number that exacerbates this dynamic, and all of your builders of data centers have to say, well, the energy to build and run these things will be more expensive. The inputs to build them will be scarcer and more expensive. Already some 40% of data center projects slated originally for this year are being delayed by at least a year into 2027 and maybe beyond that for some of them. Against that backdrop, how much more of a low volume melt up is there to be had in this singular chip stocks narrative? And if indeed the volumes are low and the belief is fading, might this CPI report, were it to turn up the dial on all of the pressure that we're describing here, might it finally puncture stock market sentiment? And so exposure-wise here, I'm looking at still holding short gold, long dollar, looking at still the long side of Bitcoin, which continues to creep higher on its own. I still have a bit of exposure lingering in the risk-off side of things, expecting stock markets to eventually rediscover gravity. I have the most amount of time selling calls in IWM. There's still 38 days there. That's the Russell. It's also the one that's been the most sensitive to these inflation and the attendant growth concerns. I am also still holding these shorts via put verticals in the NASDAQ and the S&P. They're way upside down at this point, and they've been locked at max loss for weeks. But that, of course, was exactly the idea of using this kind of narrowly risk-defined exposure and forcing 2-to-1 risk reward or better on all of these trades, or they don't happen. Because this kind of thing can happen when you're fighting a stock market that fundamentally doesn't like going down. And so these look like lottery tickets now. If the market were to crack in a major way, they might yet come around. But if not, well, this was exactly as the strategy was intended to work. It's hit its risk bound and it's sitting. So we'll just wait and play for time here and see if the markets within the 11 and 18 days that these have till expiration decides that the chip stock veering that we've seen has run its course. Still, of course, long the rise in rates here with short exposure on the long end of the curve via these put verticals in TLT. And as of last week, actually, back long oil, that's working because we seem to be having some issues bringing Washington and Tehran together on a deal. Lo and behold, who would have thought it? And that is Macro Money for today. As ever, we are here Monday through Thursday. That's right after overtime, a show I co-host with Chris Vecchio, looking at the Wall Street close and where things may go therefrom. I'm also writing for the News and Insights portion of tastylive.com and commenting at Ilya Spivak on former Twitter and on Blue Sky. If you're watching this on YouTube, like and subscribe. Macro Money returns next time tomorrow on Tasty Live. Happy trading.